but I think the targets of 7,200 to 300 can be expected in next 1 or 2 months. Very bullish, but the stock has to be maintained at around 6,200 levels.
Kunal, you want to quickly share with us your trading ideas this morning? We've, of course, asked you questions of stocks we thought would be movers, but why don't you tell us what you're buying or selling?
Absolutely. So on Friday, I just mentioned about Marathon, REC, BHAL, ICICI, TCS, and Borosil. Now these were the counters which we initiated on Friday, and we shared also. Markets are near to the low. So I'm just continuing with the same counters itself. Borosil was up by around 8 to 10% yesterday. I think it's well poised even at the present level to initiate a new trade. So with the stop of 485, one can initiate a buy on this counter, and now the new target can be 540. The second counter which I have shortlisted is REC. We discussed on Friday also. I think with the stop of 515, this counter is getting ready for the new rally till 555. These are not intraday views. These are positional views starting from today for next at least 2 weeks. And the third is TCS. I think TCS is also looking attractive, but we'll just wait for the markets to open and we'll discuss about it. For now, Borosil and REC are looking attractive.
Well, you have a few of those. TCS has been surprising because you know what and I think Kunal, you'll agree with me, Monday it was the only underperforming IT stock. Yesterday it tried to outperform the pack, but actually failed to do so. It finally went home with a gain, recovered a little bit, but did slump in trade. But I think TCS technically, while has been a stronger IT stock, has done lesser than what its peers like Infosys, LTI, even Wipro for that matter, have done technically in the last few days. But let's go from micro to macro, and it's Morgan Stanley. So it's actually good to have positive news flow in the morning. And Neeraj, I believe Morgan Stanley's put out a report and they seem quite excited about a $10 trillion positive shock for India.
Yeah, positive shock. You don't usually hear.
Yeah, a shot or a shock.
Yeah, so a $10 trillion positive shock is what Morgan Stanley's note is suggesting. By the way, some of it was mentioned by Ridham Desai in his interview with us around Diwali. So keep that in mind. But let's get to the construct of the note and some of the things that they are saying. So Morgan Stanley's note on India says that the rising domestic savings is the big anchor for a bull market. Now, this is something that a lot of us know. They are pinning their note on the back of this. This is the $10 trillion positive shock that Morgan Stanley is talking about. Now, they say that the key source of this ongoing correction, so their note on correction is that the key source of this ongoing correction has been a sharp slowing of government spending, which they reckon is already normalizing and will assuage market fears. They believe that this will, by Jan or Feb, once the government spending comes back, it will assuage some of the market fears around slowdown. But they say that the persistent domestic bid, that's the main thing, is the bedrock of India's financialization, now creating a virtuous cycle in real economy by fueling wealth creation. And frankly, you can argue that every bit of wealth creation that happens in an economy really helps spur animal spirits in investors and thereby in corporates, because people are willing to invest. I mean, ask a mid-cap, small-cap promoter right now about her or his confidence around doing a QIP, and the QIP confidence is sky high because we know that the bids are very, very strong these days. So a bit of a virtuous cycle on that as well. Morgan Stanley goes on to say that more domestic equity flows are seen, and equities are underrepresented on household balance sheets, which is something that will turn out. More importantly, more global flows are seen across bonds and equities, and that is something that people got to keep in mind. Low double-digit returns from the market with low beta relative to the world is the expectation for going ahead. So that's to be borne in mind as well. And they believe there is significant rise in capital market activity and a consumption boom that is going to happen as well. So these are a few things that they are penciling. Of course, they go out to say their strategy to play this $10 trillion shock. So cyclicals are preferred to defensives, large caps are preferred to mid caps and small caps. They are overweight on financials, technology, consumer discretionary and industrial, and underweight everything else. So Samina, constructive, and one key thing that he's saying, which some people are not quite saying out there, assumption is, Ridham and Sheila Rathis, is that the government spending will come back. And that will assuage a lot of concerns currently.
It's so good to hear a positive note, because the last couple of weeks have been all about why India should be on the sell side, from valuation worries to earnings disappointment to slowdown in consumption to a delayed rate cut. But of course, Morgan Stanley, looking at the glass as half full, very constructive on India and the $10 trillion positive shock, like Neeraj highlighted for us. Well, you want to quickly come in on a few stocks, Neerav? Asian Paints, Trent, and I'll throw in Tata Motors as well, because we've seen a little bit of an earnings reaction on these counters. Did you pick up any of these three stocks? If not, why? And if yes, why?
Yeah, actually, Asian Paints was a big disappointment for the markets, and I think most of the paint stocks have been quite subdued. The competitive intensity is going up, raw material costs are higher sales-related expenses, etc. So I think it will be better to stay away from Asian Paints at the moment. Trend could be a good trading opportunity at best at this point of time. We could see some pullback on the back of positive brokerage notes. And I think Tata Motors is a stock to watch out for, because there has been a meaningful correction which has happened over there. And the commentary with respect to JLR, etc., I think looks quite reassuring. So I think we would have a look at Tata Motors at this point of time. And some stocks which you highlighted in the morning, I think Triveni Turbine, I think warrants a lot of attention. I think this stock has done quite well. It's been a very impressive track record of growth, very well focused on exports and after sales services. So this is a story to watch out for, Triveni Turbine.
That has performed well. The numbers were phenomenal. The stock did nothing yesterday, but could be a mover in today's day of trade. While we are at it, you want to quickly, Neerav, come in on Britannia and Jubilant Foodworks as well. Pratap Snacks, if I want to add that too, much smaller, but same industry, right?
So I think FMCG has been a disappointment. I think as rightly pointed out by HUL's commentary, that urban growth has moderated. So that has impacted all the FMCG players. And I think Britannia is no exception. We did see a lot of input pricing pressure over there. So I think at this point of time, Britannia is a disappointment, should be avoided. But I think a good commentary coming in from Jubilant Foodworks. So I think can definitely move up from the current levels. And the third is Pratap Snacks, which I think we don't track. So.
Okay. We need to slip into a very quick break. Back with the pre-open session.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide?
Back with India Market Open right here on NDTV Profit. We'll start off slightly, it's difficult to call how the trade behaves per se during the day, but suffice to say that most people believe that it's a It's a market that moves in a band, sell at highs, buy at lows. It could probably be true for specific stocks as well. And we're very interested in seeing what some of the losers of yesterday do in today's session. But more importantly, can some of the result boys actually do a positive reaction today? That's a key thing. Hindalco stands out. And Kunal, quick thoughts on Hindalco. Kunal, can you hear me?
If I look at, yeah, absolutely.
Yeah.
So if I look at the overall formation of Hindalco, I think it's been sideways consolidating counter. The trend is absolutely positive. Now, a couple of bottoms which were seen in the past. First was in the May, where the counter made a bottom at around 620, and the similar bottom was again made in August, that's 620. This time, the counter has made, in fact, a higher bottom at around 635. Yesterday candle was very positive. It's muted trend, but otherwise it's a positive trend. So with the stop of 620, I think one can keep accumulating this counter. On the higher side, the room till 725, 730 is definitely open on the weekly chart. I'm very bullish. So we do have a position open. The trailing stop loss right now, it's 620 itself, and we are holding on to it with the target of 750 to 760 over a longer period of time.
Come in here. You giving me on a 682 rupees stock a target of 720, which is 40 rupees higher, and a stop of 620, which is 60 rupees lower. How is the risk reward in favor?
No, so my target was actually 740 to 750. For short term, if we expect a bounce, then it's 690 to 700 kind of levels we can expect.
Okay, fair call. Okay, so that's the clarification. But in Hindalco, constructive there and good results. We don't know whether it's a 3.5% uptick or more, but suffice to say, very likely will be an uptick on Hindalco. So keep this in mind. By the way, I'm sure Hindalco forms a part of the profit watch list. So let's give you a sense of what is on our watch list for this morning before we talk more to our guests about specific stocks. So come up in a moment, but certainly Hindalco, and starts off with, in fact, the watch list starts off with Hindalco because it's a very strong domestic performance that the company is given. And you therefore expect this stock to start off on a good note. So keep an eye out for Hindalco. Keep an eye out for LIC. There is a double upgrade on LIC from JP Morgan. Target price is higher. Could do well. BLS International did very well. A very strong Q2, margins up nearly 1200 basis points. So that one could do well. Jubilant Foodworks could have a good start too in the session today because it's a strong revenue growth that the company's posted. So keep an eye out for that one. More importantly, the guidance looks positive. UPL seeks a debt reduction of $400 million. So keep an eye out for that as well.
Well, a quick check of counters that are not going to have it good this morning. Britannia earnings were a miss, but remember the stock was under pressure yesterday, but there's been fresh short covering on Britannia, so watch out for this one in early trade. ONGC, once again a disappointment in earnings, but lower crude prices could potentially add to those losses on ONGC. And Shree Cement, along with Ramco, disappointed the street. Weak quarter for the sector, weak quarter for the company. On that note, we'll quickly go back to our guests and understand from them what one needs to do in terms of some of those counters. Kunal, you want to come in on a few counters that saw long built up in trade yesterday, and walk me through what one can do. PI Industries, Federal Bank, Hindalco you already talked about, and Coforge. Any new long trades could be initiated this morning on the stocks that I mentioned?
PI Industries is something which I'm tracking now on hourly chart. That's on a very short-term trend. The trend is absolutely positive since 4,300. This counter is making clear higher top, higher bottom. Yesterday's bottom was far away. And so what one can do is, here one can take up the momentum trade. Now the breakout of this chart on this counter is around 46.40. That's 40 points away from the present level. Above that, one can initiate a buy. Stop will be 4,600. And then the targets can be previous high, which is 47.20, 47.30. This is very short-term trade, but I think, that looks good and promising from the short-term point of view.
PI Industries, let's open up flat as we see it this morning. Just a quick check of how some of those counters are doing. Hindalco is having a field day. Very strong numbers. Pre-open trade is looking like it's going to have it good this morning. Britannia, if we can pull that one up, let's see what it's doing. The fresh shorts were seen on the stock. Numbers disappointed the street. But like we did think, the counter is finding its feet, even though the numbers were weak.
The thumbs down was right, Samina.
The thumbs down was right. Okay, we're going with that. But the up move is largely because the counter already sold off, preempting a weak set of numbers. Maybe buy the rumor, sell the news, or sell the rumor, buy the news is probably what's happening on Britannia. A few more to that list, ONGC. I'd like to also see what HPCL, BPCL and IOC are doing. It could be an update for these counters on back of the way crude prices are moving. Yes, those counters are higher, not by a runaway rally, but still positive. I don't know, Neeraj, whether we should believe these pre-openings. Ramco Cement is up 4.5%. Numbers are weak. Take a look at Shree also while we're at it. I'm not sure what this is. It's up 2%.
Yeah, on Ramco, I can still find a reason, Samina, that they've done non-core asset sales, right? And therefore, they are embarking on that strategy.
Yeah.
Let's sell non-core. Their capacity utilization levels are lower and they are in the right geography. With Amravati getting built out, Ramco will have... Ramco is in close proximity, not as good as KCP, but in close proximity. So you expect that the cement sales out there will be strong. Shree Cement, I don't know. Most brokerages have given a downgrade, lowered the target price.
I think today the market is in a mood to just reward. Weak earnings, good earnings, bad earnings, it's a thumbs up, I guess. Jubilant Foodworks, let's take a look at how that one's doing too. And this is pre-open, right? So let's not get carried away. Okay, 4% on...
They should do well.
They should do well. This is the right take. This is the right take.
The commentary was rock solid.
So Jubilant's looking good. ONGC, we've called it weak earnings, and they are weak earnings, mind you, but the stock is up 2%. Okay, we'll come back to this. Let's let this settle down for now. I think that's probably the better way to do this. Nirav, let's talk about a few counters that still reported earnings smaller, but I believe still worth a mention would be some of those counters, right? But let's actually, before I go into that, you want to tell me what you would do with lower crude prices. It seems that the trajectory of crude is going to be lower, and while that has a significant impact on our macros, what does one do with oil and gas stocks? There were a couple of brokerages like Citi that upgraded the OMCs because of the recent price correction. And with crude moving lower, do you feel like HPCL, BPCL, IOC will create significant wealth for investors and become good investment opportunities at the current market price?
Yeah, actually the comfort level for Brent crude prices is close to $75 a barrel. Now that has gone below $75 a barrel and is likely to go still further down below the $70 a barrel. And this is on account of the excess capacities which are being built, the excess inventory which is there in the system. So I think oil and gas prices both are likely to remain under pressure. And that, of course, is a negative as far as the upstream oil companies are concerned. And that's what we have seen in the performance of Reliance Industries, Oil India, ONGC. All these stocks have been under pressure. And I think it works out well for the oil marketing companies. So I think from that point of view, I think IOC and HPCL look quite interesting.
And IOC look quite interesting. And these counters, which should Neeraj be reacting positively to lower crude, are actually rather muted. Okay, Shree Cement has settled down, 4% lower. Now we can breathe.
Yeah, well, there's just some logic or method to the madness. But I wonder if LIC, Samina, could be doing okay, because the big brokerage call for today, Agam Vakil gets us JP Morgan's view on LIC. Agam, is it a double upgrade?
It is in fact a double upgrade, and they've rated the stock now to an overweight from underweight. They've also set the price target to well over 1,000 rupees per share, in fact 1,075 to be precise, and this target price has also been increased from 790. The reason why they're positive on LIC is, well, naturally the numbers. They're very happy with the kind of value of new business that we've seen in terms of growth, a 47% growth in fact on a year-on-year basis. We're also looking at strong traction when it comes to the APE coming in. Moreover, we are also looking at a beat when it comes to these two very important metrics, which potentially could lead to improved profitability. Because of this, the outlook has also improved vastly for LIC. We must remember that LIC has been one of those counters from the insurance space which has also been on a consolidation for a very, very long time. And it does seem like JP Morgan at this point in time is taking the trigger of very positive earnings to perhaps see and expect an up move from here on. Again, it's going to be a wait and watch, but JP Morgan clearly very positive on this one.
LIC and JP Morgan positive on LIC, but Neeraj and me were discussing this. Neeraj, pick one stock that's going to be the horse today.
it's easy to just jubilant Foodworks now because the stock is starting off 4% higher, but just the commentary was so strong that you probably anticipate
You're going
this
towards
to
a
do
bias
well.
of a fundamental view, I can tell. Kunal, pick one counter. Do you feel at a 4% gap up, Jubilee
And then you
still
have to do the
becomes-
same.
Yes, done. But I'll be picking the technical side. Becomes a great long trade for the day.
Yeah, again, I mean, the counter is opening gap, but at the same time, if you just look at the historical data of October itself, the counter was struggling to surpass this 635 mark. And with this gap up, the risk reward ratio is extremely unfavorable because the stop is directly placed at around 600 levels. So we'll have to wait and see how the behavior of the counter is for first 15 to 20 minutes. Then probably with the day's low as a stop, one can initiate a buy. I will not be keen to initiate trade on this gap up at least.
Would you use that as a cue, Kunal, and pick up JSW Steel? And the reason I ask is because technically this is one of the better placed metal names as compared to what we've seen in the whole pack. And it's marginally higher this morning. I feel like a 987 JSW Steel becomes a good long trade, no?
So again, it's a very trending counter, and yes, what you said is absolutely correct. The recently made bottom of 970 is higher compared to the previously made bottom of 950, and it's consistently making 15-20 points higher bottoms, over the last 1 month. So I think with this 765 to 965 to 970 as a stop, one can initiate a buy, but one needs to be very patient enough because trend is positive. It's going very slow. Someone like trend follower like us can definitely stay on to this counter. The target can be 1045 to 1050 and even higher.
Okay. Now, what else? Azad Engineering, Samina was pointing that out. Just want to see if that stock is starting off well in the session because the numbers, the valuations notwithstanding, the numbers were good. So, 0.5% lower. HMA Agro, EPL, Triveni Turbine, some smaller names which came out some very good numbers. 10% for HMA Agro. Again, don't track it at all, so no idea. EPL 4.5% higher, so no idea how HM Agro clocked in that kind of PAT number. But Triveni Turbine, not surprising at all. 300 basis points in that business is very strong, and which is why Triveni Turbine is seeing this positive reaction. You track this one, Nirav, fundamentally, Triveni Turbine?
Yeah, it's a mid-cap company, but it's been performing quite well. Their thrust is on exports. I think around 60% of their revenues have been coming from exports, and they are very strong. They've built up their after-sales service business also. That is the supply of stores, spare parts, etc. And that is a kind of an asset-light model, which gives them very thick margins. So if you were to see the margin trajectory of this company, it is quite impressive. And the order inflows have also been quite strong in the domestic markets. Also, I think they've been receiving very good orders from the sugar sector, cement sector, and steel-related businesses. So I think while this stock is expensive on valuation parameters, it will continue to remain expensive, especially in the light of the fact that the order inflows have been quite strong and their business model overall has been quite good.
Triveni Turbine, stock of the day, 7.5% in pre-open trade is what we have. A couple of smaller ones are reported numbers. I think Bank of India also should see a good sort of move in today's day of trade. Numbers were good. If I can get the stock up, it's actually trading flat as we see it. Office Space Solutions, good numbers, revenues were up, profits was up, margins expanded. Fortunately, the stock is indicated to a 4.5% up move. UPL, we talked about the report that came in and the counter is trading with a 3% gain in early trade this morning. So there's lots happening, but let's talk about banks. I don't know, Kunal, whether you shared your view on Bank Nifty and specific banking names, but yesterday financials did well. We're still below 52,000 on Bank Nifty. How would you trade Bank Nifty on opening this morning?
Yeah, again, Samina, Bank Nifty is in broader range. The higher side, the resistance is placed at around 52,450. I think Bank Nifty attempted 3 times to cross that level in last 1 month, but it was a failure. And on the lower side, we have support at 51,500. Though it's gap up opening, I'll be cautious near 52,500, which is almost 450 points away from the present zone. Buy on dip is a good strategy. I'm very bullish on ICICI Bank and a couple of PSU banks. I think there the risk reward ratio is favorable and one can definitely go long.
Also is looking good this morning. Remember, they was emerged as the lowest bidder from South Central Railway for an EPC contract worth 300 crores. So 2% up move in RVNL is what we have. But it's looking like it's going to be okay this morning. We are opening with a small gap up. which potentially could get sold into, or there could be an attempt to moving to levels of 24,500. I'm of course betting on the latter, especially after there was a failed recovery in trade yesterday. Not too many earning reactions on the negative side on the large cap, and that should be helpful. In fact, low level buying could emerge in counters like Trent and Asian Paints after yesterday's fall. Britannia as well, after seeing an 8% cut yesterday, seeing fresh shorts in the system, is trading muted. So it's not seeing a very, very big cut, despite the fact that the numbers haven't met street expectations. On the upside, you have counters like JSW Steel, L&T, SPI. This day could belong to SPI in some ways. Neeraj, but I think flat is what we are starting off to, but maybe another attempt at 24,500 cannot be ruled out.
Or that resistance at the band that you spoke about, Samina, it's turning out to be a stiff one. I mean, that range of 23,800 to maybe 24,300. Let's wait and watch. But here's the first rates this Tuesday morning on Indian markets, and we're starting off with a bit of a positive bias, which is good to see. Is IT contributing? Because banks are underplaying. Oh no, banks are almost even Stevens, but yes, IT is doing well. And I wonder if IT and banks together again are masking the weakness in maybe oil and gas. We'll get to that in a moment. Mid caps and small caps, 0.67%, 0.72% are strong showing. Breadth could be positive. This is a good start, really. Let's pull up the heat map and show you what's moving and what's not. So, Britannia continues to sulk, by the way. That volume growth number coming in range hasn't helped because it's a miss on all other counts. Asian Paints continues to sulk. That's the other big thing. Cipla, Axis, ITC. I mean, that's about. So I think FMCG is the culprit today, not oil and gas. Let's see what's doing well. ONGC, in fact, is up 2%. Hindalco, on expected lines, is up 2%. Trent carries on from where it left off yesterday, so up about 1.5%. There's strength in BPCL, so arguably because of lower oil prices, and then some bit of IT, some bit of insurance, all of that playing. You know, metals, interestingly, Samina, are seeing a bit of a bounce because Hindalco one can understand on results, but Tata Steel too, after all of them, got a bit of a clobber yesterday after the China stimulus failed to attract too much of attention. So the news from the center on the large cap, Samina, is that FMCG is sulking, or consumption seems to be sulking a bit, with Britannia, Asian Paints, HUL, M&M, etc. under pressure. And on the flip side, a bit of oil and gas, a bit of metals playing out.
And a bit of oil and gas companies. OMCs are looking good. HPCL, BPCL, IOC all off to a good start on back of lower crude prices. Trent as well continues to gain after a 3% recovery after the 25% fall that the stock saw from its record highs. The recovery is obviously underway. Lots of counters in the broader market universe that are looking all right, actually. A quick check on the mid and the small cap index and the Nifty 500 that's trading slightly better than the benchmark this morning, 0.5 higher, while the mid and the small cap index, after underperforming yesterday, are obviously outperforming in today's day of trade. Stock of the morning is Triveni Turbine, followed by UPL. Triveni is up 6.5%. UPL is up 5.5%. GE Nova is also seeing a sharp up move in trade, and I think my system has decided to hang on me, but yeah, I'll be back with it. In terms, GE Vernova is also seeing a sharp up move in trade as we see it 5% higher, turning out to be the top third gainer in trade. ITI, JSW Energy, Jubilant Foodworks up 4%. Max Healthcare, TVS Supply Chain Solutions reported numbers, the stock seeing a sharp up move as we see it. So lots of counters that are seeing up trades. Office Space Solutions, Britannia, if you can just quickly start rolling with these counters. These are earnings reaction that we should see. Office is down 1%. Bank of India reported numbers. Take a look at how that one is doing. Azad Engineering reported numbers. Counters like these would be reacting to their earnings. Azad Engineering is up about 1%. Well, you've also got stocks that will be on the sell side. So if we can get Britannia up, I know Neeraj probably alluded to this earlier in the show, but a quick check on how it's doing, still under pressure. 2% off on the counter is what we have. Ramco and Shree Cement both reported numbers. Shree was a huge disappointment. Ramco, on the other hand, despite weak numbers, because they've sold non-core assets, the counter gets a thumbs up. I think the street has been kind this morning. Shree Cement numbers were a huge disappointment, but the stock is only seeing a cut of about 1% odd in trade. Insecticides India, National Fertilizers, HMA Agro. If I can get HMA Agro, insecticide is up 3.5%. HMA Agro has hit up a circle with a 10% up move. So very solid numbers. There was a 9-fold increase in profits, and the market likes that. AG Infra Engineering as well, if you can pull that up. Pratap Snacks, BLS Blue Dart are some of the other counters that reported numbers. Neeraj, all in all, I'm feeling good about the street today. We aren't hammering down stocks that have disappointed the street, and we are seeing low-level buying even on brokerage reports. So UPL, case in point, good reaction this morning.
Yeah, Nuama note clearly bringing that stock to life, and how 5% higher. Kunal, would you sell into this strength, UPL?
See, Neeraj bhai, again, as I said, if there is a counter which is gap opening, we'll have to be cautious, right? So the trend is positive, but it's far away from the support. I will not be really keen to take up the trade for first 15 minutes. But yeah, if the counter comes below 530 mark, I think one can take the chance of shorting the counter. Stop will be 540, and then on the lower side, we can expect the yesterday's low as the first target, which is the 510 kind of levels.
Trend, Kunal, 1.5% added at 6,600. I mean, it's made that move from 6,300 to 6,700, 6,600 already on it. Yeah. You want to tell me what to do with trend?
So, Samina, yesterday's high is still yet to be taken out. That's 66.20. And if you look at the entire trend of last 25-30 days, the counter was down, right? So we need just one higher top, higher bottom. So I'll be waiting for the high of 66.20 to be taken out. If that's taken out, with the stop of 6,500, as we discussed, one can initiate a trade and it can be a positional trade again.
Just look at what Goldman had to say for Trent, and I think this was the reason why the stock turned in the session yesterday and is now seeing some further buying as well. They are going out on a limb and saying that they expect Zudio's, market share to improve substantially. You know, from a trend perspective, so to rise over 5% over FY24 to 35. So that is one of the comments that they are making. They're saying Zudio's growth was driven by weak, or is driven by weak unorganized players, and there's a lot of room out there for Zudio to actually gain ground. And now that you think of it, seems to be a bit of a no-brainer. And other organized players are yet to establish the strong store economies. Reliance is trying there, Shoppers Stop is trying, some others are trying. Let's wait and watch how it shapes up. So their target prices are higher, and they believe competition from online players are unlike. This is yesterday's note, by the way. Their target is 8,000, but probably one reason why Trent is doing what it is doing. Samina, what's not done well?
Actually, 1 second. Let me just quickly get Kunal on it. 6635 on Trent. Kunal, I know I'm putting this gun on your shoulder, but this is a counter that has been seeing a lot of trader interest in the last few days.
Absolutely, yes. So, as I told you, I was just waiting for the high to be taken out. That's already taken out. So with the stop of 6,550, 6,600, in fact, one can initiate a buy. And the immediate target on a very short term can also be the just 2 candles high, which is 7,000 levels.
Okay. 3 or 4 stocks to watch from yesterday's movers. PIX Transmission, which was up 20% yesterday, is up 8% today. I would love to know if Nirav Asher tracks that one. What is not doing well is Antony Waste. A lot of people bullish on that stock, 20% lower yesterday. Antony Waste is down 7% yet again today. So before we talk about Jubilant Food, either of these two names, Nirav Asher, Antony Waste or PIX Transmission?
No, we don't track
either of them. Okay, no problem. Nirav, you mentioned that you believe Triveni Turbine was strong numbers. It's now 675. For somebody tuning in right now, looking at the numbers, wanting to buy, is this 8% gap up still giving you a chance to buy, or would you avoid?
I think it's better to wait for some time, let the stock cool off, and then of course one can initiate a position from a medium to long-term perspective.
Mm-hmm. Okay, not right now, maybe a bit later on is what Nirav Asher is saying. You know, the stock that's done so well for itself is Jubilant FoodWorks, and we'll try and talk to our analyst in a moment from now. But I'd like to bring up some of the key takeaways, con call takeaways that Jubilant FoodWorks had to say in their call. I mean, they were very constructive. They said that they have witnessed strong volumes and the growth momentum is expected to accelerate in Q3. And this is quite stunning, because if they have a very strong Q3, and then even if they have a mild Q4, then we hit the IPL season in Q1, which has traditionally been a very strong quarter for Jubilant FoodWorks any which ways. So you're looking at a very strong Q3 and presumably a decent Q1 of the next year. Sandwich between that is Q4. Maybe it does well, maybe it doesn't, but these are good commentary. They admit that margin recovery will be slower on the growth recovery due to reinvestments, not any other pressure, but because they are reinvesting in growth. I think that is what the street seems to be liking. So, Kunal, 7% higher, 646. Maybe we spoke about this earlier, but if you had taken a long yesterday on Jubilant, would you take money off the table?
No, certainly not, Neeraj bhai. I think this rally is crossing the previous all resistance levels, which are 630, 334 levels. So now advisable thing is to trail the stop loss to 630 and hold the position. I think we can see the levels of 665, 670 very soon.
Right, Jubilant is up and about, and that Neeraj is, I think our stock of the morning would be Jubilant. I'm going to say ours here now, suddenly. But yes, that looks good. So does Trent. Tech is on the sell side, which is not coming in as a surprise. So I think TCS, Infosys are trying to find their feet. Kunal, you want to give an update on TCS? Well, the IT index is looking good. TCS is perched at that 4,200 mark where it's finding resistance. You feel there's an opportunity here to go in at the current level?
Absolutely. So, I was just watching at the call strike price, that's 4,200 itself, which is trading at around 58.59. It's a very good trade. The breakout is already occurred today. In fact, when it came down during the opening, it has just retested the breakout zone. So with the stop of 41.40, one can definitely initiate a buy. The immediate targets are 4,300 followed by 43.50 kind of levels.
Buy TCS, that's the word coming in, and it's turned, yeah, you go 4,800 is where it. Let's take a look at some of the other IT names. LTI, Mindtree, Infosys, while we're at it, Emphasis, Persistent, all these counters are trading marginally higher. So again, similar to what happened yesterday, they started off with a slight positive bias and built onto the gains. And in midday trade, they were trading well. LTTS, of course, has some news flow, which we'll be taking you through. The management will be talking to us shortly, on back of which the counter is seeing a 3% up move this morning. Wipro's also been on a roll and continues to do so. A quick check on Triveni Turbine and HMA Agro. Both those counters had done quite well in market open. Triveni is up 9.5%, and you've also got HMA Agro that's at 10% upper circuit in trade. Anything else, Nirav, that stands out for you in terms of earnings? Any counters that one should accumulate that we've not highlighted with you?
Yeah, actually, in the category of Triveni Turbine, I think we would like to add some more names. One is Vatek Wabag. It's looking quite good. Very strong order book position, very strong business model, and the execution has also improved. That is one. We are also looking at Action Construction Equipment, which is making a comeback. And the third in this category would be HBL Power Systems, which has reported a very strong set of numbers. So these are some of the stocks which we like. We've been holding on to these stocks since quite some time, but we continue to like the results and the commentary.
HBL was okay, right? I mean, it was, I think, 20-25% uptick on EBITDA and PAT. Wasn't really out of the world. Why did you say it was a very strong number?
Yeah, I think the outlook with respect to the defense segment, with respect to railways, etc., is quite strong. So I think we like the story going forward with respect to HBL.
I mean, are there targets that the house has given on HBL?
We are looking at least 30-35% from here.
In the next 1 year. Okay. Fair point. Nirav, good to know. Kunal, I just want to come back to you. We didn't finish the chat, or maybe we did, but I've forgotten. But yesterday you had given a call on Marathon Next Gen. That stock is kind of languishing, not quite being able to live up to upticks. I mean, why? Are you recommending the trade still?
The trend is very intact, and if you look at the last 4 to 5 months support, that's at 550. Counter actually bounced from 550 levels itself somewhere by the end of October. The trend is positive even on the hourly chart. So if someone wants to initiate a fresh entry with the stop loss of 600 levels, one can definitely buy. Momentum traders can wait for the breakout of 630, but otherwise, if someone wants to follow the trend, then with the stop loss of 600, one can initiate a buy on this.
That's Marathon Next Gen. That's the trade that, of course, Kunal had recommended yesterday. Along with that, a couple of other stocks. Britannia, of course, is trading lower. BEL is down. ITC is still not being able to recover. Just a quick mention of some of the stocks that we picked up on the markets in themselves. They're not doing too badly this morning, holding on. And I think it's broad-based, which is what we should be taking a sigh of relief, at least for now.
Yeah, at least for now. Triveni Turbine, though, up 9% as we speak. Speak of result reactions. and there is one reaction you got to watch out for. But take a moment to thank both Kunal and Nirav for joining in today and giving us their thoughts. Really appreciate your time. A quick conversation with Anil Yadav, Director of IRB Infra, who's joining in right now. Toll collections for the month of October were very strong. Mr. Yadav, good having you. Thanks for joining in. What's led to this 21% uptick in toll collections? Is it the festive month, and will that even off, or do you reckon that can continue?
I think this year we have seen extended rain in the October as well. Probably the growth will be in the coming months should be better. We have added assets also that has given an overall increase of 21%. And the number for November and coming months onward, the number should be better than what we have delivered in the October.
The expenditure numbers analyzed carefully suggest that the government capex on road as well has been slow thus far. Do you anticipate a pickup, or is it difficult to say that right now, Mr. Yadav? On road construction specifically.
Yeah. With respect to government capex, large award comes from the NHAI. And if you look at the various past years, several past years, the most of the contract were awarded towards the fag end of the financial year. And we believe that considering the large pipeline, there are TOT and BOT project which is lined up in the month of November and December as well. And there will be much more project which will be coming towards the fag end of the financial year. And typically, in terms of award towards the end of the financial year, there are many projects are budgeted up. We believe that there will be an award towards the end of this financial year.
Awarding towards the end of the financial year. Okay, so bunched up. Would you reckon that momentum activity could continue into Q4 as well? Effectively, what I'm trying to get to, Mr. Yadav, is this: that there are views divided upon whether some people hope that capex will pick up and some people believe that it will not. From what you are telling me, that if it gets bunched up in the last month, and if it spills over, then that's a clear sign of awarding as well as government capex. You believe that will happen?
Yeah, we believe that that will happen. For road sector specifically, the government is putting more emphasis on PPP model. That's why we are seeing that there are more thrust on the BOT and TOT project. And the BOT and TOT project are in fact lined up in the month of November and December as well. And towards the fag end of the year, the number of awards should increase. And we believe that there will be a sufficient award by end of this financial year.
Right. Thank you very much, Mr. Yadav. Great talking to you and sharing perspective on those toll numbers for IRB Infra. Let's take a look at how the stock is doing in early minutes of trade. Usually reacts to news flow, especially when it comes to toll numbers. But we're at the fag end of the earnings season, and it's been a mixed bag from what we understand. Venkatesh Balasubramaniam of JM Financial joins in. Venkatesh, good morning. Thank you for joining us. Largely expected, it's been a mixed quarter. While you have had a handful of companies that have outperformed street expectations, the broader theme really has been some disappointment. While you review this for me at a more macro level, tell me on what parameter has the disappointment come and on what parameter you've been impressed. So are you impressed with companies that have reported improved operational profit efficiency? Margins, I understand, for consumption names is under pressure because of commodity inflation. Volumes also declining for, say, consumption, but of course doing okay for companies like a Hindalco. So wrap it up for us before we break it down sector-wise and company-wise.
Okay. See, we have analyzed close to almost 160 companies in our coverage universe. We have like almost as a house, JM covers around 275 companies. We've looked at numbers of almost 160 companies. And what we have observed is almost 44% of the companies have missed expectations. Now, this miss has been much higher than what it has been in the past so many quarters. So clearly, the results are disappointing. What we are less worried about things like margins at this point in time. We are more worried about, is there a problem with the top line growth? And what we have discovered is almost 27% of the companies have missed their top line growth expectations. More specifically, if we dig down or drill down a little deeper, what we observe is the fact that if you see sectors like FMCG, retail, mall operators, and even autos, there is an urban slowdown. Now, this kind of worries us in the second quarter, but we also believe that there is a silver lining in these slightly dark clouds. Because while we believe urban demand is slowing down, we also observe that there is a pickup in rural demand, because our own data suggests that since August onwards, rural wages have started going up. So rural demand could go up. Similarly, even if in this auto related slowdown, if you particularly look at two-wheelers, you will see that two-wheelers have started doing well from the month of September. Interestingly, in the month of October, even four-wheelers at the mass end of the market has started doing well. So we believe this slowdown could be more cyclical in nature, and you could potentially see a rebound in the economy and a rebound in numbers of companies towards the end of December and maybe early January.
Venkatesh, good morning. Neeraj here. So if you view this, I'm presuming that you're viewing this as a glass half full this quarter too. Does it fill up a little bit in quarter three based on the management commentary that you've heard thus far? Do you believe the challenges persist in quarter three, or would the festive season plus the year end, etc., maybe travel, etc., take care of some of those issues? Any thoughts on that before we get to specific sectors?
Yeah, I would tend more towards the positive side of things, because I believe a lot of people, when you do macro analysis, you generally tend to forget to look at a lot of bottoms up things which are happening. Now, monsoons in the second quarter have been excessive. And when monsoons are excessive, what happens? It disrupts a lot of things. It disrupts mining activities in the country. It disrupts supply chain of a lot of companies. And I was just hearing your previous guest from IRB who said that how tolls have started picking up in the month of November. So October and November. So I take a lot of confidence from these factors that it was more of a cyclical kind of a slowdown which happened in the second quarter. There are other aspects also which gives us this kind of confidence. We are observing a few other macro factors also. Now, even look at, let's say, government spends on capex. Government's capex spends in the first 6 months of the year has been much lower than what it has been in the past few years. And we don't believe there is a problem with government balance sheets or anything like that. So we believe that capex could rebound in the second half, and that will percolate throughout the economy, and we should see maybe not a strong rebound, but like you said, the glass will start filling up in the third quarter gradually, and we should see it filling up even more in the fourth quarter.
Sure, let's break this down. And I think you seem pretty impressed with what PSU banks have done. It's interesting because I think the market was getting very excited about some of the reportings that came from private sector banks. What stood out for you with PSU banks, and looking into the second half of the year? Any concerns that stand out, or do you feel the going will be good despite an increase in credit costs, despite the fact that they are struggling to bring in deposits? What makes you constructive, and if yes, any standout banks to buy?
So on the PSU bank side, what we have observed so far in the year is the fact that almost close to 67% of the PSU banks who have reported, they have beaten our number expectations. So that makes us positive. We also believe that Trump coming into power also implies that globally interest rates could be higher. And even in India, RBI could take its own sweet time in terms of cutting rates. Now, if that happens, on a relative basis, we would be better off with the PSU banks because valuations look relatively better compared to the other sectors. And we believe that a place like, maybe the NBFCs won't do that well in a higher rate kind of an environment. And that is why we are suggesting that you might be better off with the PSU banks. And stock specific comments I would desist from making.
Okay, fair call. No problem, Venkatesh. I'm just trying to gauge your investor or coverage universe, if you will. But let me try and nail it down to one or two sectors that are a bit perplexing. Now, consumption by and large, or at least staples by and large, seem to have an iffy month, save for maybe, I mean, even Britannia numbers seem to be off the charts completely, save for the fact that their volume growth numbers looked okay. But QSRs selectively like Jubilant, etc., have done okay. Now, when you look at pure play consumption, staples plus QSRs, I'm not including premiumization out here, or premium consumption like ethos or cars, etc. What is your thesis? I mean, are these companies' commentary or results giving you any confidence, or is it a sector to avoid?
I think for the time being, we would not get too excited about consumption as a sector. We would be more consumption, specifically the old economy kind of consumption. Whereas if it is consumption related to internet related kind of companies, we would definitely be positive. But the older economy, definitely there are some issues. So we would possibly avoid those sectors.
The other thing is, what has been to your mind, in terms of both the reportage and the commentary, the worst possible outcome that you've seen in this quarter, which would make you believe that unless things significantly change, you would want to stay underweight? Is it consumption only, or is it something else?
I think it is more related to consumption. See, because we usually worry more about top line growth than margins. See, margins are a function of raw material costs, and raw material costs go up and down. That if, for example, in a particular quarter, your input costs are on the higher side, it is possible that in 6 months' time, that can reverse very dramatically. But whereas if top line growth itself is slowing, we would worry. Now, at this point in time, we are not very panicky about it, because we believe that second quarter had some very specific issues. I mentioned one thing about monsoons. There have been other factors. For example, some of the commodity-led sectors, there was a sharp fall in commodity prices in the month of August and September, which caused destocking at the dealer level, on the dealer level side. And because of that, top line growth of quite a few companies on this side have been slower than expected. Just to give you an example, for example, plastic pipes as a sector has faced this problem. Wires particularly has faced a problem in India. Now, a lot of these things will reverse in the coming quarter. So while it was worrisome, we will be monitoring top line growth a little more closely than we would worry about margins.
All right, Venkatesh, what I want to talk to you about is, now let's look ahead, right? Because the earnings are now behind us. What's more important is what happens in the second half of this financial year. Which sectors do you expect to be most affected by raw material inflation and supply chain issues going forward? Because that was a clear trend we picked up in a number of companies that are in fact impacted by commodity inflation.
So I think those companies where we have had those raw material issues, that should continue in the second half. I don't think that is meaningfully changing. It's not like the sectors which face the raw material issues that will have that is going to reverse. Those should continue in the second half.
Also, just sticking with looking ahead, could you clarify the impact of BIS related cost on consumer durables, and if there are any of these companies that might be able to mitigate, or subsectors that might be able to mitigate these pressures going into the second half?
Yeah, so specifically where we have seen this BIS related issues, we have seen it in, for example, consumer durable companies, for example, on the AC side. Interestingly, while numbers were a little lesser than what we had expected, we still saw almost like 20-25% growth, which basically means demand for things like consumer durables are still decent, at least on the AC side. So you will see cost pass-throughs happening, and hopefully these will get resolved over the next 6 to 9 months.
Venkatesh, given the mixed results across sectors, which sectors or companies do you believe offer the best risk-reward balance for investors right now?
Okay, at this point in time, we like metals, we like internet, we like auto ancillaries, we like asset management companies. On the financial side, we like PSU banks relatively more. IT services should do well next year if Trump actually goes ahead with those tax cuts, because that will be very good for the US economy. While there is a fear that the H-1B visa issues would once again rear its head, like in the first term, our own analysis, our own IT analysts suggest that at this point in time, Indian companies have hired more local talent there, so it really wouldn't impact. Even if H-1B rejection rates go up, it will not really impact numbers or margins. So we are not as negative on IT services. We look we are more positive, relatively more positive on IT services if Trump actually goes through with those tax cuts.
One of the sectors on which a lot of people turned very constructive because of the oil price correction was oil marketing companies. Now the fear, of course, is a cut at the till, but that thus far we haven't quite seen, right, happening. So therefore my question is, if there is no change out there, do you foresee a quarter, at least the OND quarter, the October to December quarter, of strong earnings growth? Can that help the stocks perform? That's the other add-on question. BP, HP, IOC.
See, our in-house view is we are not very positive on these sectors.
Why so?
We have come off of, I mean, there has been GRM under recovery. There has been low GRMs and LPG under recovery. We still need to see if these issues will get resolved in the third quarter. So in-house, we do have a sell call on this particular subsector.
Okay, you don't believe earnings growth will come in because of lower oil prices and higher marketing margins?
See, we just need to see that. Let's wait for another month before we take a call on that.
Okay, so and then the allied question therefore is oil upstream. Because of the oil prices coming off, do you reckon that those earnings could remain under pressure or could be under pressure, and therefore anybody wanting to bottom fish, is it a good idea, ONGC, oil, Reliance, etc., or kind of stay away from there too?
We would stay away from the oil and gas sector also.
Entirely. So upstream, downstream, you are away from that. You are away from city gas distribution as well, or is there an exception
yes,
there?
Even the city gas distribution companies.
Okay. Avoid some oil and gas.
Lots of avoids. But Vishwanathan, Venkatesh, one more quick question. Real estate and hotels have showed some strong performance, and we are ahead of in the midst of the earnings season. What is the outlook for the third quarter for the sector, and just extending that conversation to building materials and EMS players? Now, they have clearly seen some sort of cost challenges. Do you see margin improvement in the second half, or the competitive dynamics actually going through a change?
Okay, now specifically on real estate, we remain extremely positive on real estate. We talked about urban demand slowdown, but we are not observing an urban demand slowdown in real estate. So we remain very, very constructive on the real estate sector towards the end of the year and going forward for the next year also. Now, specifically on building material, the dynamics are slightly different. I mean, if you break it down, you have plastic pipes, you have the tile companies, you have some of the other iron pipe companies. So their competitive dynamics are a problem. Just to give you an example, in plastic pipe companies, margins, EBITDA per ton is contracting from the highs of the COVID period. So what is happening in real estate, I don't think one should extrapolate because there is a lot of competition. Now, with Trump coming in, and if Trump actually puts in very high duties on China, that could be beneficial for some of the Indian tile companies, because then the Morbi cluster starts exporting more to the US, and that will put less pressure on growth and realization in the domestic sector. So, but all these things might take maybe 6 months, 9 months to play out. Over the shorter term, we would be cautious about the building materials sector, because even valuations are not very cheap. If you see across building materials, most stocks are trading maybe at 1.5 times or 2 times above mean in terms of standard deviations above the mean. So valuations are also not very, very supportive. We have had one round of corrections, and if these kind of earning misses continue, building materials will be a little cautious.
Cautious on building materials, that's the word coming in. Also, are there any emerging themes from this quarter's earnings, digital transformation, IT, sustainability, maybe in industrials, that investors should, maybe watch out for?
I personally believe that, investors should definitely look at exporters from India, which will benefit from duties on China. So there is a whole list of companies that you can evaluate. I think it is time to once again start looking at, for example, the chemical sector, which has been out of favor for the last 2 to 3 years. Because interestingly, what you will also notice that in the chemical sector is one of those sectors which actually saw FII inflows in the month of October, because valuations have come off. I think most of the earnings cuts have also happened in that particular sector. So I don't think there are chances of too much earnings misses. And if those duties actually come through on China, it will relatively favor India. The supply chains in chemicals were anyway already moving from China to India. I think it had seen some kind of a slowdown over the last 6 months to 1 year because China came back in the chemical markets very, very strongly. But I think a part of that can once again reverse. So people should evaluate chemicals very, very constructively is our view. Now, besides chemicals, I think even once again, wires and cables companies, they've had disappointing numbers in the second quarter. Numbers have got cut. Valuations have become reasonable. I think people should look at that particular sector once again very closely. Again, an exporter who will benefit from the China plus one trade. And there are a few other China plus one sectors which one can again reevaluate.
Venkatesh, great talking to you. Thank you for that. Hopefully the second half of the year looks better for the larger part of India Inc. But for now, of course, on a sticky note. Well, thank you. Have a good day and we'll hopefully see you soon again.
Thank you.
Well, the markets are oscillating between gains and losses, lacking direction as we see it, and that's probably the best way to explain what's happening on the street. Couple of counters are drawing attention on back of good earnings. The ones that have disappointed the street are generally facing some selling pressure as we see it. But there's one counter that is outperforming the broader market generally, and that is LTTS. I believe there is an announcement regarding an acquisition that the company has made. The management of LTTS will be talking to us shortly. Well, if I can just get the management on and we can start this conversation. Amit Chadha, MD and CEO of LTTS, joins us about to talk to us about this recent acquisition. Hi Amit, thanks for joining in. Amit, your stock's getting very excited. Is there some news you'd like to share with us? I believe that there's a big acquisition you made.
Thank you so much for having me here. So look, if you go back to ER&D and you look at the spend, etc., there's about $80 billion of global ER&D outsourcing that is happening today. Per reports, 45% of that, or upwards of 43%, comes from software product engineering and platform engineering. One. Second, this also comes from areas of fintech and retail. Now, if I stand back and look at LTTS, we've been doing, I would say, a good job in digital engineering around the hardware piece, the silicon design piece, the semiconductor piece, etc. But when it comes to software product development and platform and AI, we believe that we had a white space. So we looked around for acquisitions because we did want to get to it. We would have gotten to it organically if we wanted to in a little bit. But we were looking for an inorganic push. And so IntelliSwift is about $100 million in revenues. They still are going through the current year. I think they'll end up slightly upwards of that. So about $100 million of revenue, about 1,500 people, 500 in the US and Costa Rica, and about 1,000 in India. They've got their clients. They work with 4 of the top 5 hyperscalers. And, 80% of their revenues come from about their top 25 accounts, which have been fairly stable and been their customer for more than 5 years, right? Now, if I flip to the vertical side, 50% of the revenue comes from the high-tech space, but the remaining 50% actually comes from retail and fintech, as well as from the private equity channel, which all these three we were not there, and it allows us to be able to get into it. Net, this allows us, and they've got their own tools. They've got in AI as well as in digital engineering, data engineering, in software product development. They've got their own tools, accelerators, cloud navigation frameworks that find a lot of use with their customers. So if I look at it net, this is a growth move for us. And then number one. Number two is that we've always talked about getting to a 1.5 billion run rate by March 25. We believe we're going to get closer to this. B allows us to get to $2 billion faster in the medium term, and allows us finally to actually put us on a growth path ahead of competition and industry. So that's been the rationale and quick bit about the company.
So you could have done a tuck-in as well, but this kind of gives you capability plus revenue in order to reach targets as well, so to say.
Yes. So look, there are two or three things, right? We've done tuck-ins in the past. We bought OT, we bought Essentia, we bought Graphene. All those were tuck-in acquisitions. And they did move the needle slightly, right? But we have $1.2 billion now. So the Smart World acquisition that we had done and now this one are both 100 million revenue. And I believe that we need to make these sure-footed, shall I say, bets to take us forward. And give us scale, because if I look at our ratings now, we are top 3 globally when it comes to pure play engineering. This moves the needle to be able to move us to that top 2, top 1 bracket faster.
Amit, while we've talked about why it was one single big deal, but are you happy with the pricing, or have you paid a little bit more than you'd have liked to for the capabilities that you've acquired?
So number one, let me restate. So when I say turnaround, I basically am looking to put everybody on a double-digit growth path, right? And integrating, bringing people together, bringing cultures together is what I meant when I talk about turning around, right? So that's number one. So let's be clear on that. Now, in terms of margins, because that's the the second part of the question that you asked me, you will have to give me till January. Because I am going through our own ramp up in margins. I'm reconfirming 16% levels in EBIT for LTTS in FY25. And give us till January, we will come back and plot a path out for you. Look, I believe in saying what I can deliver, commit what I can deliver, and then deliver what I just committed, right? So please allow me till January to be able to do that. But right now, I would say, I'm excited about what the future holds. I'd written to our clients right after we filed. I wrote to our clients, and I've already got about 25 emails back in my mailbox saying, "Right move, great way to go, come see us," etc. So I do believe this is fairly positive from a growth dimension, profitable growth dimension for the company.
Indeed, Amit, and I think the markets and your investors are as excited. Your stock trades with a 4% gain as we see it. But share with me the internals for this, right? Are they as strong as LTTS, or is it, would it be fair for us to assume that it's a weaker candidate as compared to yourself at this stage?
So their margins and their stack is closer to our high-tech margins, right? Like anybody would be. But they've made a lot of investments. See, in the last year, because we've been going through with this for quite a long time, talking to them, etc., they've made some significant investments that have to start paying. Like we made investments in the first half of our year. And that's what it is. And that's why I'm saying, give me till January to come back and paint a picture for you. But we are not doing anything rash. It's in line with company strategy, in line with company values, vision, and we continue to focus on organic growth. This is an inorganic piece being brought in, but we will bolt on organic. In fact, our goal is to double IntelliSwift revenues in 3 years. And that's what we would like to focus on as we move forward.
Amit, now once this acquisition is through, and I know that we should wait until Jan, so you give us better clarity and it gives you more time to sort of, deliver as expected. But does this sort of open up doors to give you the opportunity to cross-sell? You said that you wrote to a few of your clients and they've all wrote back with very strong positive responses. Will this give you a better opportunity to milk your clients' capabilities?
Look, so they work for 4 hyperscalers of the 5 hyperscalers. We work for 3 of them. Now, those 3 hyperscalers at least, A plus B, will become more than $25 million annualized run rate accounts for us immediately on integration. On closing, not integration, closing, right? So your client pyramid improves immediately. We've been largely working on the hardware, silicon design, embedded electronics work for these hyperscalers. They've been working largely on the software side. Together, it becomes a true A plus B as we take things forward. A. B, they've got 20 other Fortune 500 customers they're working for in fintech, in private equity and retail, which we don't have. And therefore, this becomes a big add-on for us. Third, we've got a very strong offering in the hardware, embedded software, VLSI design area, And we believe that these can be brought to bear in their customers fairly quickly. In fact, the team we have assembled, the transition team, is going to be led by a gentleman who spent years with us in LTTS based in California. He will be supported by about 5 different people working full-time on this. They've created the plans. In fact, I reviewed them yesterday with them to make sure that we are good to go. And we brought the part of the IntelliSwift management team into this to show them what it was. So we've done that test drive, if I may. Look, this is the second big acquisition for us after Smart World. And we have talked, and with all the boundaries of secrecy and whatever is allowed, to be able to ensure that we are able to take it forward. We have talked to some of their customers that they had referred us to make sure that this aligns with the objectives of their customers as well. Finally, if the customers win, we win. And we believe technology, people, clients, all coming together, this will be a way forward for LTTS to charge up the growth.
Amit, congratulations, good luck. This is a big one in your kitty and it's not come cheap, $100 million. And like you said, there will be lots that we would love to look forward to and hear from you on this as early as January. But for now, the street getting excited with this recent acquisition that you've announced. In the meantime, the markets are oscillating between gains and losses. The stock of the day has got to be Jubilant Foodworks, big gap up in early trade. And of course, you have Sagility that list on the exchanges as we speak. Expected to get a flat start on back of what the grey market premium was indicating, but it was a very well subscribed IPO that opened last week. Well, it's a flat start, but it's not too bad. At least it's positive, and that's what we should be taking hope from. $30 on Sagility is what we had, but 1 rupee higher from the higher price band of its issue price. With that, we're completely out of time, but there's a lot more programming on the other side with of course, talking points, so keep it with us.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the large street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the large street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Thanks so much for tuning into Talking Point. I'm your host, Neeraj Shah. It's an absolute delight to get in Abhay Agarwal today because I can tell you viewers, in my conversations with him, both public as well as private, his calling on what's happening to the broader macro and growth as well as sectors has turned out to be really, really spot on. And Abhay, kudos on that. I'm guessing your investors would be benefiting from that. But thank you so much for joining us today.
No, thank you, Neeraj. Great start to the day whenever I get on the show with you. And thank you so much for the nice words. I really appreciate the fact that, you listen to me and then, you actually track what we have been saying. And so it's really nice to get in a conversation with you always.
That's what we do, and that's why the idea is to tell our viewers what some of the thought processes are in the markets, right? So, Abhay, I'd love to understand from you. One question, when we were having this conversation around valuations, right? I want to start off with that and then get to some specific pockets because I've had conversations with a few managements and I'd love to have your thoughts there. But first, with the misses that were recorded until Diwali, the index was probably trading at about 20 times with the corrective moves. Then there has been a bit of a bounce and stability in the Nifty, but the earnings misses have continued, right? With what with Britannia, what with ONGC, what with some of the others that have come out on the Nifty itself, right? So we're probably trading at 20, 21 times at the very least, baking into account some of the earnings misses, if not all. So my question to you is, if indeed all the misses get accounted for, and therefore at 24,000 levels on the Nifty, if we are trading at 22 times, let's say, and there is a fear of a wobble in Q3 as well, is it prudent to say that upsides on the market are capped for the time being?
Neeraj, I think the broad, to start answering that question, I think what we have to do is look at the broad cyclical downturn that the economy is going through, and that is led by lower than expected demand, consumption demand. So post-COVID, we saw a situation where the economy was firing, the consumers were consuming, and there was easy flow of credit. RBI started tightening credit availability, and I think rightly so earlier this year. And that impacted domestic consumption where people already had, their fill. So it's not that the consumption was still rising. So in that environment, the increase in cost of money and also the increase in cost of consumption itself, you look at the car prices, home prices, everything went up. So we started seeing a cyclical downturn in consumption in the last quarter itself. Pre-Diwali, we saw inventory, getting a lot of inventory with auto dealers, consumer electronic dealers, paint, tiles, polish, woodwork, everything. And I think that cyclical downturn is right now. We're in the middle of it. So probably half of it done, half more to go. So we are not expecting on the earnings side any earning recovery for at least next 2 quarters, because these cyclical downturns are par for the course in a growing economy. So I don't think there's anything to worry that this is a structural downturn or this will not come back. It will come back as inventories become leaner, but it will take 2 quarters more. So in that environment, now looking at your question, Neeraj, that is the market valuation justified? I don't think so, because it is baking in a continuous increase in earnings. And before this earnings season, for the Nifty earnings, the expectation was a 10% earning growth, which was tapered down to 2.5% earlier this month. And now it is negative. So in that environment where earnings are not growing, at least in the foreseeable future, to pay 20 to 22x becomes very questionable, So my answer to your question, Neeraj, would be that I am not expecting any return from the broad market over the next 6 months. It's only when there is clear sight of earning pickup, inventories becoming lean, domestic consumption coming back, cost of capital coming down, capex kicking in, we will see the signs, and at that point of time, I think the valuation multiple would probably creep up. In this environment, I will not be surprised if the Nifty earnings multiple, forward multiple, 1 year forward falls to below 20, and which means, mathematically, I'm not predicting it, I'm not that good a market expert, but for the market to get into the 22,000 range, it's not, unthinkable.
By the way, some flashes on your screen in case viewers missed. That's a large order win for L&T. It's from NTPC, thermal power plants, 15,000 crore order. In a good market, this would have revved up L&T stock and half. 15,000 crore even for L&T is a large order win. That the stock is not moving is just symptomatic of what the market must be feeling right now. Abhay, so there is this band-aid that Indian markets have. It's actually more than a band-aid, maybe a plaster, or maybe a positive shock, as Morgan Stanley called it, of the local flows, right? Everybody is talking about how the October number will be a litmus test. Thus far, that litmus test is turning out to be okay. SIP flows were at record highs too. So therefore that band-aid, that plaster, that positive shock, whatever you call it, that technical factor, if it stays true in this period as well, would that cushion the downside? And therefore, under normal parlance, if you believe that the index could go, I'm not saying you're predicting it, but let's assume that you believe that the index can drift to 20,000, let's say under normal circumstances. With these flows, would that fall be cushioned to something lesser? Let's say 23, let's say 23.5, what have you?
I think, Neeraj, we have looked at the SIP flows and the quality of flows to mutual funds from domestic retail funds. And it's very heartening to see that these SIP flows and most of the fund flows that come directly, indirectly into the markets from Indian retail investors, HNI investor, family offices, they are not really trading, they're not looking at Nifty levels to decide whether they want to put money or not. At least a substantial part of these flows are driven for the long term. People have understood that, look, it's a 5-year story. These investments have to be made with a 5, 6, 7-year perspective. And, money has to be made over those cycles, not on a monthly basis. So that is the good part. And I think Morgan Stanley has got it probably right there. So I am not expecting, even with a 10% market correction, I'm not expecting any reversal of these domestic flows, because equity as an asset in India is still highly under-owned. It's still not even 5% of domestic capital, household capital that is invested in Indian equity. So I think there is a long way to go. These are directional moves that will sustain. And I think the Indian household, the Indian investors will benefit from this strategy because, again, as I said, these downturns are cyclical. They're not structural. So they will play out. And when they play out, again, the earnings will pick up and again, the markets will trend up. So I think the flows from domestic retail investors, barring the ones which are trading, but I don't think there is so much of trading there. The SIP flows have been rock solid across all market cycles. So I'm expecting them to continue to come in and provide the cushion that is required. But at the same time, with the caveat that, look, there may not be any immediate gain over the next 6 months on this flow.
Okay. Abhay, okay, let's get one bad news out of the way and then we'll try and focus on some of the green shoots as well. What has been the biggest disappointment for you in this earnings season? It could be a part of your portfolio, could be just a broad observation, but from amongst the sectors, themes, etc., what has been the biggest disappointment for you?
I think we were not surprised about the disappointment, but I think it was building up in both two cases. One is autos, 3 segments actually, I would say. So autos is one where we saw inventory levels go up, and mind you, the real impact of inventory buildup in auto numbers will come in the next quarter because the auto companies recognize revenue when they dispatch to dealers, and then in the current quarter, when the dispatches slow down because dealers are sitting with inventory, the next quarter you will see probably worse numbers from auto companies. So autos have been, a disappointment as we expected. Both the consumer side and the commercial side, and even the two-wheelers, I would say, in that way. Second has been the whole discretionary consumption basket of paints, polish, tiles. Again, inventory stacking, a lot of inventory sitting with dealers that still needs to work its way out. Prices under pressure. We will see discounting kick in a big way towards middle or end of December, when these inventory levels will become just unsustainable. I think that is when the customers will get fantastic deals, so they should hold their horses. And the third segment is this whole microfinance and unsecured lending space. I think the lenders are really feeling the pressure now, which RBI has been warning, of pushing money into the hands of borrowers who may not need it, but they are just being given this unsecured money because the MFIs and unsecured lenders have to show increase in book size. And that, I think, is going to be very negative for the whole economy, till that cycle reverses and it plays out. So I think these are the three segments where we have seen disappointment, and I think it will continue for at least one more quarter, Neeraj.
Okay. So those are the disappointments. There are some bucking the trend, right? Though, Abhay, I mean, for example, if autos are looking very wobbly, but M&M with its SUV portfolio seems to be bucking the trend. So there are some outliers out there. You reckon outliers can do well in an otherwise lowering of the tide?
Yeah, absolutely, Neeraj. I think these are very good companies. They have very good management. So my comment on these companies' cyclical downturn is not at all to say that these are anything wrong with the companies. It's just that they're caught in a wrong cycle, and the management that can foresee that down cycle early on and can reposition its product portfolio, pricing strategy, distributor engagement early on is going to show very good results even in a slowing industry. So I think kudos to the management of M&M that they foresaw this, probably launched products, pricing strategies they adjusted, more supportive of dealers to push out inventory. So there will definitely be these outliers. These companies have great management, so I'm not surprised at all by some of this outperformance.
Okay, what about the green shoots, Abhay? And before I come to consumption by and large, would love their view on banking, because there we've seen some positives, if you will, coupled with the fact that the valuations are not that expensive. Does that place banking in a decent leash, or would you avoid it?
Not yet. I think we are getting close to it, Neeraj. Maybe, slight more time value correction in lenders. When we say banking, I assume that you're talking about lenders, both NBFCs and banks. I think the credit, while they are struggling for deposits and CASA growth, at the same time, the demand for credit is also weakening, as we have seen from the recent data. And it is difficult to call a U-turn on that, that when will credit demand pick up. So I am expecting, even from the leading banks, like a single-digit book growth for next 2 quarters, with a lot of focus on recoveries rather than lending money. What we are seeing empirically also when we engage with some of the bank staff and NBFC staff is that there's a clear direction for senior management to not let the DPD go beyond 90 days. So the direction is very clear: focus on recoveries, make sure money comes in. There is no pressure right now on lending money or building the book. So I think the banks and the entire lending ecosystem is now focused not on growth but on recoveries. So in that situation, I think investors can wait for 3 to 6 months to see better valuation, even if they're time corrected, before we start seeing credit uptake coming in.
Okay, now different facets of consumption have done well. So for example, Abhay, just stay on, because I'd like to get in my colleague Mahima on Jubilant Foodworks, which is seeing some serious buying today after the results and the con call. Mahima, what stood out in this delivery and the con call?
Right. So I'll start with the key takeaways of the entire Q2 results for Jubilant FoodWorks, where like-for-like growth stood at around 2.8%, which is outpaced most of the QSRs that have come out with the results so far. The dine-in sales were weak at 5.6%, but their monthly active users have gone up by 18.5%, which means that their online sales are really picking up as compared to the in-store sales, and margins were impacted due to waiver of delivery fee. Now, their online sales are picking up because of two things. That first of all, they've promised that their delivery will happen within the period of 15 minutes, and secondly, they've waived off delivery fee beyond a certain cost of per delivery cost, which is why their online sales have picked up. So this is something that has really augured growth for Jubilant FoodWorks in Q2. In terms of the numbers, revenue was up 42%, EBITDA was up 43%, margins were by and large the same as compared to the Q2 FY24, and net profit was up. Net profit was down 31%. Now, net profit was down 31% because of higher staff costs as well as higher depreciation expenses on account of the number of stores that they are adding. In terms of the brokerage views, Nuvama has reiterated hold, but they've revised the target price to 631 from 568 rupees earlier. They remain bullish on company's turnaround potential, and the potential like-for-like growth in Q2 FY25 has set it apart in the challenging market that QSRs are facing otherwise. And the focus on delivery and innovative strategies has fueled success for the company, but slight adjustment in the EPS and the earnings estimates they've made. In terms of City on Jubilant FoodWorks, they've retained buy with a target price of 700, and they've cut it slightly from 715, but they say that they continue to operationally outperform Jubilant for them, and recent initiatives to improve dine-in sales and like-for-like growth continues to improve and outpace the sector, and Jubilant FoodWorks still remains their preferred pick in the QSR space. So this is the overall view of how Q2 has panned out for Jubilant FoodWorks, and so it's still started seeing growth in terms of online sales.
Thanks a lot for that, Mahima. Consumption, Abhay, has largely been sulking, but here's Jubilant FoodWorks talking about accelerating growth in Q3. A few others have done this. Is there a chalk and cheese out here in consumption? And define for us, to your mind, what has been chalk and what has been cheese?
Again, as I said, Neeraj, that the management, what we just heard from Mahima, that Jubilant FoodWorks took the leadership in waiving off the delivery fees. Now, I think that is the kind of management that can foresee, that they need to do something differently, make some adjustment in the delivery pricing menu to continue to grow in a downward market. So I think the management that gets it is going to do well, even though the costs will go up. They went up, the staff costs went up because they're not recovering for delivery while paying the delivery people. But at the same time, you want to protect your market share even in a down cycle. And so that's when you need to make these bets. I think the market is rewarding the company for that, the stock for that kind of approach, that look, we will not let orders fall, even if it means that we need to give some incentive back to the consumers to consume. So I would like to see more such innovative strategies from different consumer companies across the board, to give an incentive to the customers to consume, not by doing month-end sales or festive sales, but make some tweaks in pricing, make some tweaks in delivery costs to make it, attractive for customers to consume. So I think that's where the cheese kind of companies will be. The chalk companies will obviously be who continue to do what they have always done without making any tweaks.
So did you like the commentary from Jubilant, for example? I'm not asking you to comment on the stock as a buy or a sell, but just the commentary.
No, I think the commentary, it's a great brand. I mean, we all are consumers. We all, it's a brand, it's a product that we want to have, so it has its own brand pull, product pull. Now, in that environment, the management has a difficult job of still growing through opening new stores. And it is a point when you hit a kind of, the top, and then you are struggling for where do I open new stores? How do I drive same store sales growth? So they have outlined some strategies. I would like them to see how they play out over the next quarter. But I think the way they are going, they're at least thinking about how to grow both same sales store growth and also add new stores.
Okay. Abhay, the next one is on metals. And I think in one of our conversations, you were saying that in some of the key global materials, there has been a bit of negligence from the investor community. Some of the pricing has come off. Parallelly, there has also been in a relative way, an underwhelming stimulus by China, which some people say they are saving gunpowder for future wars, if you will. My question to you is, what to do in a scenario like this with some of the commodity names? Are you constructive there, or would you stay on the sidelines?
I think commodities is a highly cyclical play. You need to get the cycle right, and then both entry and exit. What we are seeing is that at the global consumption level, China consumes 50% of global commodities and has been largely out of the market post-COVID because of their own internal issues. And those issues relate to a complete falling off of cliff of the real estate market, which was one of the biggest driver of employment, consumption, commodities. Now, with the stimulus, if you see the Chinese stimulus is highly focused first on reviving the real estate market, because without that, they cannot aspire to have an economic growth. So, a lot of the
I think we've just lost the feed, but we'll try and repatch that if we can. But just, okay, Abhay, sorry we lost you, but if you can just continue making your point.
Yeah, so I think on the metal side, we need to get the cycle right, Neeraj. And what we are seeing is that with China coming back with a stimulus, we are expecting that commodity cycle pick up. It is because metals haven't done well for a while. Investors have lost hope, and I think bottoms are formed just at that point. When investors are neglecting that big sector that is important for global growth. Now, with all governments, China, US, India, Europe, focused on growth, it is quite natural that the demand for metals will pick up. And in a situation where the supply chains are very lean, inventories are quite lean, and also the manufacturing facilities, a lot of inefficient ones have been shut down. You will see price increase coming in, though not immediately, but over the next 3 months, we expect that prices of metals will start going up. We saw Hindalco results yesterday, which were better than analysts expected, what we expected. So I think you will see these positive surprises from metal companies over the next quarter.
Noted. Okay. Abhay, take a moment to thank you for joining in today and giving us your thoughts. A bit of an incomplete conversation, but we're out of time completely here on this show. But really appreciate your time this morning.
Thank you, Neeraj. It's my pleasure to be on the show and talk to you. Thank you so much.
Likewise. And well, on the note that the markets are just about holding out, with IT doing the bulk of the heavy lifting today. If you can call it heavy, really, it's just 0.5%. But in the green nevertheless. But the good part is that small caps have bounced back, 0.7% higher for the Nifty Small Cap 250, which is actually a good sign in trade. Thanks so much for tuning in this edition of The Talking Point.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with, What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
When the whole day passes like a blur, the news just whizzes past. And you're
Hello and welcome. You're watching the FNO show. The next half hour, we'll take you through the action in the markets and a brand new listing on the street. Good morning, Agam. It's a similar day to what we saw yesterday. Started off flat, still sub 24,200. But I think the one good thing this morning is the breadth isn't too bad and the broader markets are actually outperforming the benchmark. Trend leading on the front line, building up post the 3% gain yesterday.
Yeah, well, again, look, as long as the market's looking in the green, it's good because a 0.25% up move is something that a lot of traders as well as investors will take with both hands. The truth is that there's been a lot of pain in the broader markets of late over the last, few years and, pardon me, a few weeks. And it's just something that so we're into a consolidation, there's no doubt about it. On the higher end, we're keeping an eye on somewhere around 24,500, 600 because that was a previous 7-day high. And on the lower end, we went all the way down to 23,800. So between 23,800 and 24,000 is where we could see a very broad support range. And I know it's an entire 1% support range, but that's how things are because just because it's just been volatile. The VIX has come off to a certain extent. It's come off from 15 to 14 at the moment. And again, in terms of the key contributors for the Nifty 50, mostly it's going to be about banks and Bharti Airtel, Infosys and Reliance Industries. But let's take a look at the futures and options space and have things changed for futures specifically. Let's pull up the Nifty futures and see where things are faring and how things are faring at this point in time. So at least yesterday, even as the Nifty remained flat, we were looking at no change in open interest. Today, we're looking at a 0.25% up move for the Nifty, moving back about the mark of 24,200. Open interest increase of less than 1%. Moving on to the Nifty Bank futures as well. And once again, let's pull that up and see how things are faring there. And then for the Nifty Bank, and again, a 0.4% up move and short covering in the Bank Nifty also continues. So that's the other aspect that we need to take stock of. Now let's talk about the options market. And there, what we are seeing, and something that I've been pointing out, is that we're looking at a substantial amount of writing at the 24,500 call. In fact, that's the option across puts and calls with the most amount of OI, at least in the, visible range. And on the lower end, while we don't have as much writing in puts across many strikes as compared to calls, the 24,000 put does stand out with respect to the most amount of open interest within puts. And this, of course, is the weekly options expiry for the Nifty. Do remember that this week is the last for all the other weeklies. So after this, you will not have any available for weeklies. So as far as today's Fin Nifty is concerned, it's the last day for the weekly options expiry. Tomorrow, the Bank Nifty will have the last weekly options expiry. So, that's something to consider. And that's it. It's certainly a historical day in many ways today and tomorrow as well. Bank Nifty, of course, again, we're keeping an eye on a relatively broader 2,000-point range for now. But, as far as the markets are concerned, otherwise, still quiet and consolidation continues. Samina.
Yeah, you're right. It's an interesting day and significant in more ways than one. 24185 on the index is what we have. Sneha Seth and Khush Bora both join in with their trading ideas. Sneha, I'll start with you. Of course, you had a pretty solid call last week that played out quite well. And this week we are back in conversation. Let's start with the benchmark first. 24,200 is clearly where the Nifty is finding resistance. At 24187, do you feel like a long trade can be initiated, or you'd avoid the benchmark for now?
So looking at the overall chart structure, I would say avoid for now, because if you see in options front, we are seeing fresh writing in 24,200 call option today. So that somehow is acting as a resistance. I believe 24,200, 300 zone is a resistance zone. In case of any move beyond this range, maybe we may head towards 24,500. And in case of any bounce back beyond that would be very interesting for the market. But as of now, avoid being very aggressive, focus on individual counters, that would be better.
All right, hold that thought, Sneha. We'll go across to the management of Sagility. That's made its listing today as well. Let's cut across and see what they're saying.
We are in the healthcare industry and we provide business services and solutions to our healthcare clients who are both payers and providers. Payers are largely insurance companies, health insurance companies, and providers are entities like hospitals, physician groups, lab companies, and so on. These are the two distinct set of clients that we cater to.
All right. And are you looking forward to expanding outside the US? As you mentioned, your client base is in the US. So are you looking forward to expanding out of the US either sooner or later?
At least not in the near future. As you know, US healthcare market is a very large industry. It's about $4.7 trillion. That's larger than the GDP of India. So it's a very attractive market for us. And we are still a very small firm in that large market. So we think the opportunities there are huge.
Okay.
And at least in the near future, we are going to be focused more on the US market.
So don't you think that will possess a little bit higher risk than someone who's forayed into more than, say, a healthcare space, into, say, BFSI or manufacturing space like that?
Which is true, but like I said, within the healthcare industry, there are various client segments, and we work across those client segments. So we think we are fairly distributed within that industry, and we've mitigated risk.
Right.
But going forward in the future, we might look at other adjacent areas to healthcare. But at this point in time, like I said, it's a very large market, and we are focused on the US healthcare market.
Right. Okay. Coming to you and talking about, say, financial numbers. Right now, the margin is around at 25% odd. What kind of course, I will not ask you near-term questions, but in the next 3 to 4 years, say, for example, what kind of margin are you targeting?
Yeah. Firstly, thank you for having us here today. From a margin perspective, we are fairly confident that we will be hitting the 23 to 25% EBITDA numbers. And we have displayed that consistently in the past. And significant investments have gone into technology and improving proficiency of how we do the work and improving efficiency and productivity numbers. So fairly confident to hold these margins at these levels. Though there are opportunities to improve margins, we intend to repurpose them and fuel our growth.
And what kind of top-line growth are you looking at, the revenue numbers?
Anywhere between 11 and 14% is consistent that we are confident of meeting year on year.
Okay, all right. So year on year is the correct metric to look at.
Year on year is the right metric. We do have seasonality in our business.
Okay.
The second half is more pronounced than the first half of the business.
All right.
We are typically not a quarter-to-quarter company. It's more like a H1, H2 company type. So that's what investors should look for.
So don't you think second half is more filled with furloughs and, clients having more of holidays than the first half?
In this industry, good question. In this industry, there is something called open enrollment in the healthcare market in the US, where members come with a lot more queries. They have a shorter time period to get themselves enrolled. They can't switch plans during the year. So we will have more volume and If you want to add anything?
Yeah,
more
you can.
So there's a lot of, like you said, a lot of activity during the open enrollment period. That's when people typically enroll into new plans. And so our clients expect us to handle large volumes during that period. So there is a spike for a few months in terms of the volumes that we handle. And that increases our revenues in those quarters.
Okay. Let me get to the talk of the town. IT companies into pressure because of client budgets getting tighter, and because of interest rates going up, and now the economy status also. The analysts believe that the interest rates are yet to come down after the recent economic update that we all know of. So, do you think the clients would incorporate such discretionary spends, and they are expanding their budget to accommodate such spends? What are you hearing from the clients?
So that's a very good question, and I want to clarify that unlike a core IT company, the work that we do for our client is supporting them in their core operations, right? So these are things that the clients need to do on a day in, day out basis to keep their business running. So what the clients spend on us is not discretionary, right? So clients have to do this work in good times and bad times. And so our income streams, our revenue streams are fairly predictable year on year. So even when the industry was growing in single digits, we were always consistently growing in double digits because we support our clients in core operations. So like I said, so we don't generally get impacted by any budget cuts and so on. In fact, when clients are in need to take costs out, they turn to us to help them out in taking cost out.
And what kind of direct competition will the big IT companies be, like Accenture, Cognizant, names like that?
Yeah, to a large extent in the claims side of the business, we would expect to see them bidding with us.
Okay.
And in other customer experience space, or we will see the likes of say EXL. We also have First Source in this, but what they do is among other sectors, they also have a healthcare sector, whereas we are a pure play healthcare focused company, and we have over 24 years experience running this business and deep domain knowledge. And
right. So very few IT companies especially focused on healthcare. There are like very few names. So this might pose as an opportunity for Sagility. Anyways, okay, moving on to the next question about inorganic expansion. The growth, 11 to 14% top line, which you mentioned over the next 3 to 4 years. Are you looking to expand inorganically as well? I mean, the question to you.
Yeah, 11 to 14 is the organic number, what I mentioned. Obviously, as a company, we look for opportunities to grow. And in the past, we have done 2 acquisitions, and M&A has been a core DNA, part of our core DNA. We look for niche capabilities in this market, and it just adds more skills to our armor. And so we look for very few companies in the healthcare payer space where we are focused. And we've been constantly looking at opportunities. If there are good companies with a mid-market segment where we are not present, not deeply rooted like the national players that we have as our clients today. So we are looking for clients with mid-market, opportunities with mid-market clients, and looking for niche capabilities, very specific healthcare domain problem-solving capabilities, AI companies. And those have always been our targets, and we are actively looking at them.
All right, well, there you have it. That's the manager of Sagility. Well, telling us about all that is in store for the company going forward. It's currently trading at a 4.5% premium to its issue price at around 31.35. It isn't exactly the kind of, furore that we've seen in a lot of these other IPOs. Well, but a premium is a premium, so and it's listed at a premium of over 3%. So, well, there you have it. But we shift focus back to the futures and options space, and we also have with us Kush, who's joining us right now. Kush, good morning to you. Your view on the benchmark indices and what are you doing there?
Hey, hi, Agam. First of all, very good morning. Well, I think, consolidation is the name of the game, and I'm glad that it's not with, too deep a cut, either on the Nifty or on the bank Nifty. As long as 24,000, 23,800, the near-term lows, that the index has made are held, you could see a sideways movement on the Nifty, and that's not a bad thing, right? After the kind of fall that we've seen, for some time now. So I think consolidation will continue on the Nifty, as you rightly pointed on in your opening, segment, which is that there's a lot of heavy call writing, not only at the 24,500 mark, but also the 24,300, 24,200 mark, That is suggesting that the upside for the near term on the Nifty could be capped. I remain constructive on the bank Nifty, have been for a while. The index is down, close to the low point of the day at the moment. But any dip closer to 51,000 should be taken as an opportunity to go long with targets of 52,000 and higher. So constructive on Bank Nifty, and Nifty could consolidate around the 24,000, 24,200 mark for some time.
Consolidation on the street, on the benchmark. The only thing is the trading range seems to be moving lower week on week, and I think that could be a little bit of a concern. But Sneha, you've got a few constructive calls, and it's actually both of you have a buy call in the tech pack. Let's start with you, Sneha. What do you like? I believe a bias on Wipro.
Yes, we are liking Wipro. If we see the overall chart structure is very good. In fact, yesterday it also made an attempt to surpass 580 mark, which is an immediate resistance. And we have also seen decent writing in put options of 580 strike. So that is very interesting. So hence we have a buy on Wipro. One can go ahead and long the option, wherein 590 call option, which can be bought around 7.5, and the stop loss can be maintained around 4.5. The target expected will be around 13. Apart from this, we are also liking Bharti Airtel. Here also, if we see the chart structure is very good. The stock has corrected and now it looks poised for a short covering move. So here also it's a buy. The stop loss can be maintained around 1550 and the target expected will be around 1654. Apart from this, I also have a one sell call, which is NTPC. So here again, we have seen some profit taking. The previous swing low has been tested today. So I believe we may see some further selling coming in. So very short-term trade for a day or two. One can go ahead and short this counter. The stop loss can be maintained around 394.5, and the target expected will be around 379.
What about you, Kush? What do you like this morning?
Incidentally, both the trades on the long side, one of them is from the tech pack, which is HCL Tech. Now the stock has recovered rather well from the lows that it made last week. And interestingly, it is trading above that, 1870, 1875 kind of resistance zone. Marginally so, but it's held on to that for the most part of the day that the markets have remained open right now. So HCL Tech continues to, show strength on the positive side. So 1910, 1935 are your immediate targets, and 1855 is where you place that stop loss. Exactly the reverse in terms of the structure is Zydus Life Sciences. The stock taken quite a knock from the 1300 odd levels, but if you see for the past 4 to 5 sessions, it's holding on to the 1960 support zone, attempting a rebound today. Also, the volumes are fairly decent for a little over an hour of trade. On the upside, you could expect targets of 1000, 1020, and 960 is where you place your stop loss. These are rather near-term trades, both of them, HCL Tech and Zydus Life Sciences.
Sneha, I want to quickly come back to you on a couple of other IT stocks. And what's standing out for me is last week across the board, one trade that I had a long call was TCS. Interestingly, nobody in the last 2 days is recommending TCS. Do you feel like it's the underdog that could do a recovery and outperform the sector, or do you feel like it's best avoided and it's better to stay with the Wipros and HCL Techs of the world?
I think TCS is also good. In fact, we have suggested its counter in the Diwali top pick counter. So here, I believe I am still bullish on this counter. If someone wants to go ahead and long at current levels even, they can also think about it with a strict stop loss of 4,120. And upside, I believe we may see an up move at least towards 4,300, 350 zone anytime soon. So it's a buy and the chart structure looks quite good.
The other counter that comes on our radar is BEL. It's been very quiet over the last 4 days, but what we've also seen is that a little bit of buying has returned to this defense company, and it's actually moving against the grain of on the back of what we've seen with the rest of the defense pack. So it's up around 5% in the last week, but a lot of those gains were made on just about 4 or 5 sessions ago. And even if you consider the up move from its recent low, it's actually moved up considerably from levels of well below the mark of 270. Currently testing 300 and thereabout. In fact, that's what it's been doing over the past few days. Kush, your opinion on BEL, levels to keep an eye on here?
So, Agam, if you'll recall, even in the Diwali show, that we discussed, BEL was one stock that actually stood out in the defense space, not only from the fact that, it hasn't really taken as big a knock as, some of its peers in the defense space have, but also the recovery on this one has been steadier. And, I'll take heart from the fact that it's not given that breakout rally which can really fizzle out. It's gradually moving up. Now, the reason that it's perhaps, consolidating or hasn't done much for the past 3 or 4 sessions is that if you see on the options front, the 300 call strike price has a massive open interest. So I think it'll take some doing for the stock to cross the 300 305 zone, and you might perhaps find the stock retracing from those levels and consolidating around the 290 300 band, and we'll take that right now. Once you see a considerable move or a substantial move above the 305 mark is where the momentum will kick in. The short covering will also start coming in, and then you can gun for targets of 330. And then once that is taken out, perhaps even a 350 on BEL. But it looks like it may not be, a vertical rise, might be more of a steady move. But the fact that the stock has made a good base and is now starting to recover is a good sign that, if you want to add it from a medium-term perspective, then from the defense space, this is your stock.
Okay, so that's the view on, BEL. Let's talk about two more other interesting stocks that are, and the way things are panning out here. The first one is Trent. What we're seeing is a little bit of a recovery. It's made a low yesterday, and I'm talking about the future specifically. It's made a low yesterday, and a lot of traders will start thinking about whether or not this is a good time to get back into Trent. So the question remains. So let's pose this to Sneha. Sneha, how are you reading cues into this one? Would you venture forward and perhaps initiate fresh longs here? Do you think that the decline is done, or would you want to wait for more cues?
See, looking at the overall correction, and especially if you look at the weekly chart, this counter has managed to, at least trade near the 20 exponential moving average now. It has rebounded precisely from the 61.8% retracement. So that is very interesting. So if someone wants to go ahead and long, I think yesterday's low should be the stop loss, which is placed, which is around 6,210. And upside, any move at least beyond 6,750 would be very interesting. So I believe if someone wants to go ahead and long, wait for a dip, keep a stop loss as 6,200, and any move above 6,750 would be very interesting, and which can bring some momentum in this counter, and that that can bring this counter at least above 7,000 mark. So I think someone wants to go ahead and long, keep a stop loss as of yesterday's low and go long.
Yesterday's low becomes your stop loss if you're considering a long trade on Trent. It's time now to take a few queries. We've got one coming in from Rakesh, who writes in from Pune. He's holding ONGC 265 calls at a premium of 6. Kush, you want to have a go at this one? ONGC numbers were disappointing, brokerages are not enthused, and crude prices aren't supporting the counter. What do you recommend Rakesh should do? He's paid a premium of 6 on the 265 call.
So, Sabina, see, the stock's not really done, all that great for itself. And, if you see the resistance zone comes in at around 275 and 217, that's where the call option, base also comes in. He's in a bit of a loss. I'm not sure if, this stock has enough and more to perhaps, break those resistance bands just yet. Plus, the theta will also start acting up. My suggestion would be to exit out of this one. If he does want to stay on, then perhaps 2 rupees is your stop loss too. But my suggestion would be to exit, because even if the stock is trying to find base, there isn't really any kind of momentum that the stock is getting. And as time passes by, he'll need more of the momentum play to be in any kind of profit. So not a bad idea to perhaps exit this one at the moment.
Sneha, one stock before I have to wrap this conversation up is on Jubilant FoodWorks. This is the stock of the day. Volumes are healthy. The commentary fundamentally was positive. I think brokerages also generally seem quite impressed. At 650 is where I think the resistance is sitting. Do you recommend a long trade at 650 on Jubilant, which is the current market price?
At current market price, I won't suggest, but in case of any declines towards 630, 620, that would be zone wherein you can add fresh long. I believe then we may, we can at least target around 680 for this counter. The overall chart structure looks good, but yes, at this level, I would say that one should avoid being very aggressively long. But in case of any dips, at least 10 to 20 points down from here, one can go ahead and long for the target of 680.
Thanking both Kush and Sneha for joining us and taking us through their views on the markets. With that, we shift focus to the commodity space, and we now have Vandana Bharti. She's the AVP at Commodity Research at SMC Global, who joins us on the show. Vandana, good morning and thanks for joining in. I reckon that the obvious question then will be about gold and silver. We did see a lot of bullish calls coming in over the course of the last week, but it does seem like all of them are now turning bearish. What's your assessment here?
Yeah, all of a sudden we have seen many bearish factors in this counter because even prior to election, Trump was quite sure that he will try hard to stop the war of between Russia and Ukraine and Israel. So yes, geopolitical war premium is going down in gold counter because it is known for safe haven buying, and additionally dollar index is 4 months high, VIX is going down, and Dow Jones is making new high. So these factors are bearish for gold, and all of a sudden we have seen there is a correction in the market. But yes, this is a very healthy correction because we have seen consistent rally in gold. So for today trading session, I'm still a seller in this counter. I'm expecting that in international market $25.84 we can see in near term, and where we can see aggressive physical as well as in investment buying, because overall ETF is a net buyer after 3 years of downfall. So for today trading session, one should go for sell near the level of 75,350 for the target of here 75,100 with the stop loss of 75,500, and overall positionally it can see 74,500 kind of level on MCX.
That is the story with gold. What happens to black gold? How are you feeling about crude? It's declined as well, and given Trump's love for crude, it seems like they could are producing more oil. I think downside bias still there on crude, you think?
Yeah, even in tenure of Biden, we have seen record crude oil production in US, and OPEC was going to unwind the production cut after December onwards actually. But now we can see that demand is steady, but yes, supply side is increasing, and China, which is the second largest consumer of crude oil, it is not giving any positive sign for crude oil. The import is continuously going down. Stimulus was underwhelmed for the market, and yes, every data is showing a negative side, and October data is showing deflation is still haunting the country. So yes, these are the bearish factors for this market. Overall, what happened new is that all of a sudden war premium is going down. Because of that, and talk of ceasefire is continuously giving downside pressure to the crude oil prices, and we are expecting that now there should be the prices should go down near the level of $66, and it should make a range support between the $64 to $66, where even hedge fund should come there, because this is ultimately a very strong support for crude oil, and every time whenever it reaches towards the level of $64, OPEC jump into the market and they go for production cut. So this is alarming level for crude oil world, and for MCX, I'm still a seller in this counter. One should go for sell near the level of 57.50 for the target of 56.80 for the with the stop loss of 57.90, and 5500, 5400 is a very strong support for crude oil on MCX.
Okay, Vandana, we leave it at that. Thank you for joining us and giving us your views on those very crucial commodities there. With that, we're completely out of time on this edition of the FNO Show. We have the small and the mid-cap show coming up next. Stay tuned in.
When the whole day passes like a blur, The news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
When the whole day passes like a blur, the news just whizzes past.
Hello and welcome. You're watching the Small and Mid Cap Show. I'm Mahima Vacharjani and with me is Megha Barve. Before we move on to the interesting managements that we have lined up for you in today's Mid Show, let's take a quick check on how the markets are panning out at present. In terms of the Nifty and Sensex, they did see gains in the early trade today, but right now the markets are seeing a tad bit of pressure but trading flat and almost nearing its day's lows as we speak. The Nifty 50 is trading flat at 0.02%. Let's pull up the Sensex and see where it is trading at present. Sensex has had a wide range of trade today. It's trading in the range of 420 odd points and it's also trading flat at around 0.05%. The broader markets on the other hand are performing better than the benchmarks, and after almost 2 weeks we're seeing good day of trade for the broader markets. The mid cap 150 is up around 0.3%. The small cap 250 is even doing better, up around 0.5%. Let's pull up the bank Nifty and see where the bank Nifty is trading at. What are the levels it's currently trading at? Well, the bank Nifty is facing pressure, down around 0.3%, trading almost at its day's lows, trading around the 51,700 levels. Let's pull up the contributors on the Nifty and see what are the counters in green and what are the counters in red. It's the HDFC Bank stock that is pulling in fact, that's weighing down on the Nifty, 52 odd points weighing down on the Nifty. But some counters that are in green and keeping the Nifty in check include ICICI Bank, RIL, Bharti Airtel, Infosys. Let's pull up the sectors and see how are the sectors faring out into trade as we speak. In the start of the market, we'd seen a lot of sectors in the green, but the Nifty Bank has taken a U-turn and it's in red right now. The Nifty FMCG is also seeing pressure today. It's down around 0.6%. Nifty Auto also facing pressure, down around 0.6%. But some counters that are really doing well, and it's the Nifty Realty that's really doing well. Some relief on the Nifty Realty after the longest time, up around 1.8%. Nifty Media up around 0.8%. Nifty Pharma also doing fairly well in trade today, up around 0.7%. Let's also pull up the advanced decline ratio and see how the breadth of the market looks like. Well, it's in the favor of the advances, 1100 odd advances versus 940 odd declines. So it's almost, in hand in hand when it comes to advances as well as declines. In terms of some stocks in focus, HMA Agro is one of the stocks that is on my radar today. On the back of its Q2 earnings, the stock has done fairly well in trade today. Year to date, the stock was down around 41%, but today it's locked in upper circuit and up 10% in trade today. And this is on the back of strong Q2 earnings where revenue saw an uptick of 22%, EBITDA almost doubled, margins have also grown by more than 200 basis points, and net profit has gone from 5.6 crores to 53.4 crores. So good day for HMA Agro. Another stock which is also doing very well in trade today is Jubilant FoodWorks. After the longest time, QSRs like Jubilant FoodWorks are doing well today on the back of Q2 earnings. Good set of numbers. The stock is trading at 8.6% higher. But another company that is in focus on the back of its Q2 earnings is Shree Cement, and we are now joined by Mr. Neeraj Akhori, who is the MD of Shree Cements, who joins us now. Welcome to the show, Neeraj. My first question to you would be, your sense as to how the quarter has gone by. Cement overall as an industry has seen a lot of pressure this quarter particularly. And do you expect Q3 also to pan out the same way, Q3 and Q4 as well?
So, good morning. Quarter two was challenging, I think, largely for two reasons. One was that there was a prolonged and quite an intense monsoon which we experienced in the last quarter. But there was also a softening of demand because of some delay in the capex spending, especially by the government. But quarter two is now gone, and I think we have gone through the difficult phase. Going forward, quarter three and quarter four, our expectation is that demand will be stronger. We do believe it will be in the range of 8 to 9% growth in quarter three and quarter four, and that should augur well for the industry.
Corey, when you said 8 to 9%, do you expect this to be the demand growth on a year-on-year basis for H2?
Absolutely. I'm talking about H2, demand growth at 8 to 9%. My belief is that in cement, it's more of a delayed demand rather than damaged demand. So what we have lost in the first two quarters, that demand should come back in quarter three, quarter four, plus the normal growth of these two quarters. So 8 to 9% is our estimate for the growth in the next two quarters.
Query. And like the company mentioned, Q2 focus was more on price and premium products rather than volume growth. Will the same strategy be applied? And is there a targeted mix? This quarter it was 15%, the sale of premium products of total sales. Was a targeted mix for this to grow in the future?
No, as we have a very clear strategy of growing with the market. If the growth is in 8 to 9%, our growth should also be around the same lines. Having said that, the focus on premium products will continue. We have grown to about 15% now. We were about 9% a year back, and we will in the going quarters we will try to first stabilize our premium product sale at about 15%, and then also grow it in the coming quarters to higher levels.
Neeraj, I want to understand that EBITDA per ton for this quarter has gone down by 8% YOY. But what's the kind of target of EBITDA per ton that you're aiming at by the end of FY25?
So the way we look at it, what we can do is to work on the cost and work on the revenues. There is a demand and price scenario that plays out in the market, on which it's difficult to comment on the price scenario, how it works out. But we will continue with our focus on cost optimization. As you have seen, even last quarter, we have reduced our cost by about 8% YOY basis. And this focus will continue even in the next two quarters. We would try to give a lower cost versus previous quarters. So we are hopeful that with the demand going up and our cost strategy working out, with a focus on premium products, we should see a better EBITDA in the next 2 quarters.
Mr. Khoury, so if you can't give us a EBITDA per ton range, could you maybe give us a targeted on the per ton cost savings that the company expects to have?
We have reduced the cost by about 8% last quarter. In the Q3, Q4, we would like to have the kind of a same numbers, 8 to 9%. Remember, this estimate is also based on the fact that the fuel prices have softened, and we do expect that this will continue in the given next 2 quarters as well. For Shree Cement, we have secured procurement of fuel for next few months. So based on that, we sense that similar cost reduction numbers can be achieved even in the going forward quarters as well.
Mr. Khoury, how is pricing playing out? I mean, we have seen price hikes, but not all of them have sustained in the months going by. Are we seeing some green shoots in any regions? And what are your region-wise expectations in terms of pricing going forward?
So, this is one topic on which is very difficult to estimate. Pricing has been a play of demand and supply. Since we are estimating a better demand growth in the next few quarters, my view would be that the pricing environment will be favorable, and we should see some price increases across the country. But this is difficult to exactly pinpoint when and how much. But going forward, in my view, the pricing environment should be better than what we have seen so far.
Neeraj, from what I understand is that the entire cement industry is going through a consolidation phase. You know, we're seeing the big ticket size cement industries acquiring the smaller ones. I just want your view on whether, you know, this kind of consolidation makes sense to you, and what are your views as to, you know, your methods or maybe your strategies in place to expand going forward. Will you also be looking forward to consolidation going forward?
So we have a very focused strategy on organic growth. We believe that it gives us a better return. It gives you are able to create new capacities at a cost which is better than acquisition cost. Of course, it takes a little longer time. We are not averse to acquisition opportunities. In fact, we do participate, and if it meets our strategic fit, our expectations, we'll be too happy to participate and acquire new assets. But for now, the focus is to grow organically. As I said, we are commissioning about 12 million tons of new capacity in the coming months, in next year. Also, we believe that with our organic strategy, we are able to put plants to our specification, our design, that gives us a sustained cost advantage over the next several years. My view is that between a new plant and an old plant, at least a 200 rupees cost gap exists, and that should give us strength in the next several years. Yeah.
You said that the organic expansion provides better returns, but you know, from what we've seen, the kind of deals that have happened, they've happened at a lower, you know, EV per ton on how much it takes to set up greenfield costs. So in terms of Shree Cements, what's the average return on investment that the company is seeing in terms of its organic expansions?
So we build plants at about $75 per ton. Acquisition costs are much higher to that. Yeah. And that is where we say that at $75 per ton, plus the fact that these are new plants and you can design it to your specification, giving it a sustained cost advantage, we believe this is the right strategy to follow. We have been doing it for the last several years, and it has worked well with us, for us. But as I said, we are not averse to any acquisition. This is not true. We are exploring, and wherever we get an opportunity, we do study it deeply and try to see what kind of a value we bring on the table with that acquisition.
And in terms of, you have 15.4 million tons per annum of ongoing projects. Most of these will be commissioned, Q1 of FY26. So in terms of FY26 expectations and how you expect annual capacities to start growing. I know you have a target of 80 MTPA, but how does that take place in the next 3 to 4 years? Could you give us more insight on that?
So next year we should be reaching closer to 70 million tons in quarter 1 of 2025. And then we have some other projects which we are now starting, and the balance 10 million tons should be done in about 14 to 16 months. So in FY27, we should be reaching the 80 million tons target.
And in terms, with all these capacity additions taking place across the board, in the industry, do you think the future demand will, match up? Because then you'll have lower capacity utilizations, which is already a trend that we're seeing in the industry right now.
So I am very convinced that India is a long-term demand growth story. The basics of demand growth, be it on a per capita consumption, which is very low compared to the world, or urbanization, which continues to be very lower than what we see in other countries. The cement demand growth should not be an issue in the longer term. We see that at 8% to 10% growth mid to long term is eminently possible. And therefore, even if new supplies are being added, it will not create an overcapacity in the mid to long term.
Lastly, my last question to you, 4,000 crore capex per year for the next 4 years. How will this be funded? In terms of your debt levels, do you expect an increase?
No, we will continue to fund it mostly through internal accruals, which are very healthy. And we should be able to fund these growth projects through internal accruals.
Right. Neeraj, thank you so much for giving us those insights on Shree Cements, and in fact, the insights on the entire cement sector as a whole. The cement sector, in fact, has seen a lot of pressure, Mihika, this time.
Interesting that his greenfield costs were lower than the deals that are going, and that's why maybe we've not seen many acquisition deals from Shree Cement. And then that makes sense, because then you have other companies that keep consolidating while acquiring other companies.
Absolutely. But, moving on, another company that is in focus on the back of Q2 earnings is Bank of India, and it is in focus after the lender posted a solid 63% jump in net profit in the second quarter. And my colleague Vishwanath spoke to the Managing Director and CEO, Rajneesh, and here's what he had to say about the quarter gone by.
We have shown a very healthy net profit in this quarter of 2,500 crore plus, which is a growth of nearly 63%, as you rightly said. This is at the backdrop of our improvement in the non-interest income, which has now again touched more than 2,500 crore of non-interest income we have touched. And it is also because of two main items, which is one is the treasury income, and the next item is with the recovery in the return of accounts. Within that recovery in return of accounts, we have another very good number, wherein 7 to 8 NPA accounts we have done some recovery, so which has contributed to a non-interest income of more than 2,000 crores. That is for the first time in the quarter for the bank. And overall, the net interest income was also there, had a healthy growth of around 4 to 5% in the net interest income also. Both of them have contributed finally to the improvement in the net profit of nearly 63% on a quarterly YOY basis.
I have a question with regard to your core business, the advances and deposit growth specifically. Your advances growth are up about 14.5%. Compared to that, your deposit growth is still less, about 10.5%. And the gap between the credit and the deposit is still significant. I just wanted to get a sense as to what you're planning to do at the bank to bridge this gap, to have a slightly stronger CD ratio for Bank of India.
Yeah, as regards the growth is concerned, if you see the global business, our global business has grown by nearly 12%. Within that, the deposit has grown at around 10% globally, and the advances have grown at 14%. However, if you see the domestic business for Bank of India, our domestic business has grown by 13%. Our deposit at the domestic level has grown by 12%, and the advances have grown by 15%. In the overall global book, we have 15% international book, which is a significant number. Within that, if I can tell you, our deposit growth has been much better in this quarter than the previous quarter. And the gap between the deposit and credit growth, definitely, as you say, in percentage terms, it is there. In the absolute number also, we have grown by nearly 1.5 lakh crores on a YOY basis. Out of that 1.5 lakh crores, deposit has grown by around 72,000 crores and advances has grown by nearly 78,000 crores. So the gap between the growth in deposit and the credit growth is met out by through the other sources, which are typically we have taken 5,000 crore of infrastructure bond, 2,000 crore of 2,500 crore we have raised through the Tier 2 equity. Apart from that, we have done some refinance also. We have excess SLR to the tune of more than 40,000 crores, against which also we have done borrowing. All these together contributed to the resources side for meeting the credit growth which is there. So whatever the numbers are there, as regards the CD ratio are there, you are seeing a high CD ratio as far as the global CD ratio is concerned, which is at 80%. But if we see the domestic CD ratio, it is only at 77%, which is a very healthy number. The overall CD ratio is high because of the fact that at the international level, our deposits are normally equal to the advances, and the difference is normally taken from the advances which we take, the credit which we take from short-term borrowings which we take from high street banks, because of which the deposit and advances are equal. So overall CD ratio at domestic level very healthy at 77%, and globally because of the significant portion in international book, it is at around 80%.
Let me come to the slippages side of the story. Now, this quarter you saw slightly elevated slippages, and largely because of one corporate account, I'm assuming. This is the MTNL account that has come out. I wanted to get a sense from you what the outlook is on the corporate slippages for Bank of India. Do you think that any further accounts could slip, adding some issues with respect to your slippages at the end of the quarter?
So slippage, if you see, our fresh slippage was 2,500 crores in this quarter as against 1,900 crores in the last quarter. So as you said that there is only one lumpy account which has slipped, because of which if you see in the presentation also, it is around 1,000 crores for us, because of which the overall slippage has increased. So had this not been, our slippage would have been lesser than the slippage of 1,900 crores which was there in last quarter.
Yeah.
So because of credit cost and the slippage ratio has increased. However, that one-time slippage of that corporate account had not been there. So both our credit cost and the slippage ratio would have been much better than the June 24 numbers. However, this is an aberration for this quarter only. There is only one account which was under stress, which has slipped. We do not anticipate any further slippage in the corporate book as of now.
Let me also come to the specific account that we're mentioning. We've had a lot of banks come in and take some action. The government is promising some amount of resolution since it's a public sector account at the end of the day. At Bank of India, are you looking at any remedial measures as far as this account is concerned?
So as far as this account is concerned, we have done the provision as per the RBI guidelines, IRAC guidelines, number one. Number two, we are in talk with the management of this account for a resolution process. It can be restructuring also or some resolution process. Talks are going on, and we are very hopeful that some resolution will come out in the ensuing 2 quarters, so that we are able to do some recovery or some restructuring out of that.
Okay. I want to get some commentary on the unsecured side of the story as well. So a lot of banks are talking about slippages within this specific segment. There are talks of consumption slowing down, especially in the urban side of the story. At Bank of India, what are you seeing? What are the dynamics that you're seeing on the unsecured book?
So if you see our retail book, it is at 1,21,000 crores. Overall, and it has grown by nearly 21%. Within the retail, if you see the unsecured book, that is around 15 to 16%, within which specifically the personal loan book, it is at around 11,000 crores, and it is also going aggressively. Within that personal loan book, if I tell you, the NPA is only up to 100 crores only, and it is 0.9% of the total personal loan book. SMA 1 and 2 also is around 300 crores. So overall stress within the personal loan book, SMA 1 and 2 plus the NPA is around total 400 crores, which is within 3.5% of the total personal loan book of around 11,000 crores. And this personal loan book is only 1.98% of the overall retail book of 1,21,000 crores. So there is not much of a stress in our personal loan book, which is typically unsecured. And we do not see any cause of concern as of now on the unsecured lending part of the Bank of India loan book.
Are you planning to then ramp up the unsecured book because that would give you some amount of yield? Your NIM has fallen quarter on quarter. Just give us some insight as to what you're seeing.
So as far as our personal loan book, which is unsecured, is concerned, we are giving at a CIC score of more than 750. And most of these borrowers are typically borrowers who have taken a LAP or a housing loan from us, and they are coming for a personal loan. And otherwise, other than that, we have a cash flow also attached to those personal loan accounts. And most of these accounts, the salary account is also available with Bank of India Saving Bank. So these are the guardrails which have already placed. And as I told that the total stress SMA 1 and 2 plus NPA is hardly 400 crores out of this 1100 crores. So whatever the growth is happening is a natural growth through the digital channel and also through the physical channel from the branch level. And we are growing it because the base is slow. We are seeing a percentage growth which is on a higher side, but the strategy is to continue the growth in the personal loan book with all the guardrails which I have explained.
Okay. And on the corporate side of the story, so I just wanted to get a comment as well there, because other banks are ramping up their corporate loan growth. As far as your book is concerned, do you think that will it end up growing faster than your retail book at any point?
Yes. So if our corporate book had grown at, if you see the data, at around 9% for us in this quarter, but typically in this quarter we had a payout of corporate loans of around 18 to 19,000 crores in the July month. In fact, by the first week of July, there was a payout of around 18 to 19,000 crore in the corporate loan side, which reflected also in the lower net interest income for the bank during this quarter. Because the credit growth which happened during the quarter and predominantly in the month of August and September, the growth happened. So because of which there was a lower side of interest income on the corporate side. But however, having said that, I would say that as far as the pipeline is concerned, we have a very healthy pipeline of around 70,000 crore plus as we speak. And out of which the corporate pipeline is around 55 to 60,000 crores, and we are very confident that the corporate growth with the ensuing credit season which is coming in Q3 and Q4, the corporate credit growth will pick up, and definitely it will be in a double-digit figure for Bank of India in Q3 and Q4.
Okay, I want to ask you one last question with regard to the fundraising plans that the bank has announced. 2,500 crore on the AT1 bond and about 5,000 crore on infra bonds. How confident are you? How soon do you think this fundraising will come in for Bank of India? And what does this do for your capital adequacy as well?
Yeah. So as you rightly said that we'll be raising around 5,000 crores in the infra bond. 5,000 crore we have already raised in the H1, and another 2,500 crores in the Tier 1 we'll be raising. Tier 2 we have already raised in the H1. So as regards the timing of it, we'll be going to the market at the opportune time. Once we see that the position is better and the yields are better, that time we'll be hitting the market for both the infra bonds and the Tier 1 bonds. As regards the capital adequacy is concerned, as on 30th September, our capital adequacy is a healthy number at 15.63%, 16.63%, and this is against the RBI mandated guidelines of 11.5%. So as far as the risk weights are concerned, so with the RWA density of around 45, we are having enough cushion to have a credit growth of nearly 4 lakh crores. And if we have a RWA density of 100, still we can have a credit growth of more than 1.5 lakh crores. So we are adequately placed as far as the CRAR is concerned, and this is just one more effort to boost the CRAR for the long-term credit growth of the bank.
Right, so that was the management of Bank of India guiding us as to how the quarter has gone by and how FY25 is shaping up. But shifting focus to Newland Labs, it's the other counter that has gained almost 13% in trade today, and this is on the back of failure of AbbVie's drug in phase 2 trials, and this will benefit overall Newland Pharma. And we have Varsha joining us with more details on that. Varsha, what are you picking up?
Well, thanks Mahima for that. So yes, one drug can change the financials of a company, wherein we are seeing Newland Lab is gaining traction. This is on the back of AbbVie's schizophrenia drug, which has failed in trials. Now Karuna Therapeutics has received FDA approval for the similar kind of product called CAR-XT in September 2024. Now how Newland will benefit is, Newland has been working with Karuna Therapeutics on this product since 2019. Newland will benefit by supplying the active pharmaceutical ingredient that is the key product, the main API for CAR-XT. Now this partnership would boost Newland's revenue from CDMO business when CAR-XT is launched. CAR-XT is expected to make sales of around 7 to 10 billion US dollars during its patent period, creating a big opportunity for Newland. So this is the reason we are seeing the stock is buzzing in trade today.
Rasha, thank you so much for breaking that down for us. But with that, we're completely out of time on this edition of the Smith Show. We'll be right back. More news and updates on the other side.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that'll help you move with the tide.
An unmissable trade.
If you want to be in the money.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew, and with me is Mahima Vajrajani, and we'll take you through the next 1 hour of trade. Let's take a look where the benchmarks are. It's as flat can be this afternoon, or not yet afternoon, but close to that point. You have the benchmarks just about unchanged from yesterday's close. And I was looking at the moving averages just a short while back, and we are currently about 650 points above for the Nifty 50 from the 200-day moving average for the Nifty 50. 23,500 or thereabouts, it's where the 200-day moving average is. We'll see how long we hold on to this level. It seems like we're entering some sort of consolidation after the kind of rapid descent that we've had. Let's take a look at the broader markets. In fact, they're looking better than the benchmark right now. Gains of about 1/3% or so for the mid-cap index and about 0.6% or so for the small-cap index. And so, therefore, I would hazard a guess to say that the breadth has looked much better than it has in the recent past. It's not too much of a gap between the advances and declines, but at least today in trade, you have more advances than declines. Let's take a look at the sectoral performers then, and also tell you where the green is on the screen. And you have the likes of realty as well as media and pharma that are gaining ground. Realty particularly up and about in trade today. gains of about 1.75% or thereabouts. Auto down about 0.8% in the worst performer. But Mahima, what stocks are you specifically looking at? We're entering the last leg of the earnings season, so a lot of them reacting to earnings.
Absolutely. One specific stock that has been gaining a lot in trade today is HMA Agro, and interestingly, the stock has been down 41% year to date, but today the stock is locked in upper circuit with 10% of gains, and this is because good set of numbers. Revenue is up 22, margins have significantly improved, and net profits have gone from 5.6 crore to 53 crore. So HMA Agro is one of the stocks that is gaining in trade today. Another stock in focus on the back of Q2 earnings is Hindalco. Let's see how it's doing in trade today, and revenue was driven by aluminium upstream and downstream segment for this stock.
Better than expected.
It did start with good gains, but right now it's trading much lower than the start of the trade. Let's also pull up Newland Labs, AbbVie's schizophrenia drug. Yeah, I did ask you as to how we pronounce it, but yeah, I ended up pronouncing it in the wrong way. But yeah, whatever the drug is, has disappointed in the second phase trials, and this will benefit Newland Labs, which is why the stock is seeing significant gains, up 13% as we speak. Another stock that is in focus is LIC India, after JP Morgan has double upgraded it to overweight and increased the target price to 1075. The stock is up 2% as we speak. But Alex, the stock in focus for today's Ask Profit has to be Jubilant FoodWorks. It's one of the stocks in the QSR space that has seen gains of over 7-8% almost today, and this has not been the case so far for the QSR space overall. The stock is seeing so much gains after its Q2 earnings. Good set of numbers, like-for-like growth overall was at 2.8%, and delivery was at 11.4%, which has outpaced most of the QSRs. Monthly active users went up by 18.5%. Online is something that's aiding growth for the company, and the company is continuing to gain market share is what the management has guided. In terms of the numbers, revenue was up 42%, EBITDA up 43%. Margins have remained fairly in the same range, but net profit was down 31%, and this is because the overall depreciation has gone up, interest has gone up, and this is because of store expansion that are on the cards of company. Dine-in sales, however, did see pressure. It was down around 5.6% year-on-year basis. But our online sales is an outlier for them because, they've taken certain initiatives like delivery fee waiver, 20 minutes delivery, and new product launches as well. So all of these, combined together are working in favor of Jubilant FoodWorks, and which is why the stock is seeing significant gains.
Let's see what our analysts have to say about them. Let's talk to Asta Jain, Senior Research Analyst at AM Securities, as well as Swati Hodkar, AVP Technical Research at Nirmal Bang. Thank you so much, ladies, for taking the time as always, and good morning to you. Asta, I'll come to you first. There was a view a short while back, and there were some reports going around that there is a loss of market share on account of the cropping up of so many options, particularly in the metro cities in the QSR space. And so therefore, Jubilant FoodWorks had lost ground. But seemingly the results are significantly better than people had anticipated. What's your view on the stock?
So my idea here is that what is the major focus of this result was the SSG growth, that is same store sales growth. So that was ahead of the expectation, because what we are seeing that now this QSR space is continuously facing challenges from the other players, especially if I talk about the pizza category. And in that scenario, if the company is able to post their SSG growth, and I think the SSG growth was around 1.5% ahead of the expectation. So that has really played a crucial role in what is we are seeing right now, a rise in the prices. And I think going forward also, the stock prices will continue to move in the northward trajectory. We are positive on this counter. Recommending a hold as well as buying on dip strategy can be applied to this counter with a price target of around 725 odd levels.
Right. To the viewers who are just tuning in, you can ask all your stock related queries, whether they're fundamental or technical, on the number that is flashing on your screen. And I'll start with the first query of the day, that is from Mr. Nanda. His query is on Chambal Fertilizer, and he wants a short-term view on this particular stock. He's purchased 2,000 shares at 500 apiece. Swati, I'll come to you for this one. Chambal Fertilizers, your view on how it is looking on charts?
Hey, good morning, all of you. Definitely the view is positive on this particular counter. From the last few trading sessions or a week, say, we can witnessing a selling pressure. But as of now, my RSI is showing a positive crossover from the downwards levels. Now, today, the stock managed to give the breakout of 20 DMA and is also sustaining about the same levels. 510 is the immediate resistance level. Any move above that level will extend this kind of a rally towards to 540. So my view is positive. I'm looking for a target short-term period of a 540 levels. Downside, it has a very crucial support at around 470. So keeping that stop loss, one can definitely hold their long positions.
All right, Balwant has got the next question. He managed to get allocation of IRCTC at the IPO price. And, he's got an allocation during the IPO. He's got 200 shares that he's therefore gotten at issue price, which if I remember correctly, is around that 300 mark or just above that 300 mark. Stock is currently trading well above that, though it's not done too much in this year. What's the view, Asta? It ran up very, very quickly. The question is, are you positive on the business for the long term?
Positive on the business, but what we have seen that the performance of the catering division, that was not that strong. And in fact, the internet ticketing business that has started facing some sort of, headwinds, I think in the since past 2 quarters. So that is what overall the picture right now is. But still, we are expecting that this segment of the catering division will going to perform better. We are estimating a bottom line CAGR growth of more than 5%, while the top it should be more than 10%, while the top line CAGR growth of more than 5%. So in that scenario, we are positive on this counter, recommending a hold with a price target of around 885 odd levels at the initial juncture.
The next question is from Rajan, and he's holding Honasa Consumer since the IPO allotment of 100 shares in November 2023. We've got a lot of patient investors who
Because there is, of course, a large number of investors that look for the listing pop. But we have already, in the span of 5 questions, we've taken two people that have been holding since allotment.
The IPO. Interesting. And I must appreciate the kind of patience that they have. So Rajan is saying that he's a long-term investor and he invests in the horizon of 3 to 5 years, and he's got Honasa Consumers IPO allotment. He now wants to know from a longer-term perspective whether he should keep holding Honasa Consumer or should he switch to Nykaa. Asta, I will stick with you for this one because this is more of a fundamental question. Your view, whether he should continue with Honasa or switch to Nykaa?
I think he should continue with Honasa. The reason being, first of all, there are 2 brands, that is Aqualogic and the Derma CO. Now that brands have started scaling up fast. And in fact, what we are predicting that going forward, in fact, their margins can see some sort of jump in the financials also. So looking after all these things, I think it's better to remain invested in the counter, and recommending a hold on this counter. Initial price target can be set at around 425 to 430 odd levels.
Okay. I'm actually not sure which stock this is. I'm trying to pull up the chart. In the meanwhile, let me actually ask the next question. Let's take a question from Basavaraj, who's asking about Alkyl Amine. He's asking, he's bought at a price of 139.75 shares. He's seeing a loss right now. He's wondering whether to exit at this point. Swati, on the charts, what should you do with something like this?
This particular counter as of now definitely looks positive. On the technical front, it is trading in the high tops, high bottom formations. Upside 2100 is the likely target I am looking forward in the near term futures. 1950 is the crucial support levels provided by the cluster swing supports. So by maintaining that stop loss, definitely one should hold for a target of 2100 levels on the high side.
You might have gotten the counter mixed up, but then we'll get some clarity on that. Let's move to the next question in the meanwhile.
The next question is from Praveen, who's from Hyderabad. Again, a long-term investor. He's holding 100 stocks of KPIT Tech at an average price of 1619. And he wants to understand whether he should keep holding or sell. And if he wants to keep holding this, what should be the stop loss? Or can he add more at the current price is his question. He wants a long-term view. So Asta, I'll come to you for this one. Your view on KPIT Tech?
So regarding KPIT Tech, we are positive on this counter first of all, recommending a hold on this counter. Initial price target which we would like to give to this counter is at around 1550 to 1600 odd level, because first of all, the major focus point is that they have gained the momentum in their revenue growth. So that was the major focus point. When we are seeing the other companies are not able to maintain their growth, the company has sustained its momentum and within the expectation line. And going ahead also, management is quite positive of achieving the strong growth of around 18 to 22% in the future. Going forward. So they have maintained their guidance of 18 to 22% of the growth and the margins. In fact, they have upward revised the margins. So looking after all these things in the scenario when the IT companies are not able to sustain their strong growth, which they have posted in the past, the company is able to maintain its guidance as well as growth. We are positive on this counter, recommending a hold as well as buy on dip strategies can also be applied. Initial price target is at around 1600, but in the longer term, we can expect it to go beyond 1600 as well.
Okay. All right. Hema Bisht, who's writing in from Abu Dhabi, is, and we've got a lot of international viewers tuning in today, all Indians staying abroad. So welcome to Ask Profit. Always welcome. Let's talk about the question though. So she's got Tata Steel, which she's bought at a price of 147. She's got 2,000 shares and she's looking for a long-term view. Should she hold or should she add more at this point? Let's talk about the fundamentals, because ultimately that's what's likely to drive the counter going forward as well. Asta, what's the view on this one? I guess you would have to have a view on the metal pack as a whole.
Yes, so we are positive on the metal pack, but not that much positive, which we were, a few months back. The reason being, we were expecting strong stimulus from the China side, but as of now, the things that not materialize in that manner in which we were expecting. Now, talking about the Tata Steel as a counter, I think the results which they have posted were a decent set of numbers. We have no complaints with the number. And going ahead also, we are expecting the volume to surge. And if any positive come from the China side regarding the stimulus, that will definitely will be an added benefit to the company. So looking after all these points, we are positive on this counter, recommending a hold with a price target of around 165 to 170 odd levels.
So Basavaraj has clarified his buy price was actually 2,217 on alkyl amine. So, so he was in a loss, but I think Swati's view is still relevant.
Yeah, it still holds. Yeah. The next question, Alex, interestingly, is from Tamil Selvan, who's from France.
Yeah, that's what I'm saying.
Yeah, a lot of international viewers. I think Ask Profit is really doing well. But coming to his question, he's bought 100 quantities of Hindalco at current level after seeing the excellent result. And also the future expected growth is very good according to him. Now he wants to know what should be the target price from a short-term perspective, please. Swati, your view as to how Hindalco is looking on charts?
Hindalco, definitely the long-term view is positive. But if you look towards the last 3 years data, the stock has given a very strong rally from almost 300 to now 700 levels. So the profit bookings cannot be denied at the higher levels. For a short-term view is little bit cautious. We might witness some depth towards to 620 levels, and from there onwards again we might witness some sort of a reversal back towards to 700 levels. So if you're looking for a long-term horizon, definitely my view is positive. I'm looking for an immediate target of 700 to 740 levels. So it's a hold from my end.
Old-time viewer of Ask Profit tuning in. He's writing in from Thrissur in Kerala. Denny is asking about, unfortunately, we've stopped taking F&O questions on this show. We've got a dedicated show, Denny, at 10:30 a.m. and that's called the F&O show. The number that you see on your screen right now, that's where you can send questions related to F&O. I'd encourage you to do that. In the meanwhile, if you've got fundamental or technical questions, you can ask them here. Balrampur Chini is the question that we're taking next, and Suresh from Chennai is asking about this. Let's pull up the chart and see where it's currently trading. And based on the fundamentals, he's bought at a price of 510 and he's wondering whether to hold based on your reading of the Q2 results, if you've tracked it. Asta, what's the view?
So Balrampur Chini, I think it can be a hold for the longer term perspective because Q1 was not that strong. And in fact, if I talk about the latest results also, we are not very much optimistic on the counter. So it is a long-term story now, and on that basis only we are positive on this counter, recommending a hold. And initial price target can be set at around 615 odd level.
Should be okay, Asta, with a little bit of volatility in the near term. You could lose out a little bit is what you're saying, right? In the near term.
Yes. In the near term, we can see certain volatility, because what we were not liking in the results, if I take out the other income exceptional item, the bottom line was negative by 6 CR. So that was positive year on year basis in the last same quarter. So Q1 was muted, Q2 is not that strong. So in that way, in the short term, definitely a volatility can be seen because markets are not in good shape, plus the results are not that positive. So that can be the one of the case that stock may see some sort of lower levels, but in the longer term, I think 615 can be set as a target.
So that's the view coming in on Balrampur Chini Mills. The next question is from Kishore, who has a query on Bandhan Bank. He has 30 shares, bought it at a price of 183 per share, and he wants to know whether he should hold, sell or average out. Swati, I'll come to you for this one. Your view on Bandhan Bank?
My view on the Bandhan Bank is really a bit cautious, because from the last few trading sessions, from almost 3 to 4 years, we are continuously witnessing a selling pressure from 400 to now 175 levels. The stock is heading nearest to the oversold zone area. Probably we might find a support nearby 150, 165 levels. At that level, we might find a good support, and then we might see some reversal. So if you're looking for an average it out, I will suggest to wait, let the stock find out a support nearby 165 to 150 that zone area, then we might witness some sort of a reversal from over that levels. So at the current level, you should wait and watch. Policy should be applied at the current levels. Positive momentum can be seen only about 200 levels. If it manages to give the breakout of 200 levels with the decent volumes, then we might see some turnaround in this particular stock, which might take a counter to 240 to 300 levels. So for longer term horizon, view is positive. Short term is little bit cautious. Wait for a average it out position on FD dips towards to 150 to 165.
Okay, 150 to 165 is the range that you should watch out for. Ram from Hyderabad has got the next question. He's asking about Bosch, which is seeing quite a bit of a loss intraday. It's down as much as 4% as we speak. And he's got 5 shares. It is a big ticket price stock, and so therefore his loss is considerable at this juncture. On the fundamentals though, would you hold or sell, Asta? Some pressure, I would think, in the automotive space in certain pockets, and as an auto anch player, one would assume that this company is going to face the brunt of that. But would you hold for the long term?
So if I talk about, first of all, Q1 results, because I think Q2 results has still not come out. So I really need to check. But the Q1 results were also not very great, because there were the margin pressure which was there. And I think it will going to definitely continue in the Q2 quarter. That is what our idea is. So that is one of the reasons. Yes, we are not positive on the automobile space, especially in the passenger vehicle space. We are not positive at all. But talking about Bosch, it is not directly related in the passenger vehicle segment, although it is an auto anch. But still, we are not positive on the automobile ancillary also. So definitely, I think we can see some sort of pressure in the stock prices going ahead. But here the quantity is very less. And in case if I ask him to exit, then definitely the losses will be huge. So it's better to wait for 2 more quarters, because we are not even positive for the December quarter. But however, in March quarter, we are seeing some sort of green signs in the financial performance. So if the horizon is 6 months, then remain invested in the counter.
All right, so that's the view coming in on Bosch. The next question is from Praveen, who's from Hyderabad. He's bought 4,000 shares of Nykaa at 187.68 a piece, and he wants to know as to what could be the next strategy for the stock. Swati, I'll come to you for this one. It's expected to post its Q2 earnings today, but how does Nykaa look to you on the charts?
See, Nika as of now into the sideways phase momentum, if you look on a larger degree as such, it just stuck within the range of a 160 to 200 levels. Upside, definitely, I believe more upside momentum can be seen once the stock manages to give the breakout of 195 levels, because two times it's tried to attempt to reach up to that level, but somehow it's failed to maintain the positive closing above the same levels. But looking towards the overall structure on the daily or the weekly charts, I believe we might witness some sort of a good positive move above 200 levels, which might take a counter towards to 220 to 230 levels. So at the current levels, definitely one can hold on downside. It has a very crucial support of 170 levels. So by maintaining that stop loss or holding that support levels, one can hold their long positions for immediate target of 220.
Once again, want to reiterate, some of you are asking about F&O related questions. I would encourage you to ask on the other number, which is now on your screen. This is for the F&O show, and that is live at 10:30 a.m. All right, so let's take the next question on electro steel casting. We've got viewer Deepak, who has bought at a price of 192, and he's looking for a long-term view. He has defined that, Astha, as 3 years. So what can he expect on the fundamentals over that period?
For 3 years, I think one can hold the stock, but in the near term, we are expecting some sort of not that sort of great momentum. The reason being pressure in the bottom line of around 14% fall, which we have seen in the Q2 performance in the bottom line. So I think when there is a degrowth, definitely markets are not liking that. So maybe right now, today it is up, but in the longer term, we believe that the stock can gain some momentum, but in the medium term, that is around 3 to 6 months time horizon, the stock is not looking that great. So idea here is to stay invested in the longer term, that is the time period of more than 6 months, and price target can be given here is at around 175 to 180 at the initial levels.
Right. The next question is from Ishant, who's from Rajasthan, and his question is on CDSL. He's bought 300 shares at 1507 a piece. He's saying that there was a time when it crossed 1678, but now it's trading currently at 1550, correct, 1551. He wants to understand whether he should wait or there is more downside possibility going forward. Swati, I'll come to you on this one. CDSL, how does that look on charts?
The chart is definitely positive. 2 days back, we have seen a 52-week high at around 1670 levels. At the current level, it is just trading near the support levels of 20 days moving average, which comes to at around 1530 levels. So as long as it holds that level, definitely my view will remain a positive for short-term period as such. But since the market is correcting and already the counter is trading nearby the all-time high levels, I will suggest to maintain the strict profit stop loss. So at least you can pocket in your profits in this kind of volatile market. So by maintaining a 1530 stop loss, you can hold your long positions. Again, any move above 600 level will see the extension of this rally towards to 1700, 1740 level. So it's a hold from my end.
On CDSL has done pretty well for itself, nearly 75% gained over the last 12 months. Hyundai is the next counter we're talking about, and we've got Rupa, another investor who's been holding since IPO. It is currently trading at 1825. I cannot remember whether or not it listed. If we can pull up the listing day, since listing day, so it's down, yeah, so there you go. So she has pointed out that she is seeing a bit of a loss in this. On the fundamentals, Astha, would you hold on to this?
Yes, definitely hold on this to this. In fact, on the listing day, I came on your channel and I predicted that there might be a fall till the level of 1800, and at between 1800 to 1850, it can be a good buy also. But as we have seen that the stock fall till the level of 1750, and after that it moved up. But here my idea is, as I was saying, that we are not positive on the passenger vehicle segment as of now, looking after the numbers. So I think it might take another 1 or 2 quarter more to show good numbers in the industry, and then it will have a positive effect on the counter. So idea here is to remain invested in the counter for the longer term, and in the longer term we are quite optimistic. But in the shorter term, the stock will hover in the range of 1750 to 1850. That is what our idea is. So stay invested just for the longer term point of view.
Okay. Asta and Swati, do stay with us. We'll be back on the other side to take more questions. Viewers, on the other side of this break, we've got the management of Asian Paints. Now, remember, it was beaten down yesterday, so you will want to hear from the management what they think about the outlook going forward. We'll listen to a little bit of what they have to say, and then we'll come back to take more of your questions. So do stay tuned.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow.
Welcome back. We promised you a conversation with the Asian Paints management, and they are talking about the outlook going forward. Here's a small slice of that conversation. Listen in.
You know, as I said, unless the options are very clear, because we do not know that whether it is part one business or part other business they are looking at, or they are looking at any other way of alignment. We need to be cautious in terms of the fact that unless the options are very, very clear, and if the options come in to some extent, I think only then we can decide whether we should be kind of getting interested in terms of taking it or not to that extent. Beyond knowing that, I think it becomes very, very difficult to kind of say that you in generality are kind of looking at that whole area to come about.
Okay, so this was an important clarification because it emerged in a conversation somewhere off camera, and you know about this, Mahima, the potential acquisition of AkzoNobel's India unit. They haven't denied it.
They haven't denied it. Asian Paints hasn't denied it. And yesterday, when we spoke to the management of AkzoNobel, his statement said that, we will hand over the business in the best possible hands. So even he has not denied it. Okay. So yeah, there could be some possible news coming out soon.
So as I understand it, you've also spoken to Mr. Singhal about pricing pressure, about the outlook going forward and all of that. We've got that lined up for you at 12:15. But we do want to take more of your questions right now, so do keep them coming. Quite a few of you have done so. So Subodh Malhotra from Delhi is asking about Morpin Laboratories, which he's bought at a level of 67, and he's anticipating a long-term target of 153 or 150 plus. It's currently at very close to 83, 82 or so. It's done reasonably well. Asked on the fundamentals, would you say that that's an achievable target, and how long will he likely have to wait for that?
So I think buying at 60s odd level, and then right now the investor is in the profit. So first of all, congratulations on that. Looking after the counter, financial performance was good. 65% rise in the bottom line is what this company has posted in their Q2 performance. So that really impressed us. We are positive on this counter. We believe that this counter is poised for the another rise till the level of at least 92 to 95. So yes, looking after 100 target is, I think it is achievable provided the company continue to perform well on the financial front. But yes, in the longer term or from the time perspective of 3 years, I think the stock can show such targets. Right now, buying on dips as well as hold is a strategy by our side for this counter. Initial price target is 92 to 95.
All right, so buying on dips and hold for Morpin Labs from Astha. The next question is from Neeraj Yadav, and he wants a view on Britannia. He's saying it's falling regularly. Swati, I'll come to you for this one. Fundamentally, Q2 was not very good for Britannia. The con call also suggested, and Varun Berry himself said that it's been overall a weak demand sentiment for the consumption space. But how does Britannia look on the charts?
Britannia is definitely a very strong counter, but this week only we have seen a correction of almost 10%. I believe downside will be a limited the coming few trading session, because the counter is trading near the oversold zone. So selling pressure will slowly and steadily will come down. It has a very good support of 5,000 levels, means almost 150 points correction is remaining. Beyond that level, we might witness some sort of a reversals, which might take a counter back towards to 5,500 levels. So on any towards to 5,000 levels, one can definitely average it out or take a long positions. I'm looking forward toward the reversal signs in the coming few trading sessions. Target will be a 5,500, then 57 levels can be seen.
Avinash is writing in and asking about Suzlon. He's got 10,000 shares, which he's bought at a price of 24. The stock is currently trading at 60, and so therefore he's making quite a bit of money. The question is, would you hold, add or sell at this juncture? And I will take it to you, Astha, because it has dropped from elevated levels, if I'm not mistaken, above 80 or thereabouts, tested that level very briefly and then came off. On the fundamentals, do you think he should hold though?
I think there is a problem with the valuation. That is what a major concern at this point of time, although the order book is robust, there is no doubt in that. But talking about the valuation, and in fact, what we believe that now this earning growth trajectory will not be that strong as we have seen in the past. So that is also one of the major concerns for this company. So looking after that, we are not very much positive on this counter at this moment of a time. Maybe the Q3 earnings can again, increase or make our confidence better. But right now, not so much confident on this counter. So we are not giving any sort of recommendation. And in the longer term, only if anyone wants to hold, then a hold is a strategy, but not recommending buy at these levels.
Right, so not recommending buy at this levels for Suzlon as per Astha. The next question is from Mr. P. Kishore. Now, he has a significant amount of profit in Zentech, Alex. He's sitting on profits of 3.26 lakh now, and he wants a view on that particular counter, and he's asking whether is Zentech still going to come down, or what are the kind of levels that you should watch out for? Swati, I'll come to you on this one. How does Zentech look to you on the charts?
The index really looks very positive because on monthly basis from the last 2 to 3 years it's continuously heading in the northward directions, and I believe it has a very strong potential to reach up to 2000 levels on the higher side. Currently the stock is trading at 1800. Downside 1650 is acting as a very strong support level. So by maintaining that profit stop loss, you can definitely hold your long positions for immediate target of 2000 levels.
This is another instance, I think, Mahima, where I think our viewers thought that we would not believe their buy price and so have therefore sent a screenshot. Well, you know, rightly so, because I have made that mistake before and our viewers have corrected me. But congratulations, that seems to be quite the amazing acquisition, and patience as well with the acquisition that you've made. Siddharth from Dubai is asking about Tata Elxsi, bought at levels of 7,485. The question is whether it should be held on to, or would you average your buy price right now? Swati, on the charts, how does it look?
Charts is little bit on a low side as of now, Alex. I can say depth as of now we might witness some sort of a more correction of almost 500 points. I will suggest to wait for the average it out because the chart is not showing any kind of a reversal patterns at the current market price momentum. So wait and watch policy should be applied. Any dips towards to 6,000 levels, one can definitely go for a long positions. Thereafter we can witness some sort of a reversal back towards to 7,200 to 7,300. That will be the immediate target level. So at the current level, just wait and watch. Any dips towards to 6,000, one can definitely add on.
Right. The next question is from Beyant from Rajasthan. His question is on REC Limited. He's bought 400 shares at 545 a piece. You know, the stock has seen significant gains in the last year. It was one of the multi-baggers. This year, it's seen about 28% of gains. Astha, your view on this particular counter?
So talking about all the railway counters, especially what we believe that they have seen their strong, rise moments. But now we are not very much positive. The reason being valuations are high, but the growth is not matching the valuation. Now talking about this counter, profitability has seen just a rise of a single digit 6%. So, I mean, that really not impresses when the valuations are that high level. Valuations always demand strong growth and they both go side by side. But here, the problem is with the overvaluation, and that is why we are not very much positive on this counter as of now.
I must admit, when I read the name in English, I misunderstood. But Beyant, what a beautiful name you have. Unending is the meaning. Let's talk about office share, which is trading down about 2%. And we've got a viewer tuning in, Satyam Bhatia, who's asking, why is it underperforming despite having a reasonably good set of numbers in the second quarter? I'm not sure, Astha, if you've looked at the numbers, but what would you have to say? This is a stock that has done incredibly well since the listing price doubling practically. So is that the reason?
Yes, and again, valuations are coming into the picture right now also, because now it is trading at I think 22 times of our FY26, price targets or FY26 earning multiple. So, I mean, that is what here not working, although guidance was good. In fact, their numbers were good. But due to this overvaluation problem, I think the stock is not able to perform that strongly. But I think there is no issue in remain invested in the counter. Later on, I think when the market conditions improve, definitely this counter will again gain the momentum because results were definitely good for this company.
All right, the next question is from Parag, and his query is on Honda India Power. This company is basically into water pumps, gensets and lawn movers. So interesting company. It looks like an interesting company to study. But his question is, I just want to buy and not sell. And what would be the correct levels for this particular strategy? So Swati, I'll come to you on this one. Is this the right time to enter into Honda India Power?
Mahima, this is not the right time to take a buy call or the fresh long position at the current market price because the stock is trading below all the important moving averages, and we are likely to witness more correction towards the 35-50 levels. So any dip to more, at least 100 points dip can be act as a very crucial support levels. But if the stock comes down towards the 35-50 or 3500 levels, one can definitely go for a long positions. After that, we are looking for a bounce back rally towards the 3800 to 4000 levels. So that will be the immediate target once we hit the dip towards the 3500. So just wait and watch. If we are getting any dips towards the 3500, one can definitely go for a long position.
Okay. Let's pull up Adani Ports and look at the 1 month chart. We've got Amit from Mumbai who's bought at levels of 1,470. If I'm not mistaken, it's been under a tad bit of pressure over the last month. So have several other large cap firms. But Asa, on the fundamentals, since he's not specified whether or not, or actually he's got a specific question, he's asking whether to accumulate more at this price. On the fundamentals, would you suggest that that is a good strategy, assuming that you've got a long enough time horizon?
So here the counter is looking good to us. First of all, results were good. And now there's, we are expecting this company to have, 1.5 to 2 times of total India cargo volume growth. So we are finding this to be a very, very attractive phenomena because, they have increased their capacity and definitely that will going to help. In fact, their port business is also doing well. So we are not having any sort of issue with the counter. We are positive in this counter, although some sort of correction is seen as of now. But later on, I think at the level of around 1300 or 1280 odd level, the stock is a good level. A good choice to enter into also. So we are positive on this counter, recommending a hold as well as buying on dips. Price target which we are giving to this counter is 1550 at current levels.
All right. The standard disclaimer, this is Adani Ports that we just spoke about. It's part of the Adani Group. You're watching NDTV Profit, which is part of the NDTV Group, which is owned by the Adani Group. Mahima?
Right. So moving on, I think we'll start with the rapid fire round. And,
sure,
want to do?
We can split it. Just so everybody knows, we'll try and take as many questions as we possibly can over the course of the next 2 minutes.
Yeah.
Asta and Swati, you know the drill. Mahima and I will alternate between the two of us and ask you questions. The first question is on Tata Motors. 937 is the buy price. It is dropped since that point. Amar Rai is asking on the fundamentals, is it a hold? Is it an add more? Asta, what's the view?
Only hold, not add more, because some more dips can be seen on this counter. Just hold.
All right, next question is from Bhaskaran from Chennai. Ramco Cements, he wants a 6 months guidance. Swati, your view on Ramco Cement?
My view is definitely positive. Today we are witnessing a very good rally with a decent volume. Upper level 950 to 1000 levels can be seen. So it's a hold from my end for a target of 1000 please.
Okay, right. Orient Technology. Let's see if we've got a view from Asa on this one. Bought levels of 206. Chandan Jain from Hubli in Karnataka is asking whether it can be held on to. Asa?
Yes, in fact, partial profit booking is also suggested at this point of a time because here the profit is high for the viewer. But definitely it is a long-term hold. Price target can be set at around 470 odd levels.
All right, the next question is from Shilu. He has 10,000 shares of Ajmera Realty bought at 600. What is the future for this script? Asa, I'll stick with you for this one.
Ajmera Realty is looking good to us. Future outlook is looking promising as we are positive on the realty space also. Can remain invested in the counter. Price target can be set at around 1020 to 1030 odd levels.
Swati, the counter is Bajaj Auto, and Shivnanda from Mangalore is asking this question. He's bought at levels of 10,700, so slightly elevated, but he's asking what the targets are for this counter.
The upside target can be seen once the stocks gives the breakout of 10,000 level, which is acting as a crucial resistance level. Any move about 10,000, definitely we are likely to witness a more rally towards to 11,200 to 11,400. So at the current market price, one should wait and watch, not to average it out, but definitely a reversal can be seen in the coming few trading sessions.
Last one, and quickly, Priyanka from Jaipur is holding 100 shares of ACC Cements. Astha, your view on ACC?
ACC is looking positive to us. Remain invested in the counter with a price target of 2450 to 2500.
All right, thanks so much, Asta, as well as Swati, for joining in, for answering all the questions. We ended up closing this round on a bit of a breathless note, but thank you so much nonetheless for answering all the questions that you did answer. Let's go back to the conversation on Asian Paints because it is an interesting stock. It's down in trade today as well.
Right, absolutely. And, we spoke to the management as to, what kind of competitive intensity is playing out, how demand is playing out. And Amit Singhal, who's the MD and CEO, has given all of those insights in the conversation that we had with him. So listen in to a chunk of that.
So overall, we see that, there are a lot of factors which are kind of playing as far as we look at quarter two. First of all, the consumer sentiment has been very low. We have been seeing it low across the industry. So whether it is the consumer sector, whether it is the construction segment, I think overall we are seeing definitely a lot of weakness in terms of the market, in terms of consumer demand. We've also seen unseasonal or undistributed rainfalls with some floods and other things happening in August, which kind of really affected both the retail and the institutional projects market to that extent. And in September, we didn't see the whole surge which we would have seen because of a shorter Diwali to that extent. And that is something which also impacted the September sales. It was only July, which was a spark, which we saw good numbers kind of coming in the month of July. And in addition, not only this, to kind of really look at when the demand conditions are low, the competition gets fairly aggressive. And we have seen definitely a lot of existing competition really getting aggressive in the market to that extent. I would not say that some of the new competition has really made a very big impact, while I think some of them are really trying to reach out to the country and look at possibly representing the country at various pockets and regions and so on and so forth. But the larger intensity has come in from the existing competition in terms of what we see. And I am a firm believer of the fact that sometimes when the consumer sentiment is low, demand conditions are challenging, the brand with the highest share possibly gets impacted a little more. And that is something which we have seen in combination of these factors.
I would have also thought, Mr. Singhal, that the brand with the highest brand recall, and unequivocally it has to be Asian Paints, would weather the storm a lot better. So now my question to you is two-pronged, sir. Would you believe that, and your margin guidance is strong, but your commentary around October and the demand challenge also stands out. So I would love to know, how do you see the next 6 months? And I'm guessing it's difficult to predict beyond 6 months because it's a very volatile environment, or not volatile, but a fairly fast changing environment currently. How do you see the next 6 months, sir? If the government spend comes back, sure, you will maintain the margins and you will clock in whatever 18.5 as an average, and which means 20% for the second half. But what about demand, sir? Do you reckon that can come back if government spends come back? Because consumer sentiment, as you said, isn't quite the strongest. So will it need the crutch of the government spend, or can it happen even otherwise?
So overall, currently the signals are a little bit still mixed in terms of the consumer sentiment. In terms of, say, we are looking forward to a stronger wedding season. We have had good rainfalls, monsoons have been good, which could kind of give a surge in terms of the rural demand in terms of going forward. But I think at the same time, in the urban centers, we are seeing a weakness as compared to the rural centers, and that is something we are not seeing a rejuvenation happening immediately very strongly, and this is something possibly true for the entire industry as well to that extent. So I think, the project segment, which is, almost about 15 to 20% of our business, the government spending on infrastructure development products could be a big surge in terms of what we could get. Even I think some surge in terms of the construction activities could get the builder segment and the construction segment up to that extent in terms of going. But the fact is that unless the core retail in the market goes up, the consumer demand goes up, that should not be enough to kind of really revitalize the second half very, very strongly. So we are really hoping that the demand is something which possibly consistently picks up as we go on to quarter four to that extent. And that is why an element of caution in terms of what we are exercising in terms of looking at the second half of the year.
Mr. Singhal, I want to understand that, there are some pockets where you've taken price hikes and there's some pockets where you've given rebates as well. So overall, by the end of FY25, how do you expect this to affect your top line? And what's the kind of guidance then, if it impacts your top line overall, what's the kind of guidance that you'll give for your overall top line as well as bottom line?
So if you look at, we've taken almost about a 1.4% to 1.5% increase in Q2, and the entire realization of that increase would come in Q3 as we kind of see it going forward. We've also looked at possibly, giving a higher rebating, discounting, and spending overall with respect to our marketing expenses in terms of going forward, which we think very strongly that we are looking at a push and a pull kind of combination in terms of balancing out the growth as we want to kind of go ahead. And that is something which possibly could kind of really give the top line a surge in terms of going forward, given the initiatives in terms of what we are rolling out. The overall area with respect to pricing, what we have to see is that we have to watch out for the volatility which is happening in the market very clearly, because the geopolitical situation is still not very good to that extent, and therefore any pricing changes would possibly depend in terms of the stability in terms of what we would see in terms of crude prices going ahead to that extent. However, given all this, we are looking at possibly single-digit volume growth for the entire year in terms of what is there, and for the second half as well. At H1, we are sitting at almost about 3.5% volume growth, and therefore we would like to kind of really deliver, a single-digit volume growth, which comes in the decorative business, and possibly a higher growth in the industrial segments as we see.
So, just a clarification: the single-digit would be higher than 5%, or is it difficult to call that right now for the year?
So it's difficult to say, because I think Q3 is still very, very challenging in terms of looking at it. So we would not like to qualify in terms of which side it is, but definitely single digit is something what we are looking at, given the fact that we are sitting at 3.5% in H1.
Just one more question from mine, Mr. Singhal, on competition. I heard you say that it's not necessarily the newer competitor that has done well, but the existing competitors or the existing players which have come in and also tinkered with pricing or discounting, what have you. There is also talk of a global player maybe exiting. Maybe you are in the fray, maybe you are not. Maybe others are in the fray, maybe the others are not. My question is really whether you have to pay top dollar for it or somebody else takes it and also enhances the competitive intensity. How do you look at the cycle, sir? Do you reckon that the next 6 months to the next 12 months, the competitive intensity will continue to stay high, or is this a short-lived phenomenon? Is it possible to predict this?
See, my belief is that, when the demand conditions are stretched, the overall market is not growing, the competitive intensity would remain. And therefore, I am seeing that for the next 6 months, also the competitive intensity would remain, irrespective of the fact that whether there is more consolidation in the industry we see, or in terms of new competition, in terms of doing various things in the market to that extent. So I think we are in times where possibly we will see a lot of action from existing players and as well as the new players to that extent. And any consolidation which it happens because of any exit of an existing player possibly will have to be seen in terms of which player tends to kind of get into to that extent. But I think it is quite normal that consolidation will definitely occur in terms of going forward to that extent.
Right. Mr. Singhal, this was actually my next question. You actually talked about consolidation. We're seeing a lot of consolidation in the cement industry and, in the paint industry also, now that there are a lot of players. There were media reports suggesting that you are planning to acquire AkzoNobel. Is there any update with respect to that? Or is there anything, any greenfield or brownfield expansions that you're looking at present to maybe, expand your portfolio in terms of the coating side of things? Or anything of that sorts on the cards?
So overall, when we look at, right now the options are not very clear in terms of how how this company is looking at in terms of looking at whether it is a joint venture, whether it is a divestment, whether it is a partial sellout. We are not, we are waiting for still the options to come out. There is no clarity as of now. They've just said that they're looking at a strategic review of their India business, and possibly I think the situation can get very clear only once the options come out in terms of what they're looking at, because we will have to weigh in terms of the whole area of legality as well in terms of what is is really involved in terms of seeing it to that extent. That is one. Second, on our own, we have kind of really completed all our brownfield expansions in terms of our capacity overall, and we have kind of strongly forged our capacity ahead in terms of the coatings business overall. We have also looked at a slew of backward integration projects in terms of what is there. We have a cement plant, white cement plant, which is coming in Fujairah in Dubai, and that should be operational by March, April of next year. We also have a VAM VAE, which is a new age emulsion, which goes into the paints, which is the heart of the paint to that extent, and that is something which we have kicked off in Dahej in Gujarat to that extent. It will take another 2.5 years to kind of come to its fruition to that extent. But these are big, strong projects in terms of what we have taken in terms of really looking at adding value to our core business as we kind of go ahead.
Right. Mr. Singhal, just for clarification, you said that, AkzoNobel is still considering the options that it will put on table. But just from your end, will you be considering, being a part of that race of acquiring AkzoNobel? If the options, of course, are in favor of what you want to have.
So see, it, as I said, unless the options are very clear, because we do not know that whether it is part one business or part other business they are looking at, or they are looking at any other way of alignment. We need to be cautious in terms of the fact that unless the options are very, very clear, and if the options come in.
All right, that was the management of Asian Paints. But on to an NDTV Profit exclusive. Sources tell your channel that SEBI may introduce settlement scheme for brokers in algo trading case. My colleague Charu joins in with more details on that. Charu, what do you have?
Hi, Mahima. So, as you said, the market regulator, Securities and Exchange Board of India, is probably going to introduce a settlement scheme for the 122 brokers who got a show cause notice from the regulator for being associated with Tradetron, which is an algo trading platform which, sort of gives its users guarantees the future returns on their investments, which is something the regulator is not keen on, happy about, or even allows. So what is going to happen here is that the settlement scheme is not going to be for any individual broker. It's going to be available for all of them. Likely to see if at least a majority of them come together to, avail the benefit of it. The quantum of the settlement is likely to be about 1 lakh to 2 lakh rupees per broker. So if all of them participate, all 122 of them, the quantum could stand somewhere between 1.22 crore rupees to 2.44 crore rupees. Now it is to be seen how many of them actually go for it, or if there are any changes or debates or discussion on it from the industry side as well. We had done an exclusive on this yesterday as well, when we told our audience that the brokers are likely, eyeing a settlement to avoid the resources and the time that is spent in an adjudication process.
All right, Charu, thank you so much for giving us those details. But with that, we're completely out of time on this edition of Ask Profit. Thank you for joining us on the show today, and viewers, thank you for joining in and giving your queries. But stay tuned to NDTV Profit. More news and updates on the other side.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty.
Hello and welcome to Earnings Edge. A very good afternoon to all the viewers. I'm Hiral Dadia and with me is Rucha Somaya. Clearly, if you see Rucha in terms of where markets go as well, an interesting day of trade is what we are seeing. Let's quickly pull up what's happening in terms of Nifty as well as Bank Nifty. Right now, overall, from yesterday's session, some profit booking again coming in. 24,100 is what we're looking at, nearly at the day's lowest levels. And similarly, if you see in terms of Bank Nifty as well, that was one of the contributors yesterday along with IT. But again, you are seeing 0.3% lower in terms of Bank Nifty. And let's pull up the Nifty IT index because that's where all the action was as well. There you go. Again, 0.5% up move in today's session. In terms of Nifty 50 stocks like Trent, 3% up move coming in there after the kind of fall that we've seen over the last couple of trading sessions. Sun Pharma is an interesting one as well. HCL Technologies, ICICI Bank, as well as Bharti Airtel. These are a few of the top gainers in today's day of trade. Britannia are under pressure, 5% downtake. Earnings impact, Bajaj Auto, Maruti Suzuki, Eicher Motors, all of them trading under pressure. Asian Paints continues the downward trend for a second consecutive session. From the broader markets, a couple of stocks also that we should be watching out for. So let's quickly pull up the mid cap as well as the small cap index. Today there is a recovery coming in there. Mid cap 150, which is up 0.2%, as well as small cap 250 is seeing gains of 0.3%. Stocks like Newland Laboratories, UPL, Jubilant Foodworks, these are names which are in focus. But let's quickly first pull up Insecticides India and see what the counter is doing in trade. Revenue is up around 10%. The stock is seeing cuts of around 3.5% right now, but profits have risen around 15% as well. We have Rajesh Agarwal, Managing Director at Insecticides India, who joins us on the show. Rajesh, good afternoon and welcome to the show.
Yeah, good afternoon.
Rajesh, my first question coming to you overall is, if you see in terms of where the quarter gone by, first and second are typically the highest in sales, and usually you see something lower, for a company like yours in the second half. What is the trend looking like now? Do you think you'll be able to maintain this? And what's that number looking like for FY25?
Okay. Yes, it's a cyclical business, so the major business comes in Q1 only. Majority 60% is gone, so it's balanced 40%. The expectation from Rabi season are good. Why? Because it has rained consistently, and that rain has demolished some of the sprays in the Kharif season, particularly in the month of September. So but it has given the opportunity for the farmer because a lot of water is available. The reservoirs are full, so farmer is going to sow his choicest crops like the rice sowing in this country. The entire country is going to increase in the Rabi season. The wheat sowing is going to increase. Some sow is the case of maize and some other crops. So farmer is going to sow his choicest crops. The vegetable have seen some hit because of the continuous rainfall even now. So overall expectation is good actually. So we believe that the second half of the year is good, but it cannot never match the first half actually.
So Rajesh, would it be right to say that around 1100 odd crores, 1100 to 1200 odd crores in terms of revenue is what you would be targeting in terms of FY25 as a whole? And similarly, from a profitability perspective as well, the company will be able to cross that 100 crore mark?
In the first half, yes. In the first half, we have already achieved 1100 crore plus. And in terms of the profitability, last year, the full year was 102 crores. This year, the half year PAT margins are 111 crores. So we have already booked 111 crores. And these 2 quarters, which will be coming now, they will also be positive and much better than the previous year. So the expectation of profitability is quite high. And in terms of the total sales numbers also, so we should be crossing last year's number in total.
Right, thanks for that, Mr. Agrawal. This is Rucha Somaya joining in. As you rightly mentioned, you're quite much bullish on the profitability side, but can you just tell us the levers that will support the EBITDA margin going ahead in the second half?
Yeah, the majority, we have focused on premiumization of the products, and we are continuously focusing on launching the new generation agrochemicals. So two things we have done. Number one, by collaboration, we are bringing the new technologies. Number two, we have made the mixtures and we have bagged the patents for these mixtures, and we are trying to launch these mixtures into the market. So both the strategies are playing very well into the market, and we are able to bring the new solutions to the market. And we have launched many products in the recent years, and continuously these products are on the launch. Like even now, there are about 4 products which are in pipeline, which we will launch in next 1 month. We have launched recently some products out of this also. So a lot of launches are there, and with these new products, we will be focusing and establishing the brands out of these products only. So the focus is like from the straight products, we are going slowly towards the mixture products, because mixture products are providing the complete solution to the farmer. Number one. Number two, they enjoy relatively lesser competition, because they are the solution providers to the farmer. So they are gaining popularity with the farmer. So with this, we are very confident that we will continue the premiumization of our business, and we will continue with these new products.
Right. All right, Mr. Agrawal, my next question to you will be around the volume growth for FY25 as a whole. In the quarter one, you had mentioned that you would expect the same to be around 15% to 20%. So do you still think that that's achievable for FY25?
In totality, yes, that number might not come because in Q1 it was around 15%. In Q2, the premium product have seen the increase of about 10%, but there is a decline in the generic product because of continuous rains. But in the second half also, I see some growth coming year on year. So there will be growth. Difficult to give the numbers, but I can say that both the top line and the bottom line, you will see the growth in the second half, again the Q3 and Q4.
Right. Rajesh, overall, if you see from a margin perspective, a good number, a very strong number that has come in this time around at 14.3%. Now, the material cost has been lower as a percentage of sales. Do you think you will be able to maintain this going ahead? Because clearly, even your B2C segment has been increasing, and usually the retail segment is always a margin accretive business, right? So is that going to be the strategy, and will you be able to maintain that 14 to 15% kind of a margin in the remainder of the year?
Very difficult to say that, because we have been targeting 10% plus type of margins. So yes, in this quarter, B2C has seen the increase. In the next quarter, I believe B2B will also be showing increase, and export business also. But yes, we are trying to convert our entire portfolio into the profitable portfolio by changing the product mix. So we are focusing around the premium products in all the 3 segments. So that will give us the edge into the market. But maintaining the same number might be a little difficult. But yes, I can say that in these 2 quarters are also going to post a good set of numbers, with the increase in the bottom line also along with the top line.
Okay. And when you talk about the top line as well, how much do you think will the Dahej expansion contribute? I mean, will it be on stream in this current financial year? And if so, what's the contribution this year? And how much will it increase to next year?
Okay. Dahej contribution will start in this year, but it will be a little lower, because the major business is going to come up in the next year itself. So next year again we'll be focused and we'll be targeting a 15% growth of top line along with the Dahej. Dahej will be instrumental in this. But this year there will be minimal contribution which will be coming in terms of numbers. But yes, the plant will be up and running in totality, and we'll start building up the stocks for the new season.
Thanks for that, Mr. Agrawal. One question from my side would be around the segmental breakup. Well, you mentioned that your focus will now be on the premium products because of its higher profitability. And when we look at the kind of segmental revenue breakup, we see that revenue from the premium segment has gone up from 65% to 68%. So what kind of mix do you see coming from the premium versus the generics segment going ahead?
Like we wish to take it to 75% in next 2 years' time. So we are working around that so that the premium products share increases in our total portfolio, and we are trying to build up our portfolio in that fashion. So even in B2B segment, we wish to take these products only into the market. So yes, we are working around that. That's a call we had taken 3 years back that we'll be improving our product mix. So we are very successfully moving around that direction. And for some of the generics, we are moving out. So I can say we are doing the tail cutting in the generic segment.
Rajesh, very lastly, if you see in terms of where the China market goes as well, how are you seeing the impact coming in from there? Because clearly, you know, there has been destocking also that is happening. So what is the Chinese impact?
Chinese have already touched the bottom. It looks like that. The prices have strengthened a little. Today, we have seen that their currency has shown some improvements against dollar. So there might be a small 1-2% type of decline, but that is something which we capture because China will decline, Indian currency has also declined. So overall, the impact will be nullified here. So our currency in 3-4 days has like from 84, the dollar is touching 84.4. Chinese RMB from 7.1 is going to 7.3. So overall, the impact will be negligible actually.
Right. All right, Rajesh. Thank you so much for speaking to us at NDTV Profit. In fact, as we speak, the stock is continuing to trade under pressure in spite of the kind of numbers that we've seen. There you go at the day's lowest levels with cuts of 3.4% coming in there. But moving on, a couple of stocks that have been buzzing in trade. Firstly, let's start with the Newland Laboratories. An interesting one to watch out for. The stock during the day was up nearly around, say, 18 to 19%, has cooled off slightly, now seeing gains of around 13 to 14%. My colleague Varsha joins in to give us more as to what's the buzz with Newland Laboratories. Why is the stock up in trade? Varsha, over to you.
Well, thanks, Hiral, for that. So one product, so the buzz that we are seeing is on the back of one product. Now, Newland Lab is getting this traction because after AB's, that is AbbVie's schizophrenia drug failed in trials. Now, Karuna Therapeutics has received FDA approval for a similar drug, CAR-XT, in September 2024. Now, why Newland will gain is because Newland has been working with Karuna Therapeutics for this schizophrenia drug, which is called as CAR-XT, since 2019. Now, Newland will benefit by supplying the active pharmaceutical ingredient, that is the main salt, the main ingredient for CAR-XT. Now, this partnership will boost Newland's revenue from CDMO business when CAR-XT will be launched. So analysts are predicting that the company may see numbers flowing into the financial from Q3 FY24 onwards. Now, CAR-XT is expected to make a sales of around $7 to $10 billion during its patent period, creating a big opportunity for Newland. But one thing to consider, which Newland has highlighted in their Q2 FY25 con call, that they are actually in the consolidation phase because CDMO, which Newland is into, is a lumpy kind of business. If you see in last few quarters, Newland has given very good numbers, but in the current quarter Q2, the numbers were weak because of the lumpy business that CDMO has. So FY25 will actually be a flat for Newland overall, but the company will see growth, a good growth from FY26 onwards.
Right, thanks for that, Varsha. As we speak, the Newland share is up almost 14% just in about a day. But let's move on to talk about UPL. Well, the stock is 4% up in trade on the back of a buy upgrade by Nuvama with a target price of 590. Talk to us more about this, Varsha. Why are they seeing at a 15% upside on this one?
Well, before that, if you see, if you see the UPL numbers, where volume were good, but due to pricing pressure, we have seen, and due to pricing pressure and increase in interest costs, we have seen a flat EBITDA and a loss. But stock is actually buzzing now. This is on the back of managements which maintain FY25 guidance. So they've maintained the revenue growth of 4 to 8% in FY25 with 50% growth in EBITDA. Now, FY25 revenue relies on single-digit volume growth and limited pricing pressure as destocking and pricing declines ease. Now, their confidence in maintaining this guidance because of recovery in high margin regions and margin improvement in India. And they are targeting $300 to $400 million in operational free cash flow for debt reduction. Volume growth is expected to slow from 18% in H1 FY25 to single digit in second half. Now, they have also cut down their right issue size from $400 million to from $500 million to $400 million earlier, and they are yet to receive feedback when it comes to right issue from the regulators. But the net debt EBITDA is projected at 2.2x by FY25, and the net debt was 27,000 crore in Q2 versus 30,600 crore in Q2 FY25 of 24 last year. So overall, if you see, management has maintained this guidance, and this is what is letting this stock buzz. But Nuvama is also bullish on the stock with the target price implying 15% upside potential. They say that right issue and value unlocking from Adventa, which is their seed platform business, will strengthen balance sheet. FY25 revenue growth guidance at 4 to 8% and EBITDA growth of 50% is what led Nuvama to give buy rating for the UPL.
Right. Thanks, Varsha, for getting us the details. So this is an interesting one to watch out for as well in terms of UPL. But moving on, you have a Jubilant FoodWorks. That stock is up in trade today. Now, overall, the company has reported numbers. The profits have dipped. The margins have taken some bit of a hit as well. But let's understand from Mahima as to what's actually working for a Jubilant Food. Mahima, over to you.
Right, here also a couple of things that are working in favor of Jubilant FoodWorks. The like-for-like growth came in at 2.8%, which has outpaced most of the QSRs that have posted their Q2 numbers. And delivery like-for-like growth was at 11.4%. The monthly active users increased by 18% this quarter, which means that online sales is auguring growth for the company, and company continues to gain market share as per the management commentary. Now, in terms of numbers, revenue was up 43%, EBITDA was up 44%. Margins have remained in the same range, and net profit was down around 31%. Now, online sales is an outlier because delivery fee, because of certain initiatives that the management has taken, like delivery fee waiver, reduction in threshold of free order at rupees 150 versus that of 350, which was there in pre-COVID areas. New product launches and also the 20-minute delivery is something that is auguring growth for the online sales. Dine-in sales have seen a slight downtick. They were weak at around 5.6% YOY, and margins have been impacted on account of two reasons: higher delivery salience and waiver of delivery fees kind of impacting the margins, and also the depreciation and interest amounts going higher because of store expansion is something that's weighing down on margins. In terms of the con call takeaways, Domino's India continues to gain market share is what the management has said. They're saying that they're witnessing demand momentum accelerating in Q3, and margin expansion going forward will be gradual. Both brokerages, Nuvama and Citi, have had a positive view on the results, and Nuvama has reiterated hold, and target price has been raised to 631 from 568 earlier. They said that they remain bullish on the company's turnaround potential, and Citi has retained buy with a target price of 700. They slightly reduced the target price, however, from 715 to 700, but they expect like-for-like improvement going forward to continue. So overall, good sentiment and good quarter for Jubilant FoodWorks.
Right, thanks for that, Mahima. But as we speak, while the stock is up around 8% in trade, but with that, let's move on to TVS Supply Chain. We have Mr. Ravi Vishwanathan, the Managing Director at the company, and Ravi Prakash, the Global CFO at TVS Supply Chain Solutions. Thanks, gentlemen, for joining us on the show. Very stellar numbers, revenue up around 11%, margin a little bit of dip in margin at 6.7%, but net profit reported at 10.6 crore versus loss of 40.5 crore same time last year. My first question to you will be, talk to us about the numbers. How are you looking at these?
Okay, thank you, and good afternoon to all the viewers. we continue to build on the revenue momentum that we have. So as you can see, we have grown the revenue 11%, both quarter on quarter and year on year. I think our portfolio of business are delivering strong growth in a difficult macro environment. Our integrated supply chain solutions has been the flagship and has been giving us the momentum, and it continues to grow at a healthy pace. And importantly, we have been able to get record EBITDA numbers on our ISCS business, which shows that the ISCS business is now scaling as per plan. On the network solution side, our revenue growth has picked up on the trajectory. So you can see very healthy revenue numbers, revenue growth numbers. But of course, the freight business continues to be challenged on the margin side because of the macro. You know that this quarter we had significant issues on empty containers and lack of containers and ships in the Indian subcontinent. So those added a little bit to our ability to manage our costs better. But it's something which we think is a current quarter problem. But on the integrated final mile, which is our other offering in the network solutions, we had indicated that it is something which we are working on in terms of improving the margins. The good news is that I think we have got all our measures in place, and we expect that it will deliver run rate profitability by the end of this fiscal. So it augurs very well for the years coming. The other highlight I want to call out is the fact that we have signed multi-year engagement with a large North American industrial customer. It's about 2,200 plus crores, the total contract value. And that is something which we have been calling out as a strategy, that we are focusing on large deals that will give us a healthy momentum in terms of revenue and the ability for us to expand the margins as we continue our journey as a listed company. So we're very bullish about what we see. Our pipeline is very healthy. Our revenue growth is strong, and the outlook is very positive.
Right. Thanks, Ravi, for this update. Now, clearly, as you mentioned about, the pipeline as well as the 2,200 crore worth of deals that you've signed, are they expected to be realized in the coming the current financial year? That's one. And the second part of the question is a 10% growth is what we've seen in the second quarter of FY 25, right? So is this sustainable, or you're expecting a further pickup taking the traction into consideration?
So two things, I think from a revenue perspective, we continue to be very strong, and our outlook is that we should focus, we should continually look at a double-digit growth, and looking at the pipeline, we're fairly confident. On your specific question on the two things around the pipeline and the 2,200 crore opportunity, the 2,200 crore opportunity, a contract is a multi-year contract, and we are in the startup phase, so we will see a gradual climb of the revenue. The revenue buildup will be slow going out of FY25, but it will start picking up momentum in FY26 and give us consistent revenue from FY27 and beyond. On the 4,500 crore pipeline, that is the revenue outlook. We typically have a conversion ratio of about 25 to 27%. So we are bullish about converting about 1,000 to 1,200 crores of that pipe into revenue, which will obviously roll out into the next fiscal. So that's why I said the growth outlook is very positive for the company from when I look at the pipeline and the large orders that we have signed.
Okay. Another question I have as a follow-up to this is with regards to the ISCS segment also that you mentioned. It's good this time, but if I have to look at the first half of the year, there has been a decline, right? The first quarter elections was one of the major reasons. What actually went wrong in the second?
Sorry, we lost the audio for a brief second. So could you repeat the question, please?
Sure. My question to you was in terms of the India ISCS segment as well. Overall, in the first half, we've seen some bit of a decline that has come in. First quarter, elections was one of the major reasons for that. What's happened in the second?
I think we're still looking for a bump in the macro, in the environment. We see a pickup in the manufacturing side of the business. Also, a very company-specific thing is that we exited a few portfolios which were not profitable, which had an impact on the revenue. So nothing to worry about from an India perspective. We continue to expand margins, and we have a very strong pipeline getting out into the second half of this fiscal.
Right. Sure, thanks for that. My next question to you, Mr. Ravi Prakash, will be around the margin levers. Well, the margin have taken a hit this time at around 6.7%. So, can you talk to us about what kind of range are you expecting to achieve in the second half of FY25, and what would be the likely levers for that?
See, if I look at the first half, the positive side of the margin story is that 55% of the business, which is the ISCS business, we've actually achieved record margins. And I expect that in the second half of the year as well, ISCS margins will be 10 or above. So that is something that we are comfortable about. On the network side, there were very quarter-specific issues like what Mr. Ravi Vishwanathan was talking about, whether it was due to the Red Sea or one of the businesses not delivering to its potential. We expect improvement from Q3. We expect to exit Q4 with margins which are very similar to what we had in the earlier quarters. And the target margin for network segment will be around 7%, and that we should get there in the next 3 to 4 quarters.
And lastly, in terms of the business development pipeline, around 4,500 crores is what we were looking at. Where are you seeing new developments, and how much of it do you see in terms of conversion to revenues in the current financial year and in FY26? What's that number that you would be looking at? Gentlemen, are you able to hear us? I think we've lost the audio with the guest as well, but clearly the second half of the year also looks promising from what the management has been indicating. Clearly the deal pipeline is what they're betting big on. Translation into revenue is the key that we need to watch out for. And secondly, from a margin perspective as well, a good growth number is what the numbers look like, because clearly they've reported a profit of around 10.6 crores this time around versus a loss of 40.6 crores. So that's an interesting number coming up there. Rucha, so clearly if you see from a company perspective, you have 2.3% is the kind of up move that we are seeing in terms of the stock price. Let's quickly pull up a 1 month and a 6 month chart as well and see what the company has done, because logistics is an interesting business. Usually, yes, there is seasonality also that keeps coming in on that front. But can we just quickly have a 1 month and a 6 month chart? There you go. 1 month, a pretty volatile 1.2% is the kind of downtake overall. And if you have a 6 month chart, there you go. 11 to 12% is the kind of up move.
Yeah, definitely. This one has also given a negative returns over the last 1 year. But I think that's all the time, Hiral, that we have on the show. Lots more insights on the other side. Do stay tuned to NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Nifty and Sensex extend the losses as major banking stocks decline. HDFC Bank and State Bank of India contribute to the lag. SEBI may introduce a settlement scheme for brokers in algo trading case. Sources say it's likely to proceed if most brokers opt to the settlement. And that's an NDTV Profit exclusive. Sagility India debuts at 3.5% premium over the issue price of 30 rupees. Neuron Labs soars nearly 13% after schizophrenia drug failed phase 2 trials. This opens doors for Neuland in the market and expects a huge ramp up in the CDMO revenue. Hello and welcome to NDTV Profit. You're watching Market IQ. I am Rucha Sumaya. But before moving on, let's take a quick look at the markets first. Well, if you look at the current indices right now, not much of a good day for the markets today. Nifty 50 down in the red by about 0.5%. Sensex down about 0.5% as well. Banking index down by almost about 1%. But it's the Nifty IT which is trying to maintain its stance in the green, up about 0.4% in the trade today, while Nifty 50 opened in the green, but then profit booking is what we could see over here. But if we look at the sectoral gainers and losers, we'll see that it's only IT which is in the green, and largely it is the banking names which is losing their gains. And we also have Pharma, Media and Realty which is contributing about 1.5% in the green, but all the other sectors, namely autos, finance, PSU, banks, FMCG, etc., everything in the red. But let's look at the constituents. Well, the Nifty 50 losers, we have Britannia, who's down in trade today after its a 9% fall in profits. We also have Tata Motors, 11% fall in 2Q profits. Both these stocks are down in trade largely because of its earnings announced. But on the gaining side, we have Trent after Goldman Sachs initiated on the stock with a 27% upside. We also have Sun Pharma and Bharti Airtel doing good. But let's move on to the banking names. Well, it's only ICICI Bank which is likely, just trading at flat and not in the red, but all the other heavy names such as HDFC Bank, SBI Bank down in the red. Well, SBI Bank has been doing badly after its 2Q numbers, even though the 2Q numbers were pretty much decent. Don't think Street is taking that one positively. But talking about Nifty IT, we have largely two names in the red, TCS and Tech Mahindra doing bad in trade, but all the other stocks such as LTTS, HCL Technologies, Infosys up in the green. Well, LTTS is up about 4% after it announced two acquisitions, largely in the AI space. But then let's move on to talk. But before that, let's look at LTTS stock. Well, this one has not been doing great in last 6 months to 1 year, but it's the acquisition because of which the stock is buzzing in trade. There we go. If you look at the intraday chart, it's up since the start of the trade, but let's look at a yearly chart. Well, when we look at a yearly chart, we'll see that this one largely, which is in the ER&D space, has given around 25% returns, as we can look on our screens. But with that, Let's move on to Jubilant Food. Well, Jubilant Food is seeing more buying despite a 32% fall in profit and hit on the margin due to delivery fee waiver. Mahima joins in with more details.
Here also a couple of things that are working in favor of Jubilant Foodworks. The like-for-like growth came in at 2.8%, which has outpaced most of the QSRs that have posted their Q2 numbers. And delivery like-for-like growth was at 11.4%. The monthly active users increased by 18% this quarter, which means that online sales is auguring growth for the company. And company continues to gain market share as per the management commentary. Now, in terms of numbers, revenue was up 43%, EBITDA was up 44%. Margins have remained in the same range. And net profit was down around 31%. Now, online sales is an outlier because because of certain initiatives that the management has taken, like delivery fee waiver, reduction in threshold of free order at rupees 150 versus that of 350, which was there in pre-COVID areas. New product launches and also the 20-minute delivery is something that is auguring growth for the online sales. Dine-in sales have seen a slight downtick. They were weak at around 5.6% YOY, and margins have been impacted on account of two reasons: higher delivery salience and waiver of delivery fees kind of impacting the margins, and also the depreciation and interest amounts going higher because of store expansion is something that's weighing down on margins. In terms of the con call takeaways, Domino's India continues to gain market share is what the management has said. They're saying that they're witnessing demand momentum accelerating in Q3 and margin expansion going forward will be gradual. Both brokerages, Nuvama and Citi, have had a positive view on the results, and Nuvama has reiterated hold, and target price has been raised to 631 from 568 earlier. They said that they remain bullish on the company's turnaround potential, and Citi has retained buy with a target price of 700. They slightly reduced the target price, however, from 715 to 700, but they expect like-for-like improvement going forward to continue. So overall, good sentiment and good quarter for Jubilant Foodworks.
Well, thanks for that, Mahima. Moving on to Q2 earnings, Marks & Pharma has come out with its numbers. Net profit is up 17% at 98 crore rupees versus 84 crore same time last year. Revenue up about 21% at 642 crore rupees. EBITDA margin came in at about 21.1 versus 21.4. Largely flattish kind of margin is what we can see over here. But it is also reported an all-time high quarterly EBITDA of 135 crore rupees. And the gross margin expansion of around 730 basis points is largely on the back of favorable raw material prices and improved product mix. But with that, let's have a look at how the stock is doing in trade. Well, the stock is up about 4%. So good earnings is what I think the street is happy about. But with that, let's move on to India's largest insurance company, that is LIC. Well, the stock is zooming after JP Morgan has double upgraded the stock to overweight. We have Agam who's joining by to tell us why JP Morgan is bullish on the company. Agam, take it away.
Actually, the double upgrade comes on the back of good set of earnings coming through. So JP Morgan has in fact gone ahead and upgraded LIC India to an overweight from an underweight. They've also set the price target at a little over 1,000 rupees per share, 1,075 to be precise. So there's not much left in terms of space, in terms of upside, but it's certainly a positive development when it comes to the company. Now, in general, JP Morgan is positive on the kind of value of new business growth that the company has already seen, and more importantly, the APE growth that also comes in. There are several other factors that, could potentially lead to an improvement in earnings for LIC India, and which is why we've also seen an upgrade with respect to its EPS earnings as well. In fact, the VNB forecast for FY25, FY26 has also been upped and increased by 9 and 11% respectively. So a lot of these factors playing out in favor of LIC India, and that's the reason why JP Morgan has continued to stay positive. In fact, also upgraded the stock through 2 ratings.
Right, thanks for that, Agam. As we look at the stock, the stock has given 54% returns in the last 1 year and is currently up around 1.5%. But with that, let's move on to another stock. We have UPL, which is trading higher after Nuvama upgraded the stock to a buy following bullish commentary from the company's con call highlights on the back of its earning. We have Varsha, who is joining in with more details. Take it away, Varsha.
if you see the UPL numbers, where volume were good, but due to pricing pressure we have seen, and due to pricing pressure and increase in interest costs, we have seen a flat EBITDA and a loss. But stock is actually buzzing now. This is on the back of managements which maintain FY25 guidance. So they've maintained the revenue growth of 4 to 8% in FY25 with 50% growth in EBITDA. Now FY25 revenue relies on single-digit volume growth and limited pricing pressure as destocking and pricing declines ease. Now their confidence in maintaining this guidance because of recovery in high margin regions and margin improvement in India, and they are targeting $300 to $400 million in operational free cash flow for debt reduction. Volume growth is expected to slow from 18% in H1 FY25 to single digit in second half. Now they have also cut down their right issue size from $400 million to from $500 million to $400 million earlier, and they are yet to receive feedback when it comes to right issue from the regulators. But the net debt EBITDA is projected at 2.2x by FY25, and the net debt was 27,000 crore in Q2 versus 30,600 crore in Q2 FY25 of 24 last year. So overall, if you see, management has maintained this guidance, and this is what is letting this stock buzz. But Nuvama is also bullish on the stock with the target price implying 15% upside potential. They say that right issue and value unlocking from Adventa, which is their seed platform business, will strengthen balance sheet. FY25 revenue growth guidance at 4 to 8% and EBITDA growth of 50% is what led Nuvama to give buy rating for the UPL.
Thanks, Varsha, for that. But stay with us. We'll talk about another pharma company, that is Neuland Laboratories, which is up around 13% in trade today. But the stock has also given around 200% in last 1 year in terms of returns. But what is the formula that's been working out for the stock? Tell us more about this one.
So one product, so the buzz that we are seeing is on the back of one product. Now Neuland Lab is getting this traction because after AB's, that is AbbVie's schizophrenia drug failed in trials. Now Karuna Therapeutics has received FDA approval for a similar drug, CAR-XT, in September 2024. Now why Neuland will gain is because Neuland has been working with Karuna Therapeutics for this schizophrenia drug, which is called as CAR-XT, since 2019. Now Neuland will benefit by supplying the active pharmaceutical ingredient, that is the main salt, the main ingredient for CAR-XT. Now this partnership will boost Neuland's revenue from CDMO business when CAR-XT will be launched. So analysts are predicting that the company may see numbers flowing into the financial from Q3 FY24 onwards. Now CAR-XT is expected to make a sales of around $7 to $10 billion during its patent period, creating a big opportunity for Neuland. But one thing to consider, which Neuland has highlighted in their Q2 FY25 con call, that they are actually in the consolidation phase, because CDMO, which Neuland is into, is a lumpy kind of business. If you see in last few quarters, Neuland has given very good numbers, but in the current quarter Q2, the numbers were weak because of the lumpy business that CDMO has. So FY25 will actually be a flat for Neuland overall, but company will see growth, a good growth from FY26 onwards.
Thanks for that, Varsha. But moving on to some market opinion now, as the earnings season draws to a close, we take the stock of how the second quarter has been so far with Abhay Agarwal from Piper Serica on what has been the biggest disappointment in this earnings season. Listen into what he had to say.
I think we were not surprised about the disappointment, but I think it was building up in both two cases. One is autos. Three segments, actually, I would say. So autos is one where we saw inventory levels go up, and mind you, the real impact of inventory buildup in auto numbers will come in the next quarter, because the auto companies recognize revenue when they dispatch to dealers, and then in the current quarter, when the dispatches slow down because dealers are sitting with inventory, the next quarter you will see probably worse numbers from auto companies. So autos have been, a disappointment, as we expected. Both the consumer side and the commercial side, and even the two-wheelers, I would say, in that way. Second has been the whole discretionary consumption basket of paints, polish, tiles, again, inventory stacking, a lot of inventory sitting with dealers that still needs to work its way out. Prices under pressure. We will see discounting kick in a big way towards middle or end of December, when these inventory levels will become just unsustainable. I think that is when the customers will get fantastic deals, so they should hold their horses. And the third segment is this whole microfinance and unsecured lending space. I think the lenders are really feeling the pressure now, which RBI has been warning, of pushing money into the hands of borrowers who may not need it, but they are just being given this unsecured money because the MFIs and unsecured lenders have to show increase in book size. And that, I think, is going to be very negative for the whole economy, till that cycle reverses and it plays out. So I think these are the three segments where we have seen disappointment, and I think it will continue for at least one more quarter.
Well, thanks for that. But moving on to the IT space, the only space which has been doing well in the last couple of days, we'll talk about LTTS, that is L&T Technology Services, which is up around 4% in trade today after it has announced two acquisitions. While it will acquire 100% stake in two companies, which is IntelliSwift Software Inc., which is a US-based company, and the Indian arm of the same company. And this acquisition is expected to be completed before 28th February next year, that is 2025. Well, the payment for the acquisition is to be paid entirely in cash at around $110 million. Now, let me talk to you about the US target. Well, this company was incorporated in 2001 and is headquartered in the US. It also has presence in several countries, namely India, Hungary, Canada, Singapore, and Costa Rica, and also operates in software product development and platform engineering and the AI space. Actually, both the companies, the US-based and the Indian-based companies, operate in the product development, product engineering, and also the AI space. The Indian entity is incorporated in 2002 and is based out of Gujarat. The synergies which LTTS will have will largely be related to the AI and software capabilities, and will also strengthen the digital engineering suite for its global clients. And this will largely happen by enhanced software product development and platform engineering capabilities. Talking about the turnover of the target entities, well, in CY, that is calendar year 21, the company on a consolidated basis had around 80 million in terms of top line and 101 million in CY22. And as we can look on our screens, it had blipped a little in CY23 at around 96 million US dollars. We're talking about LTTS latest 2Q numbers. The numbers were largely decent. Revenue was up 4.5%. Margin came in largely flat at 15.1%, but the company still sticks to its 8 to 10% of the top line growth in constant currency terms, and also has a medium-term outlook of $2 billion in terms of revenue and margin of 17 to 18% versus 15% at current levels. But as we speak, the stock is currently up 4% and continues to do well since the start of the trade, largely is what we can see over here in terms of LTTS. But moving on to Superjit Engineering, well, the company cracks following a weak set in the second quarter, largely impacted by higher cost. In fact, when we look at the stock right now, the stock is down about 2.2%. But we spoke to Mr. Kumar Rai, the promoter and chairman of Superjit Group, and asked him about how the recent acquisition of SCS Germany impacted the second quarter performance. Listen in to what he had to say.
Let me answer by stepping back a little bit. The consolidated results includes the transaction that we just concluded in Europe of the insolvent companies relating to SCS. Those insolvent companies were loss-making, and hence the numbers had slightly downward dip. But if you look at our individual four divisions, that is Superjit Controls division, Electronics division, Phoenix Lamps division, and Domestic Cable division, each one of those divisions have performed exceptionally well. So the trend that you saw on the consolidated number is due to that insolvent entities and not because of our core business, which is of most of the part. Coming to your question on SCS, I think it is a recent transaction. We just concluded it in July. We took over the insolvent companies connected with the SCS Germany. These are the two-phased transaction. The first phase is completed, that included Germany, Poland, and Morocco, whereas the second phase that includes China and Canada will be done in the Q4. So once it is fully completed, I think we'll know the correct picture of the whole transaction.
Just a couple of follow-up questions on this. Now, you were expected to close the plant in Poland after this particular acquisition. Firstly, has that been completed?
The manufacturing in Poland has come to an end, but Poland operations per se has not completed. It will go on for another 4 or 5 months. There's still some ongoing, activities that is being carried out. So as a part of this transaction, SCS Germany, there will be restructuring of SCS Germany as well, with quite a bit of number of people being, let go. And Poland will be completely shut down. In the process, all manufacturing will move to Morocco, and only engineering and business development part of the business will stay in Germany. Whereas the entire warehousing, as well as dispatches to customers, will be done out of Hungary near our Siofok plant, so that the whole cost efficiencies will be incorporated over the next 6 months.
And just one final question. We saw that other expenses were quite high also in this particular quarter. Now that's understanding that most of the acquisition costs that happened with this would be one of the reasons. Could you quantify what would be the total amount that because of this particular acquisition that won't be repeated in the next quarter were higher because of this particular acquisition of SCS in this particular quarter?
I would say on our consolidated number, there is probably I would put a rough figure of maybe about 25 crores as expenses which are one-off in nature, which is largely relating to SCS transaction, but also relating to certain restructuring that we are carrying out in our Matamoros plant in Mexico. So all put together, I think these exceptional items were of that nature. Then if you add that back to the profit before tax, the numbers would look different.
Now, I just want to talk about your segmental performance. As you rightly mentioned, that your 4 divisions, the controls divisions, domestic cables, Phoenix lamps, as well as Suprajit electronics, all 4 have done well in terms of revenue as well as margins as well, if we exclude the impact of SCS. Now, I just wanted to start with the domestic cable division. We've seen strong growth in this particular quarter, 15% revenue growth. Any kind of outlook that you can give us in terms of the domestic business of Suprajit and on Phoenix lamps as well? And how do you see the second half of the fiscal year regarding the same?
I think I'll answer the second part of the question. I think Phoenix lamps had a fairly modest growth, but the EBITDA margins have been very strong, and it has significantly outperformed last year's same quarter. So Phoenix lamps division will probably have a single-digit kind of a growth, but their margins will be very strong because it's mostly exports and aftermarket. And in terms of domestic cable division, I think we'll continue to have a robust second half as well, because I think the order wins have been good. We are by far the largest cable makers in the country. So that part of the division will continue to do well, and we will continue to have a good margins as well. So there's a good growth potential in the domestic cable division.
Well, moving on to the second quarter earnings, again, we have CESC, which has reported its numbers. Well, in terms of numbers, we have net profit, which is up around 3%, as we can see on our screens, at around 373 crore. And moving on to talk about how the company has done well in terms of share price performance. The company has given around 31% return in last 6 months, and the share price currently is largely trading flat, up almost about 0.5%. But moving on to an NDTV Profit exclusive, sources tell your channel that SEBI may introduce a settlement scheme for brokers in algo trading case, and my colleague Charu Singh joins in with the exclusive details.
The market regulator SEBI is going to be coming up with a settlement scheme for around 122 brokers who received a show cause notice from the regulator for still being associated with an algo-based trading platform, TradeTron. Now, this particular platform is associated with, giving guarantees to the users about future returns, which is something which never sits well with the regulator, and that is why around a month back a notice was given to the brokers industry-wide. Now, what is going to be happening as per sources is that a settlement scheme may be put forth by the regulator for these brokers. Now, this is not going to be a scheme which is going to be there for only an individual broker. This is something that might be available for all of them, and will go forward if a majority of them accept it and decide to go forward with it. As per the sources, a quantum of settlement per broker could be from 1 lakh rupees to 2 lakh rupees, and if all of them decide to go ahead with it, we could see a total quantum of about 1.22 crore rupees to 2.44 crore rupees for this settlement. Now, in an exclusive story yesterday, NDTV Profit had also told their audience that the brokers industry is also eyeing a settlement in this particular case. So it remains to be seen how the intricacies of the situations are worked out and what kind of settlement finally gets on the floor.
Well, let's talk about this new listing in the IT space. Sagility India made its debut on the bourses with shares listing at 31.06 rupees, which reflects a 3.5% premium over its issue price of 30 rupees. Well, the initial public offering of Sagility India garnered strong interest, with retail investors driving up its subscription rate to 3.2 times by the final day of bidding. Notably, the entire offering was an offer for sale, with the price band set between rupees 28 and 30 per share, and the selling promoter will take all of the sales proceeds. Well, in fact, we spoke to the MD and the group CEO, Mr. Ramesh Gopalan, for the company's growth outlook. Listen in to what he had to say.
We are in the healthcare industry, and we provide business services and solutions to our healthcare clients, who are both payers and providers. Payers are largely insurance companies, health insurance companies, and providers are entities like hospitals, physician groups, lab companies, and so on. These are the two distinct set of clients that we cater to.
Delhi and Mumbai were covered in dense smog this morning as the air quality worsened in the two metro cities. The air quality index, that is the AQI, stood at 335 in Delhi at 8 a.m. in the very poor category, according to the Central Pollution Control Board data. The government system of air quality and weather forecasting and research website advised people to avoid outdoor activities in the early morning and after the sunset. Well, that's all that we have on the show for now, but do stay tuned to NDTV Profit. Lots more action on the other side.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential.
Hi, thanks so much for joining in. You're watching the Mutual Fund Show on NDTV Profit, and my name is Alex Matthew. Now, ordinarily, we would be talking about mutual funds in this half an hour, but it would be remiss of us not to talk about the equity market. So let's pull up the intraday chart for the Nifty 50 because you're seeing quite a big crack for the benchmark at this juncture, down about 0.75% at this point, and you see there's a falling off of a cliff almost in the benchmark Nifty 50 just over the last half an hour or so. And pull up the Nifty Bank because that is where you're seeing most of the pressure in terms of the selling. And you see the Bank Nifty that's down about 1.2%, having fallen about 1,000 points or thereabouts from the high point of the day. I'm just looking at the screen and taking a look at most sectoral indices which are down. In fact, the Bank Nifty down about 1.7% from the high point of the day, and you see much more red on the screen than you saw even slightly earlier on in the session. In fact, 11:30 when we spoke about this, the market breadth was tilted in favor of the advances, and I would not be surprised if that has changed entirely. And there you go, there's a complete inversion of what you saw at the start of this session, and you see more declines than gainers right now. 24,000 broken on the Nifty 50. We are still trading above the 200-day moving average, which stands at 23,500 for the Nifty 50. So we're currently just about 460 points above that 200-day moving average, but considerable pressure on the Nifty 50 as we speak right now. I'm taking a look at some of the constituents on the Nifty 50, and you have now about 39 stocks on the benchmark Nifty 50 that are losing ground. Britannia, on the back of its results, losing further ground today, down a further 6%. It was under pressure in trade yesterday as well. Another stock, Asian Paints, which is once again on the back of earnings declining. You saw the management speak to NDTV Profit earlier. The company under significant pressure in terms of the contraction in margins, pricing pressure in the space, not boding well for the earnings for this company. Let's pull up the weekly chart for Asian Paints because that will just give you a sense of the kind of selling pressure that you witnessed in the recent past, and that seems to be exacerbated. 14% over the course of just a week. HDFC Bank, earlier on in the session, in fact, you had just about a flat move or marginally negative move for HDFC Bank. It is now down about 2.5%. I believe we're now joined by Dilip Bhatt. Dilip, thanks so much for taking the time. Can you give us a sense as to what is leading to this sudden drop that we're seeing? We were more or less range bound in a very narrow range earlier on in the session that is broken completely.
Good afternoon. I think what we can just, interpret for this entire, the way the markets are behaving and the way it has come off, I think this kind of sharp falls are bound to be a part of this particular market for some more time to come. I think, what I mean is not just the fall, it will remain volatile. There can be a sharp correction on some of the days. But the point still remains that how do you deal with such a big sell-off by the FIIs? And most important is, I think too many negative factors now being harped upon in such a big way at the moment in the market, whether it is slowdown, whether it is a rupee fall, whether it is inflation. I think muted guidance by most of the management in their commentaries post the second quarterly results. And of course, the second quarterly results has been a kind of a washout. So we are heading for some kind of nifty downgrade even for next year. Though sometime back, about 1 month back, it was almost at 15% growth in Nifty EPS for FY26. But I'm sure that also will see a correction. So I think, I think these are the things which are just playing out. So our own sense is that yes, markets after a sustained rise for such a long time are behaving exactly the opposite. And I think one should look upon it as a correction which is healthy, which is required, and maybe it will give us an opportunity in the times to come.
I believe we're also, let me confirm, do we have Rahul Sharma, who's Director and Head of Research at JM Financial on the phone joining us as well? Okay, we will soon. Dilip, I'm just curious what you say. So I take the point that you've made about opportunities to be found, but really, even based on the data that we saw for the mutual fund industry last month, and that came out yesterday, in the month of October also, retail investors have continued to invest. If anything, the lump sum investments have actually gone up. So you have domestic institutions that have so far been able to form a little bit of a base. How long that continues is another question. So one, do you think that that confidence will remain in the month of November, or do you think that you will see some cracks there? And the second, you've seen quite a bit of the earnings season so far. Are you of the opinion that there have been more disappointments than you would have liked?
Taking your second point up, without any doubt, I think some of the big caps have certainly not been up to the mark, and their profits have been pretty bad as compared to the estimates. But even if you were to leave that aside, what I find is the management commentary in the quarterly, in the second quarter of quite a few companies which we have heard, they don't seem to be talking about any great upturn in the next 2 months or in the next 2 quarters too. So I think that is the more worrying part, that the slowdown in the economy, which is what is compounding the matters at the moment. Now, how to play that scenario? Because markets, even at this level, is not cheap. Because if you see an EPS downgrade, even after this correction, markets will still continue to look exorbitantly expensive, without any doubt. And more so if you were to narrow down to a few companies. So I would say that as far as the companies have been concerned, people will still would like to wait for the positive comments. They may not wait the completely. And I think as far as your question about the DIs and the retailers supporting, yeah, I think that has been the best part about this market. But then, you know, when this kind of a distribution happens to the retailers and to the DIIs, I think in a way the market will take a much longer time to take away, take care of this liquidity which has now come into the market.
I have a question for you then. I have a question for you. What I'm trying to get at is, you mentioned there is a possibility of EPS cuts, but then based on your reading of the earnings so far, in which pockets do you anticipate that will take place, and will that have a further knock-on effect going forward?
So that's what I said. I said that apart from the fact that this second quarterly results were not all that great, the management guidance didn't do anything to improve that. So it really implies that the next 2 quarters, we will take it as a corollary that it is going to be, the way they spoke has not given a great comfort. So I would say that even next year's a 15% EPS growth, which we were factoring about say a month back, remains very vulnerable. So I would say that yes, if EPS is to be downgraded further from the current level, then the valuations don't look all that cheap. even after such a big correction.
So, Rahul Sharma, Director and Head of Research at JM Financial, joining in. Rahul, we were just speaking about the kind of crack that we've suddenly seen in the equity markets, and we were talking about some of the fundamental factors that could be driving it. Of course, you're seeing tremendous selling by foreign institutional investors, but we were wondering whether or not some part of this is also fueled by more disappointments than anticipated in the earnings so far. What's your view?
Yes, absolutely. So the earnings so far have been a mixed bag, and wherever there has been missed estimates, markets have not been kind, and we've seen the kind of carnage that has happened over the last few weeks. Now, the question on everybody's mind is, do we take support over here, or is this kind of a area where we break down? So 23,800 on the Nifty is a very crucial technical level. We've bounced back from there. It is also a Fibonacci retracement of the entire previous bullish move that we've seen. So our sense is, as long as this level is not breached, it will be a period where the market does this back and forth action. We've seen volatility around the 24,000 mark over the last 1 week or so, and once this 23,800 breaks, that would open gates for further downside towards 23,500, 23,300 as well. So the best thing to do as a trader is follow these levels, and once these levels get violated, just take the trade and ride the wave that we are into. So clearly, it is the Nifty which is seeing some pressure. Now, one silver lining that we have is the Nifty 500 index, which is representative of the broader market. This index has still not broken the budget day low. So budget day was on 23rd July. The index is still trading above that, and in fact, this is relatively outperforming. There's a divergence which is building. But our estimators, if Nifty manages to break the 23,800 mark, even the broader market could feel the heat, could feel the pressure, and we may go down further on the small caps and mid caps as well. So the overall sense is, it's a make or break kind of an area for the market. If it violates, the best thing to do is look to buy 23,500 puts of the monthly expiry as a hedging strategy going into the rest of this month.
That's a trading strategy and well taken, Rahul, at this juncture. I'm sure a lot of traders will appreciate that. I'm also asking specifically on the earnings, right? Because just over the last couple of days, we've seen a few large companies. Asian Paints was one. You had Britannia also that disappointed. Is your house essentially taking some calls to downgrade? What are the views that you have post this? Will you also have EPS downgrades that you're taking, and which pockets do you anticipate that will take place in?
Had a contraction in the earnings after a good 3.5 year kind of a period, and this is something which probably the markets was anticipating, which is why we saw the big sell numbers from the FIs to begin with. Now we are seeing this as more as a transitionary phase. We feel that things should normalize. The RBI has got a lot of arsenal to play around with the interest rates, and they have a lot of room for sure. So that is something that they would try to revive the economy. But having said that, I think after good 11 months of month-on-month returns on the Nifty, we are finally seeing a second month in a trot where Nifty is giving negative returns. So this is something which is more or less kind of a pullback in nature, and we feel that if you have a slightly medium to long-term outlook, this is a good opportunity to enter into quality setups, quality businesses where we feel that the long-term story is still intact.
Okay, I do want to ask the both of you this, and I'll come to you first, Dilip. Rahul, do stay with us. I have one more question for you. Dilip, just taking on from what Rahul was saying, if you zoom out and if you have a longer-term time frame, would you use this opportunity to start taking or start accumulating any stocks that you might hold in your long-term portfolio, or would you wait a little bit for the dust to settle? If the answer is yes, accumulate, then where would you be looking? Okay, I'm not sure if we have Dilip still on the phone line, but Rahul, I'll come to you on this one then. Would the answer be yes, accumulate, and if so, where would you find comfort?
Yeah, so the answer would be yes. And, so far we've seen relative outperformance happening in two sectors. So one is the IT, where we feel that the sector has reversed just in the last quarter, and there are long legs to it. Second is the PSU banking pack, where we've seen the results have been good, especially for the big names like SBI. And we feel the risk reward is very favorable in this space. So these are two areas, two sectors where we are keeping an eye on. If you're playing the IT basket, the best thing to do is do a diversified approach to large cap IT names and two from the mid cap. And if you're doing the PSU banking pack, the best thing to do is either go for the PSU Bank Bs, which is the ETF, or simply stick to the sector leader, which is State Bank of India.
Just a follow-up then. You have a few frontline companies that people have had a lot of patience with, the likes of Asian Paints in particular, and we've had a lot of people ask us this, Rahul, as well. So it's an important question to ask. If somebody has been holding for a very long time, and we're seeing consistent pressure in a stock, when do you bite the bullet and say, I'm likely going to find better returns elsewhere?
Yeah, so, the kind of underperformance that some of these stocks have had, even in a bull market, it was something which was, questionable. And at the same time, now that, we are actually realizing the numbers on the quarterly front, things are not looking that great. So the best thing to do is, limit your losses, probably look at the relatively, better names that we've just discussed. And having said that, this is that kind of a market, at least over the next 1 quarter or so, where the markets will be pretty ruthless when it comes to earnings disappointment. So the best thing to do is, shift sectors. Wherever there is disappointment, the best thing to do is get out of them. And, the sooner you bite the bullet, the better it is.
Thanks so much, Rahul, for taking the time for speaking to us this afternoon. We have to switch focus to earnings then, and Hindalco is a company we've been tracking on the earnings front. The earnings better than expected, certainly. Here's what the management had to say about the quarter gone by and the outlook going forward.
So I think that it would be fair to say that the India business is going to have a good second half. The Novelis business is going to be facing a little bit of headwinds in the second half, which we outlined during the Novelis call, which is basically the scrap spreads that we are seeing tightening. So I think that the story, that's why it comes out that because of our integrated model of having upstream and downstream, Hindalco consolidated will have a good second half, if I can round off with that.
Okay, I'll just probe that a little. Now, most companies that I speak to, Mr. Pai, whether it's consumer, whether it's capex oriented, what have you, are talking about how the first half has not necessarily been very good because the government spend was not up to the mark. They haven't gone out and spent as per the run rate that people had thought of. And then monsoons, elections, etc. are the reasons coupled with that. And there is hope that the government spend pickup will help both consumer and industrial sectors. Why do you foresee the India story to look so good? I mean, will it happen on the back of the government spend coming back, or is it independent of that?
So the government spend in infrastructure is always one part of our demand story. But I think for us, let's look at which sectors are doing well for us. So the electrical sector is doing very well. So conductor cables, grids. So there is certainly a large part of government investment there. But what happens there is that once you start to execute, then it continues for a period of time. So we see now that in the going quarters, this electrification conductor cable sector is going to do very well. Packaging is a sector that's doing very well for us. And that's because the government has put anti-dumping on Chinese foil, and the India consumption story is still going on. So the packaging sector has done well in the first half, will continue to do well in the second half. Building and construction was sort of doing okay, which we are expecting in the second half will pick up more. The only sector that has not done so is the auto. But as you know, most people are predicting that the auto sector will also come back. So by and large, we are a reflection of what you see in the Indian economy. There may be some weak spots, but there are a lot of bright spots. So I think as a combination, H2 will be equally for us better than what H1 was.
And right now you're only talking about the top line, right? Or are you including the EBITDA numbers there? Because there you've really done extremely well. The EBITDA numbers have looked very solid, and most notes talk about how they would love to know what the future trajectory of both the copper EBITDA, but even otherwise the consol EBITDA would be.
So I think that, now let's get to the profitability. So that comes to our cost structure. So the cost structure for us, has been very strong and will continue to be very strong. I think the input costs are going to remain largely under control. The LME will be between 2,500, which is fairly good for us. So I think that the profitability on the aluminum side will continue to be strong. Our downstream business is starting to kick back in. On the copper side, this quarter was exceptionally good. We had good third-party sales, good precious metal sales, and we had some positives coming from derivative accounting. So I think on the copper side, the second half will be good, but I tell you, our guidance is more towards the 600, 650 crores per quarter guidance on copper. So India business should have a good H2.
Are you being conservative here? I mean, it's prudent to be conservative, but I'm just asking, is this more conservatism? Because, I mean, just look at the beat that you've done on copper any which ways. So are you being consciously conservative, Mr. Pai here?
No, not really on copper, because I could be conservative on the aluminium side because it's fairly difficult to predict how the LME will perform. But on the copper side, I think I'm being quite realistic when I say that the coming quarters will be in that 600 to 650 crores EBITDA range.
So this 830 odd number you're saying is I mean, for lack of a better word, an aberration, if you will, and you revert back to 650 odd number for quarter 3 and quarter 4.
Use the word aberration. What happens in the
like I said, lack of a better word, sorry.
Some quarters the gold sale was much higher because the government had reduced the duty, so we really sold a lot more gold than we planned. Sulfuric acid prices were much higher. So I think that, sometimes you do have these pluses and minuses going on, which I'm not so sure could happen on a consistent basis going forward, which is why I say that 600 to 650 is a better number for copper.
Okay. The consol net debt to EBITDA number also has consistently trended as per what you like, or maybe better than that. What's the trajectory there, Mr. Pai?
So there, I think that, our net debt to EBITDA on the India side is negative in the sense that we have more cash than debt. But you may have also noticed that we have now announced a fairly aggressive capex plan going forward. So we're going to do a brownfield aluminium smelter, a brownfield copper smelter. So our capex is going to be more like 4 to 5 billion over the next 3 years. So from a 6,000-7,000 crore per year capex, we are now going to go more towards a 10,000 crore per year capex. So that will mean that we will now start to maybe put back some little bit of debt on the balance sheet, because today we are at zero net debt.
Got it. And why this whole upstream project expansion of this nature? Because I mean, and again, most analysts that I spoke to as well said that they would love to know the rationale behind and the attractiveness of the return ratios on this capex that you're embarking upon.
So really the Hindalco strategy in the last 5 years has been investing in downstream. So we did a rolling plant, we did extrusions, we did value-added products. So we spent a good amount of capex in the downstream. So now we are going to allow the downstream projects to commercialize and reap the benefit. The next phase is going to be upstream. And why upstream? Couple of things. Indian demand for aluminium and copper is extremely strong and growing at 7 to 9% on a compound annual growth rate. Second thing is, for us, most of these projects are brownfield, which means the risk of execution is fairly low. Number 3, our balance sheet is extremely strong, so we can afford to do it without adding too much debt. So I think that this is the reason why we are now embarking on this second phase of upstream growth.
Got it. One word on the global picture as well, because one hiccup was that Novelis decided, okay, let's not go ahead and give a forward guidance. the Chinese stimulus was for a lot of people underwhelming because it probably just came at par and didn't quite surprise, may not really incur too much of investments. How do the global factors, you reckon, impact the Hindalco outlook?
So I think when you look at the Novelis, let's go sector by sector like we normally do. 60% of their demand comes from can body stock, which grew 11% year on year. So the packaging sector, driven by sustainability, circular economy, can consumption, the can sector is doing very strong. Aerospace, which is another sector for Novelis, is extremely strong. We are completely sold out there. Building and construction, as the interest rate goes down, has started to stabilize, and the market next year onwards should start to pick up. Auto is the one sector where we saw some headwinds. Now, but let's go geographically. The US market, which is the largest for Novelis, has actually been quite strong in auto. The European market was a little bit weak because on one hand, we had the CA plant flooding, so we could not ship enough auto sheet. But it's also true that going forward, we are seeing weakness in the European auto demand. So it's the only weak sector for Novelis has been European auto. Otherwise, most of their end markets are doing quite well.
Got it. China, sir, just let's wrap that point. The Chinese stimulus or the lack of the attractiveness of it and the impact thereof?
I think people are speculating on that, but let me tell you, supply and demand wise, China is still short of aluminium. Their demand seems to be quite healthy. So any positives from the stimulus will just add more to the Chinese demand, which I think will be overall good for LME prices. So I do think that even if people sometimes expect too much, I think the government is doing whatever it can in China to get the economy going again.
Got it. A final question, Mr. Pai. How do you anticipate the next 18 months to be like? I mean, you looking at very strong growth, India business, and thereby console for FY25. What happens beyond that until all of your expansions come on stream, sir? I mean, is there still linear growth out there, or is it difficult to call that?
No, you see, in commodity markets, nothing is ever linear.
True.
It will have its ups and downs. What you have to look at is, can the company and its balance sheet take the capacity to spend on the projects through a downturn as well? And I still go back and say that the strength of the balance sheet in Hindalco means that even if there is a downturn in the market, LME prices go down, we are well there to still continue to spend through that period of time. So I think that what we are prepared for is the worst case. And if things are better, then that's so much so good.
All right. Well, isn't that the best philosophy to have in life? Hindalco, at very close to the low point of the day. It did start off the session quite positively. It's trading just about flat. We've recovered somewhat from the low point of the day for the benchmark Nifty 50. I was just looking at the screen, and in fact, you have the Nifty 50 that's trading about 0.2 percentage points off the low point of the day. It's still down about 0.7% or so. And you have the mid cap and the small cap index that's also trading with cuts of about 0.4% and about 0.5% or thereabouts. So all told, it is looking like quite a bit of a crack that you're seeing for the benchmarks. Of course, a large part of this is being contributed to by the Nifty Bank, where you're seeing HDFC Bank in particular losing quite a considerable amount of value. It's down at about 2.5% lower. In fact, if we can pull up HDFC Bank, yeah, there you go. Let's also pull up the constituents of the Nifty Bank just to give you a sense of what is contributing to this drop. And a drop of over 1,000 points from the high point of the day. In fact, most of the banking sector is in the red. State Bank of India losing 2% or so, Bank of Baroda, PNB, Kotak, as well as Bandhan, all losing over 1% or so. I don't see ICICI in that list, but that is essentially the picture. But of course, there's lots more to talk about, and you will get more perspective in the show that's up next. So do stay tuned. This is NDTV Profit.
whole day passes like a blur. The news just whizzes past. And you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty.
Welcome, you're watching Earnings Edge with NDTV Profit. I'm Mahima Vacharjani, with me is Varsha. Well, before we move on to the managements that we have on the show for today, on the back of Q2 earnings, let's take a quick check on how the markets are doing, where the markets have taken a sharp turn. Let's pull up the Nifty 50 as well as the Sensex. The Nifty 50 is down around 0.8% and trading almost at its day's lows as we speak. Let's also pull up Sensex and see. Sensex has had a wide range of trade today, trading within a range of 400 odd points. It's also down around 0.8%. So sharp turns for both Nifty and Sensex. Let's see how the broader markets are doing and pull up the Nifty mid cap 150 and small cap 250. Broader markets have also taken a sharp turn, and it's a 360-degree turn. While we were seeing gains of around 0.5% in the mid cap 150, it's down around 0.5%. Same as small cap 250, which was down up around 0.6% in the early trade today, or even in the mid trade today, it's down around 0.6%. Let's pull up the contributors on the Nifty and see what is kind of weighing down on Nifty. It's the HDFC Bank. We'd seen that the HDFC Bank was putting pressure on Nifty by around 50 odd points, but that has increased to 76 odd points. SBI, NTPC, Britannia are some of the other counters that are putting pressure on the Nifty. Some counters, however, in green, hardly in green, include Infosys, Trent, RIL and Bharti Airtel. Let's also pull up the advanced decline ratio and see how the breadth of the market looks like. It was nearly even in the start of the day, but now it's favoring the declines, and the declines are 3 times more than that of advances. It's 1500 declines versus that of 500 odd advances. Let's pull up the sectors and see how sectors are faring out in trade, and let's see what has happened there. All sectors except for Nifty Realty and Nifty IT have turned red. Nifty Realty still seeing about 0.8% gains. Nifty IT seeing about 0.4% gains, but a lot of sectors there seeing pressure. Nifty Auto with the most pressure down around 1.5%. Nifty PSU banks down around 1.6%. All of these counters seeing pressure. Let's pull up the Nifty Auto and see the counters that are buzzing in trade. Let's also pull up the Nifty PSU bank after that. Nifty Auto, all counters except for TVS Motors, which is almost trading flat in the red. There's Bosch, there's Bharat Forge, Bajaj Auto, Tata Motors, Samvardhana, all trading beyond 2%. As we see, let's also pull up the PSU bank space and see all counters in red. Bank of India down 2% after its Q2 results, SBI down 2%, Canara Bank, BOB, PNB Bank are some of the counters also trading in red, down by about 1% and thereabouts. Let's also pull up the overall stocks that are seeing some gains in the trade, however bucking the trend. HMO Agro is one of them, where revenue was a beat by around 22%. Margins have significantly improved, and net profit there was a jump of almost